time frame, which represents a more moderate time frame. This can drive our overall perspective. Long-term, 1D, 5D, 1WK strong buy indications are observed in 1D and 1WK charts suggesting a bullish trend, though the divergence in the 5D time frame, mixed signals but overall buy, introduces caution towards a fully bullish outlook. Derivative aggregated signals. The aggregated derivative signals from different time frames mostly point towards a buy, especially in the longer time frames, 1D, 5D, 1WK, which have solid buy signals, indicating that there is potential for ongoing uptrend despite intermittent volatility. Market sentiment and final recommendation. Given the mostly positive outlook in both medium and long-term time frames and substantial buy derivative forecasts, a buy recommendation seems prudent. However, the observed volatility in short-term frames further validates the need to take a cautious approach in entering the trade. Entry, take profit, and stop-loss strategy. Entry point: look to enter the trade when there's a slight pullback in the price to account for short-term volatility, ideally near the current EMA 20 of the 1H chart around $82,859. Take profit: given the bullish signals, setting a take profit at an approximately 3 to 5% increase from the entry price aligns with the optimistic long-term indicators. This would roughly translate to aiming for the price range around $86,401 to $88,002. Stop loss: a stop loss should be implemented to control the risk, set at about 1.5% below the entry price, which correlates to levels near $81,596. This tight stop loss respects the volatile nature of the market and the mixed short-term signals. Conclusion. Action: buy. Entry point: approximately $82,859. Take profit: between $86,401 and $88,002. Stop loss: around $81,596. This trade maintains more than a 1:2 risk-reward ratio, leaning towards potential high returns with controlled risk, observing the mixed but majority positive predictive analytics. This strategy should be regularly reassessed based on real-time market developments and exit the position if the market sentiment changes significantly. Analyzing the comprehensive set of data you've provided, including EMA, MACD, RSI readings across different time frames, and derivative forecasts, we construct a strategy for entering and exiting the cryptocurrency market. Observations. 1. EMA, exponential moving averages. Short term, 1M, 5M. There is a bullish trend as EMAs show prices are moving upwards. However, derivative indicators show conflicted signals, especially in a 5-minute timeline, suggesting a potential retraction or volatility. Midterm, 15M, 1H, 90M. The 1 hour is significantly bullish, which aligns with buying signals from derivative forecasts. The 15-minute and 90-minute have mixed signals which suggest caution. Long term, 1D, 5D, 1WK. Strong bullish signs confirmed by all EMAs, MACD, and RSI, favorable relative to the longer-term perspective of market movement. 2. MACD, moving average convergence divergence. Short term, confirms the short-term momentum seen in EMAs, predominantly bullish except for discrepancies in some quick retraction signs in lower time frames like the 5-minute. Long term, the MACD is a bit mixed. While the daily duration shows a buy signal with MACD rising above the signal line, the 5-day and weekly views are robustly bullish. 3. RSI, Relative Strength Index. Values mostly range from moderate to slightly overbought, 51.71 on 1 minute to 75.37 on 5 minutes. This indicates a strong but possibly overextended market in very short terms. 4. Derivative forecasts. Short-term analyses show more selling signals which could be pointing to immediate retractions against the bullish undercurrent. Longer-term derivatives consistently recommend a buy, supporting the bull trend viewed in EMAs and MACD analysis. Trading recommendation. Considering the aggregated data and aiming for a risk-reward ratio of 1:2. Final signal, buy. Entry point, given the strength of long-term indicators, entering shortly after a minor retraction might be prudent. Take profit percentage, 10%. This gives room to capitalize on the bullish momentum without holding on so long that a retraction negates profits. Stop loss percentage, 5%. This limit balances the retraction typically indicated in the shorter-term sell signals while allowing for normal fluctuation. Rationale. This recommendation leverages the overall strong bullish signals we can infer from the daily and longer time frames, balancing them against the inherent short-term volatility indicated by some conflicting short-term data points. This should manage risk effectively while aiming for a substantial return. Upon analyzing the comprehensive trading data provided, it's evident that the shorter time frames, 1M, 5M, and 15M, demonstrate a strong short-term bullish indication. Longer time frames, 1H, 1D, and 1WK, substantially back up the bullish sentiment with significant buy indications and consistent patterns indicating an overall market recovery or an upward trend. However, the 5D indication diverges by suggesting a sell, likely due to a recent pullback or volatility at that specific range. Given the mixed signals from various time frames, the overarching strategy should focus on leveraging the clarity from the most promising time frames, particularly the daily, 1D, and weekly, 1WK, data, which often provide a more stabilized outlook in the highly volatile crypto markets. Final recommendation, hold. An immediate buy recommendation is tempting, however, considering the severity of the bearish signal at 5D and multiple bullish indicators aligning across various other time frames, the conservative approach leans towards a hold stance. This ensures avoiding potential pitfalls stemming from the apparent retracement or the consolidation phase in the 5-day time frame. A future entry position can be considered once this time frame aligns with the general bullish market sentiment. Entry strategy. Should you consider entering a trade in the near future, it would be wise to wait for more alignment or greater clarity on the 5D time frame. A possible scenario to turn this hold into a buy. Monitor for any positive shift on the 5-day MACD or a rise in RSI, conforming to broader bullish signals. Exit strategy. When the signals turn resolutely bullish including the 5D time frame, consider take profit at 10 to 15%, depending on market momentum and resilience of the upturn. Stop loss at 5%, aim to implement a stop loss strategy to protect against any unforeseen downturns, maintaining a 1:2 risk-reward ratio. Monitoring for future position adjustments. Regularly update on the 5D data. Significant improvement in MACD and RSI can be a strong indicator to switch from hold to buy. Watch related news and global economic indicators. Cryptocurrency markets are sensitive to regulatory and macroeconomic factors. Diversify entry points. If deciding to enter, consider staggering your entry to manage risks effectively. This careful, data-driven approach will help in managing investments wisely while awaiting more alignment across all advised time frames. Follow updates diligently and be ready to pivot your strategy based on fresh, consistent signals. Analyzing the comprehensive data provided, I will form a strategic trading recommendation built upon both the short-term and long-term indicators and derivative trends. Here's the breakdown. Key indicator summary. Short-term time frames, 1M, 5M, 15M show a generally bullish position in indicators like EMA, MACD, and patterns. The RSI indicates a slightly overbought condition, particularly in the 5-minute frame. Medium to long-term time frames, 1H, 1D, 5D, 1WK. These timelines show smooth bullish momentum confirmed by EMA crossovers, bullish patterns, and dominance in positive MACD zones. RSI varies from slightly typical values to an overbought condition, particularly in the 1D and 1WK, indicating strong buying pressure. Specific indicator insights. 1M frame. High concurrence in buys across derivatives and a sturdy bullish sentiment in indicators suggest a good entry point. 5M frame, similar to the 1M data but watch the high RSI indicating potential temporary pullbacks. 15M frame, this frame differs with a mixed sell signal from derivatives contradicting the bullish sentiment, it appears more volatile and hence not ideal for our entry. 90M and 1H time frames, they show significant bullish momentum but mixed signals in 90M derivatives. This suggests that the bullish moment might take longer to establish firmly. 5D and 1WK frames affirm the long-term upside potential but show some variability in the RSI and MACD, suggesting perhaps a cooling off or consolidation phase might occur soon. Derivative action points. The derivative trends on longer time frames, particularly 1 day and 1 week, strongly suggest that the trend is uptrending robustly over a long-term horizon despite any short-term volatility. Final recommendation. Based on derivative insights, long-term price stability, and balanced indicator cues, a buy position is recommended. Entry strategy. Entry point, current market price. Time frame for holding, medium to long term based on strong positive signals in daily and weekly time frames. Risk management. Stop loss, place a stop loss at 3% below the current market price. It provides enough buffer for regular volatility while protecting from a significant downturn. Take profit, set a take profit at 6% above the entry price. This fits the 1:2 risk to reward ratio and aligns with the bullish momentum seen across most time frames. This trading approach leverages both strong bullish signals and derivative insights to recommend a position. The suggested risk to reward setup, 1:2, ensures that potential profits are twice the potential risk, adhering to prudent trading risk management practices. Based on the comprehensive indicator and derivative data across multiple time frames, here's an analysis with a final recommendation for cryptocurrency trading. Key observations. Short term, 1M, 5M, 15M, 1H strong bullish indicators are noted across the 1-minute and 5-minute time frames, with EMA, exponential moving average, configurations showing a classic bullish pattern of lower EMAs above higher EMAs, and positive readings in both MACD, moving average convergence divergence, and RSI, relative strength index. The 15-minute time frame is an outlier with a sell signal, suggesting short-term volatility. Medium term, 90M, 1D. The 1-hour time frame continues the bullish trend seen in the shorter time frames, while the daily chart shows a significant positive divergence in MACD, though RSI is relatively neutral. This points towards a continued upward trend in the medium term. Long term, 5D, 1WK. The weekly chart displays a bullish outlook with strong buy signals across all derivatives, but the 5-day time frame provides contradicting signals with a sell recommendation. Aggregated signal analysis. The prevalence of buy signals in the short and medium terms, coupled with strong bullish patterns and derivatives forecasts, outweighs the negativity seen in the 5-day data. Thus, the downward pressure indicated on the 5-day might reflect a consolidation phase rather than a long-term bear trend. Final recommendation, buy. Entry point, given the strong bullish patterns primarily in shorter time frames, the entry should be made soon, taking advantage of current momentum. Take profit, set take profit at plus 20%. This is ambitious but supported by strong bullish indicators on daily and weekly time frames suggesting potential for significant price appreciation. Stop loss, set stop loss at minus 10%. This provides a risk-reward ratio of about 1:2, keeping in line with your strategy of balancing profit maximization with risk control. The stop loss is tightened due to the possible volatility and the bearish signal in the 5-day view, which implies potential downward pressure. Additional notes. Monitor closely. The 15M sell signal and 5D bearish view suggest that close monitoring is crucial for this trade. Be prepared to adjust stop loss and take profit levels based on real-time price movements and any emerging patterns. Exit strategy. In addition to the preset take profit, consider scaling out of the position if price approaches resistance levels or if there are turning points signaled by a change in MACD or RSI, particularly on the daily or weekly charts. This strategy optimizes for current bullish momentum, leveraging strong indicators while maintaining a disciplined approach to risk management. Analyzing the available data, it's evident that the cumulative sentiment across most time frames is bullish, with dominant buy signals on almost all longer time frames, 5 minutes to 1 week. Each of these time frames shows consistency in both the traditional EMA, MACD, and RSI trend indicators and their derivative forecasts. Therefore, there seems to be a general upward trajectory expected in the medium to long term. However, there are some divergences on the shortest time frames, 1M and 15M, where we see some sell indications stemming primarily from derivative forecast measures. Given the detailed data provided, these anomalies in shorter time frames may represent temporary pullbacks or volatility rather than a fundamental reversal of the overall bullish trend observed in longer time frames. Recommendation: buy. Entry point. Given the consistent bullish signals from multiple indicators on time frames from 5 minutes up to 1 week and considering recent derivative data, with 1 minute signaling sell, waiting for a minor pullback before entering might optimize the entry point. Therefore, it is advisable to enter a long position at a small retraction from the current level, ideally close to the 1 minute or 15 minute EMA 20, providing a favorable entry point. Exit point: take profit. For the take profit level, aiming for a price around the one-day EMA 10 of 84,116.80 seems reasonable. This target is ambitious yet technically justified given the prevailing bullish trend across the key time frames, representing an approximate increase from current levels. Stop loss. A conservative approach for the stop loss would be set slightly below the 1-hour EMA 50 at around 82,837.21. This would provide a safety net against any unexpected downturns, while still allowing some room for the usual volatility seen in cryptocurrency markets. Risk-reward ratio. Considering these levels. Entry near 1-hour EMA 10, 83057.01. Take profit near 1-day EMA 10, 84116.80. Stop loss near 1-hour EMA 50, 82837.21. The potential profit from the entry to take profit level is about 1059.79 points, while the risk from entry to stop loss is around 219.8 points. This results in a risk-reward ratio of approximately 1:5, 219.8 1059.79, which is favorable and exceeds the advised 1:2 ratio. Final thoughts. Such a strategy aligns with a bullish outlook substantiated by strong and consistent indicators across major time frames, complemented by calculated entries and exits to maximize potential gains while managing risks effectively. Remember, market conditions can change rapidly, and it's important to monitor the trade closely, especially given the inherent volatility in cryptocurrency markets. Analyzing the trading data provided, we can conclude the following action from a holistic perspective. The primary objective is to ensure that any recommended trade adheres to a risk-reward ratio of about 1:2 while interpreting multiple time frames and derivative forecasts to maximize the potential for profitability and manage risks efficiently. Indicator analysis. Shorter time frames, 1M, 5M. Both EMAs and MACDs show strong bullish signals. RSI values are also above 60, indicating positive momentum without entering an overbought territory. The continuation of bullish patterns suggests robust short-term momentum. Medium time frames, 15M, 90M, 1H. Although the 15M time frame displays a sell derivative, both 90M and 1H demonstrate a buy signal. This conflict indicates potential volatility in the intermediate time frames. However, considering 1H time frame, EMAs and MACD are strongly bullish, and hence, this should weigh heavier in decision-making. Longer time frames, 1D, 5D, 1WK. The daily and weekly time frames show strong buy signals on the EMAs, MACDs, and RSI being satisfactory except for the 5D time frame, which is nearing oversold conditions, suggesting a temporary pullback or volatility may occur. Nonetheless, overall indicators like EMA/MACD configurations lean bullish across these broader spans. Derivative predictions. Consistency. Buy signals dominate across the majority of the time spans reviewed, especially in critical time frames like 1D and 1WK, which suggests strong longer-term bullish momentum. Decision. Given the bullish patterns and buy signals in the majority of the analyzed time frames, a buy entry is advisable. However, recognizing any potential short-term retracement or pullback, especially noted in the 15M and 90M time frames, is essential. Entry, stop loss, and take profit strategy. Entry, initiate a buy following any minor pullback to capitalize on prevailing bullish sentiment. Stop loss, set at -2% from the entry point to limit downside risk. Take profit, set at +4% from the entry point to ensure a 1:2 risk-reward ratio. Conclusion. Final recommendation, buy. Risk management. Closely monitor medium time frame indicators and derivatives to exit or adjust stop loss/take profit if indicators suggest a shift in market sentiment or momentum. Market watch. Keep an eye on the longer-term indicators that suggest a potential sell signal, like the 5D time frame, for future shifts or adjustments in strategy. Based on the provided trading data and considering the indicators across different time frames, we can formulate a trading strategy that balances entry and exit points effectively while managing risk. Analysis breakdown. Indicator summary. Short term, 1M, 5M, 15M, 90M, 1H. EMA trends, shows an increasing trend, with shorter EMAs, EMA 10, consistently above longer EMAs, EMA 20, EMA 50, in all the shorter time frames. MACD, movement towards bullishness is more apparent in shorter time frames except for sporadic bearish signals in 90M and 15M. RSI, hovering around 60 in shorter time frames suggests moderate bullish momentum. Long term, 1D, 5D, 1WK. EMA trends. Long-term EMAs show volatility with considerable variations between EMA 10 and EMA 50, indicating uncertainty but overall bullish signs. MACD, generally bearish on a daily scale which reverses as the time frame extends, 1WK becomes bullish. RSI, both daily and weekly frames indicate an overall neutral to slightly bullish stance with an RSI under 50 transitioning closer to bullish territory in weekly frames. Derivative and aggregate signals. The aggregated derivatives forecast consistently signals a buy in longer-term frames, 1D, 5D, 1WK, and mixed responses in shorter frames, from strong buys to sells. The preliminary aggregated final signal pointing to hold suggests an overall tendency toward waiting for clearer bullish signs. Final recommendations. Final signal, buy. While the long-term indicators and derivatives suggest bullish trends strengthening, short-term fluctuations are expected due to micro-volatility. Hence, entering based on the convergence of mid-term and long-term bullish indicators could provide a safer entry point. Entry point. Monitor the 1-hour and daily frame MACD and RSI. A potential entry can be considered if MACD lines stabilize above signal lines and RSI remains above 60 for consistent periods on the 1-hour chart. Take profit and stop loss. Take profit, aim for a take profit level at about 6 to 10% above the entry price based on the current trends where EMA 10 on the daily chart could serve as a resistance turning point. Stop loss, given the volatility, a stop loss at approximately 3 to 5% below the entry price will limit potential losses effectively, aligning with a strategic 1:2 risk to reward ratio. Considerations. Adapt the strategy if significant deviations occur in MACD or sudden RSI peaks, indicating overbought conditions. Stay updated with market news and macroeconomic factors that could influence market trends dramatically, especially in the crypto world where external events can have profound immediate impacts. This trading recommendation balances the observed bullish potential with prudent measures to limit risks, fitting for a crypto trading scenario outlined by current indicators and market trends. Analyzing the given data closely suggests an opportunity that is primed for taking action, albeit with careful consideration of risk factors and our target 1:2 risk-reward ratio. Detailed analysis. 1. Short-term indicators, 1M, 5M, 15M, 1H. In the shortest time frame, 1M, there's a strong sell signal, yet this begins to modulate as you extend the time frame. The 5M frames begin to show a turnaround with a buy signal, and this trend towards buying strengthens consistently as the time frame extends up to 1 hour. 2. Medium-term indicators, 90M, 1D. At the 90M mark, the direction isn't robust, hinting towards a sell. However, the daily, 1D, data points towards strong buy indicators, which typically holds more weight due to a broader data encompassment. 3. Long-term indicators, 5D, 1WK. Strong buy signals are evident in the longest time frames, 5D and 1WK, emphasizing bullish patterns coupled with golden cross occurrences in the chart patterns, which typically signal long-term buying trends. Final recommendation, buy. Risk management. Set a stop loss at approximately -4% below your entry point. This accounts for potential volatility and mildly absorbs the influence of shorter-term sell signals that may cause fluctuating DIPs. Aim for a take profit at around plus 8% from your entry point. This harnesses the potential upside suggested by longer durations without being too aggressive, effectively achieving our 1:2 risk to reward target. Entry point. Await a temporary pullback to maximize your entry point, ideally when the price slightly retraces, influenced perhaps by the short-term sell signals. This approach aims to buy in at a slightly lower price, optimizing the profit margin while also aligning with longer-term bullish trends. Justification and additional thoughts. This strategy leverages the more compelling and robust signals from the longer-term forecasts, which often hold more predictive weight. By considering the stop-loss and take-profit levels, we're accounting for volatility and ensuring that risk management is prioritized. The recommendation remains cautiously optimistic, aligning with the overall bullish indicators but also hedging against short-term unpredictability. This approach aligns with an overall strategic vantage point utilizing an in-depth interpretation of varied timeline data that balances potential reward with known risks. Always ensure to monitor market changes dynamically, as cryptocurrency markets are particularly susceptible to rapid shifts. To provide a final recommendation on the cryptocurrency trade, we need to analyze both indicator data and derivative signals across different time frames, considering the aggregated signals and focusing on maintaining a 1:2 risk-reward ratio. Indicator analysis. Shorter time frames, 1M, 5M, 15M. Bullish patterns, despite the selling derivative signals on the shortest time frames, 1M, 5M, 15M, the patterns, double bottom, golden cross, and exponential moving averages, EMA, are indicating bullish behavior shortly. RSI levels show slight overbought conditions in these frames but are still healthy. Longer time frames, 90M, 1H, 1D, 5D, 1WK. Continued bullish sentiment, long time frames show more robust bullish signals. All have bullish chart patterns and rising EMAs. RSI levels are healthier here, except for the 90M and 1WK, hinting at potential overpurchase or early signs of a trend reversal in the longer term. The derivatives forecasts are strongly positive from daily and beyond, stabilizing the outlook. Derivatives and aggregated signals. Short term, 1M to 90M mixed with key bearish drives in the shortest terms moving towards bullish in slightly longer frames. Medium to long term, 1H to 1WK strongly bullish derivative signals with robust buys. This suggests that while the immediate short term could be volatile or bearish, the medium to long term view is optimistic. Recommendation. Based on the analyzed data, the ideal approach would be to buy based on the sustained bullish indicators in longer time frames combined with positive derivative signals. Entry point, slightly above the current EMA10 on a 5-minute chart at around 83,500, to ensure the trend maintains its direction upwards. Stop loss, given that shorter-term derivatives indicate some potential drawback, set a tight stop loss at a 1% decline, rounding to approximately 82,700. Take profit, set a take profit at 2% above the entry point, which would be approximately 85,230. This aligns with the expectation of bullish momentum derived from both EMAs and MACD forecasts on longer time frames. Risk management. Maintain a keen observation on RSI and MACD for signs of divergence which could indicate a weakening momentum. Adjust and tighten the stop loss if the price action nears the entry point but fails to show strong upward momentum quickly. Regularly observe the change in derivatives and market sentiment, particularly any geopolitical or regulatory news that significantly influences cryptocurrency markets. By following these guidelines, the trade conforms to a risk-reward setup of 1:2, focusing on an opportunity identified by longer-term bullish trends while cautiously guarding against short-term fluctuations. Analyzing the comprehensive data provided across various time frames and combining it with the aggregate derivative signals gives us a deeper context into the trading landscape for your decision-making. Analysis summary. 1 indicator overview by time frame. Short term, 1M, 5M, 15M. The exponential moving averages, EMAs, and MACD indicate a bullish trend in these shorter time frames, particularly at 5M, where both the EMAs are converging positively and the MACD is bullish above its signal line. However, it's also key to note the derivative data and some sell signals at both 1M and 15M periods, suggesting potential volatility or some corrective movements. Intermediate term, 90M, 1H. The 90M period shows conflict between the exponential moving averages, EMA, alignments and MACD trend but is balanced by 1H indicators showing a very strong buying momentum with RSI at a neutral level, allowing for potential growth. Long term, 1D, 5D, 1WK. Long-term EMAs are showing less immediate growth opportunity due to the negative alignment in particular on the 5D. However, 1D and 1WK periods still present a generally bullish pattern, supported by MACD and RSI levels. 2 derivative forecasts. Sell signals, predominate in extremely short term, 1M and partially in 90M, periods. Buy signals, strong buy signals are consistent from intermediate to longer time scopes, 5M, 1H, 1D, 5D, and 1WK, which suggests a stronger influence should be lent to these periods in making a decision on entry. 3 risk management parameters. Risk-reward ratio, suggested at 1:2. Initial analysis, given the divergence in signals, particularly short versus long-term, caution is suggested. Recommendation. Final recommendation, buy. Given the multiple strong buy signals across several key time frames, particularly in the intermediate and long-term forecasts, entering a buy position appears to be justified. Entry point, based on a reinforced bullish trend across longer time periods. Trade setup. Take profit, TP set at around plus 5% from entry. Given the daily to weekly strong bullish signals, This allows for capturing potential upside while mitigating overexposure to short-term fluctuations. Stop loss, SL set at -2.5% from entry. This provides a safety net against any unforeseen reversals, respecting our 1:2 risk-to-reward ratio. Caution: be mindful of the short-term volatility indicated by the 1M and 15M time frames. Continually monitor these time frames closely around your trade execution to potentially adjust the stop-loss or take-profit levels in response to changes in the market dynamics or emerging chart patterns and indicators. This trade suggestion optimizes for both potential profit capture and risk mitigation, backed by a comprehensive analysis of the available multifaceted trading data. Analyzing the provided trading data, the decision requires a careful consideration of various short-term and long-term indicators and derivatives. The data reveals key trends across multiple time frames with bullish patterns indicating potential buy signals but also showcases conflicting derivatives that suggest caution, especially in the shorter time frames. Breakdown of key data. 1. EMA, Exponential Moving Average, Alignment. The EMA alignment across almost all time frames is bullish, with shorter EMAs, EMA 10, above longer EMAs, EMA 20, EMA 50. This generally suggests upward momentum in the market. 2. MACD, Moving Average Convergence Divergence. MACD is above the signal line in most time frames, which is generally a buy signal. However, there are major divergences in different time frames, e.g., bullish on shorter frames but bearish on longer time frames like 1D and 5D, indicating potential choppiness or upcoming volatility. 3. RSI, Relative Strength Index values across the board show some divergence, with short-term time frames being relatively overbought, 1M, 74.22, 5M, 64.81, while the longer term shows neutral to undervalued scenarios, 5D, 28.30, 1WK, 40.03. Generally, RSI above 70 suggests overbought conditions, but investment decisions should consider other factors too. 4. Patterns and charts. Persistent bullish patterns and chart structures like double bottom and golden cross indicate stronger buying sentiment in the market. 5. Derivative signals. Short-term derivatives are mixed, with 1M recommending sell and 90M leaning towards sell. However, longer-term derivatives from 15M to 1WK uniformly suggest buys, indicating better performance or recovery expectation over a longer duration. Final recommendation: buy. Given the overall predominance of bullish signals, especially in longer time frames alongside robust derivative buy signals, a strategic entry is advised. Entry, take profit, and stop loss strategy. Entry point: based upon current momentum and patterns, aiming for a slight retracement might provide a better entry. Gauge the 5M to 15M time frames for any small pullbacks as potential entries. Take profit: set the take profit at around 3 to 5% profit. Given the EMA10 on the daily at 84,138.45 indicates upward potential close to this level. Stop loss: to manage risk effectively, set a stop loss at around 1.5 to 2% from the entry point. Monitoring RSI and MACD for any trend reversals on 1H to 5D time frames could indicate an exit strategy. Risk-reward: the suggested risk-reward ratio of approximately 1:2 fits within the set parameters, assuming a disciplined follow-through on take profit and stop loss orders. Monitor MACD and RSI closely in the shorter time frames for any risk of volatility or change in market sentiment. Conclusion: the overarching bullish signals aligned with both technical indicators and derivatives justify a buy recommendation under the assumptions made. This trade assumes adherence to a strict strategy for exiting, managing potential losses, and locking in profits in a volatile market scenario. Keep abreast of market news and changes in cryptocurrency fundamentals that might affect this analysis. Analyzing the consolidated indicator and derivative data across multiple time frames for cryptocurrency trading provides a nuanced picture of the market's condition. Here's how the data translates into a strategized trading decision. Analysis by time frame. 1 short term, 1M, 5M, 15M, 1H. EMA, MACD, and RSI, all these indicators display a bullish trend with rising EMAs and MACDs above their signal lines, and RSIs in the higher range, but below overbought territory, except 1M RSI. This implies a strong upward momentum in the near term. Forecast derivative: these closely aligned buy signals strengthen the assertion of bullishness in the short term. 2 medium term, 90M, 1D. 90M, mixed signals with buys and sells, but the net derivative suggests a sell. 1D, strong buy signals across EMAs, though MACDs is negative but improving as the signal line is more negative. 3 long term, 5D, 1WK. EMA, MACD, and RSI, continued bullishness in a 1-week time frame with very bullish MACD divergence. However, the 5-day signals are bearish with a high negative MACD difference overshadowed by a closer positive signal line, and a very low RSI. Forecast derivative: despite a bearish MACD in the 5D chart, the derivative indications are strongly bullish. Aggregated signal interpretation: given most time frames suggest bullishness but with a crucial bearish undertone in 5 days, the strategy should be cautiously optimistic. The final signal is a hold due to the following. Short to medium term, strong immediate upward potential. Long-term mixed signals, need adjustment for potential drawdowns or corrections after a spike. Trading plan. 1 entry strategy. Entry point: consider entering after slight retracements since RSI at 1M is above 79, indicating overbought scenarios which often see short price pullbacks. A good entry would be a revisit toward the nearest EMA 10/EMA 20 on the 5M or 15M chart. 2 exit strategy: take profit and stop loss. Take profit, set at +6%. This is derived from current price movements and the bullish patterns indicating possible continued upswings. Close out in portions to potentially capitalize further while securing gains. Stop loss, set at -3%. In line with the desired risk-reward ratio of 1:2, and considering the current volatility as absorbed from EMA divergences and MACD signals. 3 monitoring and reassessment. Re-evaluation should be frequent, especially watching how the price interacts with EMA levels on the 1-hour and 90-minute charts. The 5-day indicators should be closely monitored for shifts that might suggest a longer-term correction. Conclusion. Preliminary final signal. Hold seems appropriate with a leaning toward entering a strategically timed long position following the mentioned entry strategy concerning pullbacks, and securing profits while managing downside risks closely in alignment with the outlined stop-loss strategy. Analyzing the trading data provided for cryptocurrencies, we see a mixture of signals across different time frames that provide insight into both short-term and long-term trends. Here are the salient points from the indicator and derivative data. Indicator summary. Short-term, 1M, 5M, 15M. These time frames all show a strong bullish trend as evidenced by consistently higher EMA values, EMA 10, EMA 20, EMA 50, and positive patterns. Moreover, the RSI values are above 70, indicating strong buying momentum, although nearing overbought conditions. Midterm, 90M, 1H mixed signals. While the EMAs are still generally aligned upward, the derivatives for the 90M indicate a sell, potentially signaling a shorter pullback or consolidation phase. Long-term, 1D, 5D, 1WK strong buy signals are evident in the daily, 5-day, and weekly charts, each showing an uptrend in EMAs alongside substantial bullish MACD divergences, despite some being currently under the signal in the shorter time frame. Derivative input. Most positive signals, 1D, 5D, 1WK all show consistent buy signals. This suggests that despite potential short-term volatility, the long-term outlook remains robustly bullish. Consolidated trading strategy. Entry point. Strong buy signals in longer time frames. Given the current market conditions, any short-term pullback represented by the 90M sell signal should be viewed as a potential entry point to capitalize on the overarching bullish trend. Exit points, take profit and stop loss. Take profit, set this at approximately plus 20% from the entry point. This aligns with the strong bullish signals and gives room for the price to appreciate per the longer-term indications. Stop loss, set this at around minus 10% from the entry point. This level should protect against any unforeseen reversals in market sentiment or volatility spikes, while maintaining a prudent risk/reward ratio of 1:2. Final recommendation, buy. Entry reasoning. The consolidation and mild short-term pullback indicated on the 90M chart provide a strategic buying opportunity in alignment with the strong long-term upward trend. Risk management. ensuring a 1:2 risk-reward ratio conforms with sound trading practices, considering the volatile nature of cryptocurrencies. Market outlook: this buy recommendation is predicated on continued positive momentum indicated by long-term technical indicators and derivatives, suggesting robust bullish sentiment in the market. By adhering to this strategy, you should be well positioned to capitalize on the bullish trend while effectively managing potential risks. Analyzing the provided data reveals an intricate scenario concerning the current trading signals, indicators, and derivatives forecasts across multiple time frames. Here's a structured breakdown. Indicator and derivative analysis. 1. Short-term indicators, 1M, 5M, 15M. 1-minute and 5-minute signals are predominantly bearish or divergent. 15-minute data indicates a stronger buy signal, suggesting potential short-term upward movement. 2. Mid-term indicators, 1H, 90M. 1-hour chart shows a buy signal with stable and bullish MACD differentiation and a moderate RSI. 90-minute presents a mixed signal, however, the overall sentiment leans more towards buying, given the positive MACD and RSI scenarios, except for minor variances in derivative forecasts. 3. Long-term indicators, 1D, 5D, 1WK. Daily and weekly time frames express strong buy signals with consistent bullish patterns and considerable MACD positive spreads. 5-day data is somewhat anomalous with a strong negative MACD but improved derivative signals suggesting a potential longer-term recovery or bullish movement. Consolidated view. Overall signal, aggregation shows diverse signals across different frames. The shorter frame suggests caution, sell/hold, and the longer frame indicates optimistic accumulation, buy. Considering the bullish patterns, double bottom, golden cross, across multiple time frames reinforcing a strong upward trend potential and the significant long-term buying derivatives, the momentum favors a more robust position in favor of long-term buying. Trading strategy. Final recommendation, buy. Entry point. Current levels seem to be optimal for entry, given the bullish signals in longer time frames and potential reversals indicated in shorter frames. Stop loss, SL, point. Aim for a stringent SL around 3% below the entry price considering volatile movements. This threshold safeguards against unexpected downturns and aligns with healthy risk management. Take profit, TP, point. Set a TP at approximately 6% above the entry level. This 1:2 risk/reward ratio optimizes expected returns while capitalizing on the upward trend projected by longer time frame indicators and derivatives. Execution notes. Monitor the RSI and MACD discrepancies across time frames closely, with a particular focus on any negative divergences or significant signal changes. Be prepared to adjust the SL and TP levels dynamically based on actual market behavior and fundamental news impacting the cryptocurrency markets. Given the complex nature and rapidly changing dynamics of the cryptocurrency market, keep abreast of real-time changes that could drastically affect the milieu. Thus, initiating a trade with these parameters allows for leveraging favorable trends while maintaining disciplined risk management to effectively mitigate potential losses. Upon a detailed analysis of the provided cryptocurrency trading data, which spans multiple time frames and includes a comprehensive set of technical indicators and derivatives forecasts, here are the recommendations for the optimal trade execution. Evaluation of indicators and time frames. 1. Short-term momentum, 1M, 5M, 15M, 1H. The lower time frames, 1M, 5M, 15M, 1H, mostly show bullish indicators. Exponential moving averages, EMAs, moving average convergence divergence, MACD, values, and relative strength index, RSI, readings are all indicating strong buying momentum, particularly the 1M and 1H charts, which suggest a good short-term upward trend. 2. Medium-term positioning, 90M, 1D. The 1D chart is particularly strong with all three derivative forecasts suggesting a buy. The RSI is moderate, avoiding any overheated market signals. 3. Long-term assessment, 5D, 1WK. The 5D and 1WK charts indicate strong buying signals as well, despite a higher MACD in the weekly chart suggesting possible overextension in the longer term. Such divergences in longer time frames require cautious monitoring but are currently not a concern given the positive supporting data. Trading recommendation. Final trading signal, buy. With aggregated signals indicating a buy across all time frames and derivative forecasts aligning, the entry point is confirmed as optimal. Take profit and stop loss settings. Given your requirement for a risk-reward ratio of about 1:2, adjust the take profit and stop loss percentages accordingly. Take profit, set at plus 10% above the entry price. Historically and technically, a 10% increase in highly volatile instruments like cryptocurrencies is a realistic and profitable target. Stop loss, set at minus 5% below the entry price. This limit protects against unforeseen reversals and helps maintain a controlled exposure to risk. Risk management notes. Continuously monitor the RSI and MACD especially on 1H, 1D, and longer time frames. High RSI levels can soon reach overbought territory, indicating a potential pullback or consolidation. Additionally, reassess the trade if there are any macroeconomic changes or significant shifts in market sentiment that could inversely affect cryptocurrency prices. Concluding thoughts. This trade setup offers a favorable opportunity leveraging strong bullish indicators highlighted in your data, with risk effectively managed through strategic stop-loss positioning. The suggested settings are designed to capitalize on potential gains while safeguarding against undesired losses, consistent with a disciplined trading strategy. Analyzing the given cryptocurrency trading data, here is an assessment of current market signals and corresponding trading recommendation. Indicator summary. Short term, 1M, 5M, 15M, 90M, 1H. Most of the indicators suggest a bullish trend as both EMA, exponential moving averages, and MACD, moving average convergence divergence, show the short and medium EMAs above the longer EMAs, and MACD above its signal. RSI, relative strength index, values are generally elevated, suggesting strong buying momentum, though caution is warranted as values are nearing or above the overbought threshold of 70. Long term, 1D, 5D, 1WK. The indicators are mixed. The daily chart is somewhat neutral with a slight bearish tilt on MACD, while the 5-day and 1-week indicators have higher variability, especially with RSI indicating possible overselling on a 5-day scale which could suggest a potential rebound. Derivative signals. Short-term derivatives mostly suggest buying, particularly commendable on 15 minutes, 1 hour, 90 minutes. Long-term derivatives, especially 1 day and 1 week, also support buying. Aggregated final recommendation. Since your trading approach focuses on maximizing profits with controlled risks, and since the aggregated signals suggest predominantly bullish momentum particularly in the shorter time frames, you stand to capture potential immediate gains if entering based on these stronger short-term signals. Recommendation: buy. Entry and exit strategy. 1 entry point: given the overall strong buy signals on the shorter time frames, entering at the current price after a slight retraction could be more beneficial, aiming to capture momentum. Monitor the market meticulously for any potential retest of recent short-duration EMA levels as potential lower-risk entry points. 2. Take profit percentage. Set the take profit level at plus 5% from the entry. This is based on the current bullish pattern and the expected resistance levels viewed through EMA and MACD projections. 3. Stop loss percentage. Set the stop loss level at minus 2.5% from the entry price. This manageably low stop loss ensures protection against sudden market downturns and fits within a 1:2 risk-to-reward ratio. Additional consideration. Market volatility. Due to inherent cryptocurrency market volatility, closely monitor all trades and be prepared to adjust take profit and stop loss thresholds in response to significant news or market developments. RSI monitoring. Keep an eye on RSI levels crossing back below 70 on short-term charts as an early indicator of potential momentum loss which might necessitate trade re-evaluation. Conclusion. Based on the comprehensive analysis and a balanced approach to risk management, the recommended strategy of a buy position with a clear entry, take profit, and stop loss planning aligns well to maximize potential gains reflecting the bullish signals in shorter time frames, while effectively managing trade exposure. Continuously monitor the derivative forecasts and price actions closely following the trading plan to adjust if the market shows signs divergent to the anticipated behavior. Analyzing the detailed trading data provided and considering the aggregation of signals across multiple time frames, we can derive a strategic trading recommendation for cryptocurrency. The key will be to focus on maximizing profits with a controlled risk approach, especially paying attention to the EMA, MACD, RSI trend signals, and also factoring in the derivative forecast data. Summary and insights from the data. 1. Short time frames, 1M and 5M. The 1M indicators suggest a sell signal, bearish signals from derivatives, which indicates a possible short-term downtrend. However, the 5M time frame flips to a buy, suggesting a very short-term volatility. 2 intermediate time frames, 1-5M, 9-0M, 1H. The 1-5M and the 1H indicators offer a strong buy signal with consistent buy indications in both MACD and derivative forecasts. The 9-0M chart provides mixed signals, overall derivative indication, sell, suggesting some caution or possible correction phase. However, this may offer an opportunity if integrated with other time frames. 3 longer time frames, 1D, 5D, 1WK. These show a strong consensus towards a buy signal across all indicators and derivative forecasts. This suggests an underlying bullish sentiment driving the market in the medium to long term. Trading recommendation. Action: buy. 1 entry point, current market level or a brief pullback. Given the presence of bullish signs in both intermediate and longer time frames but considering a potential short-term turndown from the 1M signals, an ideal entry could be slightly delayed from the immediate price to catch any minor dip. 2 take profit, TP. Percentage, plus 10% to plus 15% from the entry point. Rationale: given the long-term bullish signs and the strength seen in the 1-week and 1-day data, there's a reasonable expectation for the asset's price to rise. Setting the TP at a moderate increase accounts for obtaining profits while not being overly optimistic. 3 stop loss, SL. Percentage, minus 5% from the entry point. Rationale: given the volatility indicated by the mixed signals in much shorter durations, 1M and 90M, and to maintain a 1:2 risk-reward ratio, a tighter SL will help in minimizing potential losses if the market reacts unpredictably contrary to the expected long-term trend. This setup aims at a stable trade with a good upside while protective measures are in place for any immediate downturns as indicated by the shortest time frame analyses. The decision aligns with a strategy to capitalize on anticipated mid to long-term growth while tactically watching short-term market dynamics. Analyzing the provided data, the primary goal is to make an informed trading decision based on the aggregated signals, individual time frames indicators, and derivative forecasts. Let's break down the key components. Short time frames, 1M, 5M, 15M, 1H. These time frames provide insight into immediate market momentum. EMA and MACD, shorter time frames, 1M, 5M, 15M, 1H, all show the exponential moving averages, EMAs, in an increasing order, often indicating an upward price trend. The moving average convergence-divergence, MACD, values, except for 5M, are generally above the signal lines, endorsing bullish sentiments. RSI levels, values are high, indicating strength, particularly on the 5M and 15M time frames, with RSI nearing the overbought territory. This might suggest caution as the market might be extending too far too fast. Long time frames, 1D, 5D, 1WK. These provide an outlook on broader market trends. Bearish divergence on 5D, note the 5D time frame, where RSI is quite low, oversold, and yet the market is bearish with EMAs under long-term averages. This could indicate potential exhaustion in selling pressure and might be a setup for a longer-term rally. 1D and 1WK time frames, these are overall bullish, shown by positive derivatives, positive MACD over its signal line, and stepping EMAs. Derivative and aggregated signals. The aggregated signals suggest strong bullish derivatives in longer time frames, 1D and 1WK, but are contradictory on the 5D. Short-term mixed actions suggest waiting for clearer signals before making significant commitments. Recommendations. Final signal, buy. Entry point, recent signals and EMA locations suggest a trend upward, making the current price or a slight dip good potential entry points. Take profit, set at plus 4%. This is encouraged by the significant upturn predicted in long-term derivatives, and MACD trends suggest gaining momentum. Stop loss, set at minus 2%. Keeping a stricter stop loss acknowledging the overbought conditions in shorter periods and the inconsistencies in the 5D data. This strategy keeps the risk to reward at an approximate 1:2 ratio, aligning with the guideline to manage risk effectively while maximizing potential returns. Keep monitoring the indicators, particularly the RSI, for changes that indicate an overheating market, and be ready to adjust your positions accordingly. Analyzing the provided comprehensive financial and indicators data for cryptocurrency trading, let's derive an actionable trading strategy focusing on maximizing profit while maintaining risk control. Summary of key indicators analysis. EMA, exponential moving average, across multiple time frames shows a generally upward trend, especially noticeable in the shorter time frames such as 1M, 5M, and 15M, where the latest EMA 10 is above the EMA 20 and EMA 50. MACD, moving average convergence divergence, tends to be above the signal line in several time frames, especially in 90M, 1H, suggesting a bullish momentum. However, the daily, 1D, shows a previous bearish momentum, now shifting as the MACD is ascending towards the signal line. RSI, Relative Strength Index, readings are primarily between 40 and 74 across all time frames, with only the 5M reading notably high at 74.01, suggesting possible overbought conditions. However, others are relatively neutral to moderately bullish. Derivative forecast analysis. Derived trends across derivatives in multiple time frames show bullish signals especially pronounced at longer time frames like the daily, 1D, 5-day, 5D, and weekly, 1WK. Aggregated entry signal. The accumulated signals across the time frames generally lean towards a buy, although a more cautious approach of hold is suggested, likely due to the juxtaposition of overbought short-term indicators against bullish longer-term trends. Trading recommendation. Final trade decision, buy. Entry, take profit, and stop loss strategies. 1 entry point. Immediate entry is suggested owing to the convergence of bullish signals across most time frames. 2 take profit, TP. Take profit, set at a plus 5% increase from the entry price. This aims to capitalize on the bullish momentum observed especially in the longer time frames while being mindful of potential resistance or reversal. 3 stop loss, SL. Stop loss, set at minus 2.5% from the entry price. This is guided by a risk-reward ratio of about 1:2, minimizing potential downside given the uncertain mitigations from shorter time frames, notably the 5M. Summary. Given the overall bullish trend seen in the majority of the indicators and the favorable derivative forecasts, entering a buy position seems optimal. By setting a stop loss at -2.5% and a take profit at +5%, we capture potential gains while keeping the risk tightly controlled, adhering to the risk-reward ratio guideline. This setup allows for reducing exposure to sudden market downturns while ensuring profitability from the current bullish momentum observed in the cryptocurrency market. Analyzing the data provided, here are the key insights and recommendations. Analysis and decision. 1 short term, 1M, 5M, 15M. The 1-minute chart recommends a sell, while both the 5-minute and 15-minute charts suggest a buy. However, the 1-minute chart might be reflecting very short-term volatility or noise. Given the strong buy signals and robust momentum on both 5-minute and 15-minute time frames, reinforced by exponential moving average (EMA) alignments indicating rising trends, the bullish sentiment in these short-term periods can be prioritized. 2 medium to long-term, 90M, 1H, 1D, 5D, 1WK. The 5-day time frame appears bearish in terms of EMA and MACD readings compared to other frames, showing an overextended downward correction, likely a pullback within a larger bullish trend. All other time frames, particularly the 90 minutes, 1 hour, 1 day, and 1 week charts, present very prevalent bullish indications and solid striving buy signals. EMAs across these periods mostly represent bullish configurations, golden cross, and RSI levels are within acceptable ranges indicating no overbought conditions, except somewhat near thresholds in shorter periods. Conclusion. The predominant signals from significant time frames are bullish, which suggests that the market is gearing towards a continued upward movement. Considering the aggregated derivatives are generally pointing to strong buy, we can consider this a valid entry signal, especially noting the strong buy indicators on larger time frames like 1D and 1WK. Trading strategy. Action: buy. Entry point: current price or a slight retrace if possible in the short-term charts, 1M or 5M, aiming to improve the entry. Stop loss: -2.5% from entry point, targeting a tight risk management strategy to avoid large losses in case of sudden downward movements. Take profit, +5% from entry point, targeting a 1:2 risk to reward ratio, considering the overall bullish sentiment and strength on higher time frames. Risk management: it is crucial to monitor the position closely due to the highly volatile nature of cryptocurrency. Adjust the stop loss to break even once the trade is in a favorable direction by about half the take profit target to secure gains and minimize exposure. Using this structured approach will allow you to capitalize on the prevailing bullish momentum while maintaining strict control over the potential losses, thus aligning with a balanced trade aiming for profitability with managed risk. Given the broad scope of the data provided, the most logical step is to synthesize the information to determine the most advantageous trading decision in the cryptocurrency market. Analysis summary. 1. Shorter time frames, 1M to 90M. All indicators from 1 minute to 90-minute time frames display bullish patterns including double bottom and golden cross, complemented by EMAs signaling an uptrend as shorter-term EMAs are above the longer-term EMAs. RSI values in these time frames are predominantly above 60, suggesting strong momentum, although nearing overbought conditions especially in the 5M and 15M time frames. MACD values are above the signal lines in all but the 1M time frame, suggesting bullish momentum across these intervals. 2. Daily to weekly time frames. In the daily and weekly intervals, we observe that while the EMAs suggest a somewhat mixed signal with some longer-term bearish crossover, i.e., EMA 10/EMA 20 above EMA 50 in the daily time frame, the overall pattern, MACD trends, and the derivatives forecast remain strongly bullish. RSI in longer-term time frames suggests neither overbought nor oversold conditions, providing room for price appreciation. Derivative forecasts. The derivative indicators consistently suggest strong buying pressure across all time frames, with most first, second, and third derivatives in positive territory, reinforcing the buy signals. Final trade recommendation: buy. Entry point. Current market price. Since all time frame indicators are bullish and derivatives support an immediate upward movement. Exit, take profit, strategy. Take profit, set at plus 5% from the entry price. This target is chosen based on the momentum suggested by nearly all indicators, taking into account the volatility typically observed in cryptocurrency markets. Stop loss strategy. Stop loss, set at minus 2.5% from the entry point. This maintains the risk-reward ratio of approximately 1:2, which is in line with a solid risk management strategy. Rationale. The aggressive take-profit level capitalizes on the strong bull momentum indicated across multiple time frames and derivative forecasts. A conservative stop-loss is set to protect against unforeseen reversals, which are not uncommon in high-volatility markets like cryptocurrency. Caveat. Although the signals are predominantly bullish, continual reassessment based on real-time data and global economic indicators impacting the crypto market is crucial to adjust these strategies accordingly. This recommendation aligns with both technical indicators and derivative forecasts signaling a robust bullish trend, optimizing for an effective entry while securing gains and limiting downside risk. Based on the comprehensive analysis of the available trading data for a cryptocurrency, presumably Bitcoin given the price level context, here's the optimized trading strategy tailored for maximizing profit while managing risks. 1. Current market sentiment. The provided indicators and patterns predominantly point towards a bullish market sentiment across almost all time frames. Short term, 1M, 5M, 15M, 1H, 90M strong buying indicators with exponential moving averages, EMAs, trending above longer period averages and consistent bullish patterns, golden cross, double bottom. RSI levels are generally high, signifying strong buying pressure, though nearing overbought conditions in some frames, especially 1H. Mid to long term, 1D, 5D, 1WK mixed signals with daily showing bullish but 5-day exhibiting less momentum, RSI quite low at 28.62, though still holding a buying preference. The weekly view consolidates with a much stronger bullish signal evident in higher RSI and favorable MACD conditions. 2. Analysis derivatives and aggregated signal. The aggregated derivatives forecasts and signal aggregation lean heavily towards a buying stance in most time frames, with an overall preliminary signal of hold. This suggests that while the market is currently bullish, entering a trade immediately may not be the most optimized strategy. 3. Recommended trade strategy with risk-reward consideration. Given the bullish market configuration but factoring in potential overbought conditions in shorter frames, a tactical trade is advised. Optimal entry, considering a slight price retraction due to near overbought conditions on shorter time frames like 1H, RSI at 79.90. A good entry could be set close to a support level or a recent minor pullback. Ideal if prices dip slightly towards support levels near the 1-hour EMA 50 at 82,932.91. Expected target, take profit around the next significant resistance level. Given the bullish formations, an approximate level at the recent high or around the one-day EMA 10 at 84,224.02 could serve as a lucrative take profit point. Stop loss, to maintain a risk-reward ratio close to 1:2, setting a stop loss slightly below the entry point or near critical EMAs to minimize potential loss. A reasonable stop loss can be placed around 5% below the entry price, sensing no immediate sharp declines are indicated. Final recommendation. Action: buy on a slight dip as explained above. Take profit at approximately 5 to 7% above the entry price, or as detailed above. Stop loss at 2 to 3% below the entry price. This strategy aligns with current market dynamics and the risk-reward ratio target, offering a tactical trade setup that leverages potential market gains while maintaining a conservative approach towards risk management. To derive a well-informed trading decision based on the given data, I'll analyze the key indicators and aggregate signals across all time frames and decide on appropriate trades with suitable entry, exit, and risk management strategies. Analysis of indicator data and derivatives. 1. Short-term, 1M, 5M, 15M, operation. 1M data presents a sell signal with EMA values increasing and a high RSI, indicating potential overbuying. 5M data indicates strong buying pressure as evidenced by prominent bullish patterns and a very high RSI, which might imply overextension in the near term. 15M data initially shows a buy, but the derivatives lean towards sell implications, given the negative values in second and third derivatives, suggesting a potential pullback or consolidation phase might be upcoming. 2. Medium term, 90M, 1H, outlook. Both frames suggest strong buying indications, with EMA levels trending upwards, high MACD above the signal, and RSI values indicating strong momentum but nearing overbought territory, specifically in 1H. 3 long-term, 1D, 5D, 1WK, perspective. The daily shows a complex picture with EMA indicators being mixed and MACD negative, however, buying pressure is high as suggested by derivatives. On the 5D and 1WK, there is a clear divergence with EMAs above 5D in a downtrend. Yet, the long position momentum remains strong as suggested by derivatives and MACD levels in the weekly data. Final trading recommendation: buy. Entry point: based on the aggregated short and medium-term buy signals along with long-term stability, an entry at current levels would be reasonable. Specifically, focus soon after a short-term consolidation noticed in the 15M data, as it might provide a better entry point. Take profit, TP, and stop loss, SL, percentages. Take profit: the momentum and bullish patterns across different time frames suggest that a reasonable TP could be set at plus 15% from the entry. This reflects the current momentum observed, especially in the medium and long-term data. Stop loss: to maintain a 1:2 risk-reward ratio, a stop loss of around minus 7.5% should be implemented. This mitigates considerable downside risk while allowing room for typical volatility in crypto markets. By focusing on these strategies, and adjusting if the market changes its course, the trading plans can maximize profits while controlling risk effectively. Keep monitoring crucial indicators like RSI and MACD across these time frames for any significant shifts that could influence ongoing trading decisions. Analyzing the provided cryptocurrency trading data, indicators, and derivatives, we see the following key aspects. EMA and MACD. Shorter time frames, 1M to 90M to 1H majority are indicating bullish signals with EMAs crossing over and MACD values above their respective signal lines. Additionally, the EMA on shorter time frames is trending upwards, suggesting a short-term bullish pattern. Longer time frames, 1D, 5D, 1WK. There is a divergence between the 1D and 5D with the 1WK showing bullish derivative sentiments and positive EMA placement. However, the 5D time frame showcases a significantly higher MACD signal versus MACD, which might point to impending corrections or volatility. Derivative forecasts. Short term, 1M, 5M, 1-5M mixed signals with a predominant buy recommendation in the 5M but a sell on 1M and conflicting signals on 1-5M. Medium to long term, 1H, 1D, 5D, 1WK strong buy recommendations are present in 1H, 1D, and 1WK derivatives. 5D time frame derivatives suggest a buy, but the overextended MACD signal warns of potential overbuying. RSI 1M to 1H, RSI levels are near or slightly above 70, typically indicating overbought conditions. However, strong bullish chart patterns and increasing MACD considering these time frames could still justify entry if monitored closely. 1D and longer, more moderate RSI levels, particularly on the 1D and 1WK, suggest there's still room for upward movement. Overall market sentiment, clearly bullish in the immediate to medium term, albeit with notable caution due to potential overbought signals in the shorter time frames and mixed messages in the daily and 5-day charts. Final recommendation. Action: buy. Given the data leaning overall toward bullish indications combined with strong buy derivatives in crucial hourly to weekly time frames, entering a buy trade seems justified, but with close scrutiny, especially considering potential overbought territories in the shorter time frames. Entry point: look for minor pullbacks on the 1H or potentially even the 15M time frame to optimize entry points. An ideal situation would be a slight correction toward a recent EMA, possibly EMA 20 or EMA 50 on 1H or 15M chart for more conservative entry. Stop loss: set stop loss at a 2.5% decrease from the entry price. This allows sufficient room to maneuver in case of normal market volatility but protects against larger downturns. Take profit: set take profit at a 5% increase from the entry price. This maintains the desired 1:2 risk-to-reward ratio, securing gains while providing a realistic profit target based on current market momentum and volatility assessments. Monitoring approach: keep a close watch on RSI and MACD crossings on shorter time frames for any early signs of trend reversals. Adjust stop loss and take profit levels dynamically if the trade moves favorably to lock in profits and minimize potential losses. Consider scaling out or partial profit taking at 3% gain to reduce exposure while allowing some room for potential further upsides. Based on the comprehensive analysis of the trading data provided, here is a detailed assessment and recommendation for entering a cryptocurrency trade, focusing on maximizing profit while managing risk effectively. Analysis of indicator and derivative data. Short-term view: 1M, 5M, 15M. The EMA, exponential moving average, alignment in 1M, 5M, and 15M shows a pattern conducive to a bullish setup, signifying upward momentum. The EMA 10 is above EMA 20 and EMA 50 across these periods. The MACD, moving average convergence divergence, readings are especially bullish in 1M and 5M time frames, although the MACD line being above the signal line confirms strong buying momentum. RSI, Relative Strength Index, levels in 1M and 5M are relatively high, indicating possible overbought conditions that may trigger a temporary pullback. The derivative forecasts signal robust buying pressure in the 1M time frame but mixed in the 5M and 15M. Medium and long-term view: 1H, 90M, 1D, 5D, 1WK. The EMAs in the longer time frames signal varied positions, reflecting consolidation: 1D, 90M, 1H, and overselling in the more extended periods: 5D, 1WK. MACD trends display bullish signals particularly in the 90M and 1H but not as strongly in daily and longer terms. A MACD below its signal line in the longer time frame suggests caution is warranted. RSI levels suggest extreme bullishness in the 1H, approaching overbought, while the daily and weekly time frames show neutral to oversold conditions, supporting potential for upside. Final recommendation: trade entry, buy. Entry signal reasoning: the majority of signals across various time frames suggest bullish conditions, particularly strong in shorter time frames and medium-term intervals. This indicates a good potential for upward momentum in the short run while bearing medium-term stability. Optimal entry point, considering the slight overbought condition in the extremely short-term evaluations, 1M, 5M, awaiting a minor retracement before entering could provide a better risk-reward balance. Risk management. Stop loss. Set a stop loss at approximately 1.5% below the entry point. This threshold protects against unexpected downturns without exiting the position too early during normal volatility. Take profit. Aim for a take profit level at around 3.0% above the entry price. This target respects the 1:2 risk to reward ratio, capitalizing on potential short-term gains. Trade duration. Considering the mixed signals from daily to weekly periods, this trade is recommended as a short to medium-term hold, possibly reviewing continuously and closing within a few days to a week depending on market behavior and achievement of take profit levels. In summary, currently, entering a buy position with strategic stop loss and take profit levels offers a favorable trading opportunity under the observed conditions. Regularly review the position against market developments and adjust the strategy as necessary to protect gains or cut losses efficiently. Analyzing the provided data, the first aspect we must consider is the trends indicated by the exponential moving averages, EMAs, and the MACD alongside the moving average convergence divergence, MACD, signal values. 1 EMA analysis. Shorter time frames, 1M, 5M, 1-5M we observe increasing EMA values indicating a bullish momentum. The EMA10 is consistently higher than EMA20 and EMA50 across these frames. Longer time frames, 1D, 5D, 1WK in the daily and weekly charts, though some bearish divergence is seen, EMA10 is still above EMA20 in most cases, although MACD values are negative in some, indicating that in the long term, the market could stabilize or grow. 2 MACD analysis. Shorter time frames, the MACD line is generally above the MACD signal line, especially on 1M, 90M, and 1H charts, indicating short-term bullish signals. Daily and weekly charts, negative values on the day but strong positive values on the weekly chart. This shows variability but a general potential bullish trend in the medium-long term. 3 Derivative and RSI analysis. Derivative forecasts, 1M, 1-5M, 1H, and 1WK predictions lean heavily towards buy. The most reliable seem to be the very short and long-term derivatives, 1M, 1H, and 1WK. RSI, value below 50 in 5D chart suggests it's potentially oversold. The very high RSI values in shorter terms, 1-5M, 1H, signal overbought conditions, potentially leading to pullbacks. Consolidated signal recommendation. Short-term, intraday traders considering the bullish signals from 1M to 1H time frames and respective derivatives, a buy decision could be considered. The strong momentum might allow capturing gains before any potential pullback due to high RSI reads. Long-term, positional traders the weekly chart is still bullish, and the daily signals are mixed but leaning towards recovery. Therefore, holding might still be the safer option for those looking at a longer horizon. Risk management. Take profit and stop loss strategy. Take profit, given EMA and MACD growth, a take profit level of 3 to 5% from the entry price seems reasonable. Stop loss, implementing a tight stop loss at approximately 1.5 to 2% from the entry price could help manage the risk, maintaining a risk-reward ratio near 1:2. Final recommendation. For intraday traders. Action, buy. Take profit, plus 3 to 5%. Stop loss, dash 1.5% 2%. For long-term/positional traders. Action, hold. Monitor, daily and weekly charts for any change in MACD or EMA trends which could affect the long-term outlook, adjusting stop loss and take profit levels as necessary to protect capital investment. Analysis. Indicator overview. Short term, 1M, 5M, 15M. The moving averages, EMA 10, EMA 20, EMA 50, across these frames are consistently bullish and increasingly separate, suggesting strong upward momentum. MACD values indicate bullish momentum rising above the signal line. RSI levels are high, particularly in the 15M, indicating potential overbought conditions which could lead to a short-term pullback. Medium term, 90M, 1H. The EMAs show strong bullish trends and the price has consistently remained above the longer-term moving averages. Both time frames depict MACD values significantly above the signal lines, reinforcing robust bullish momentum. The RSI on the 1H frame edges towards potential overbought conditions, suggesting caution. Long-term, 1D, 5D, 1WK. The 1D frame shows divergence between EMAs and MACD which suggests some underlying weakening momentum despite a bullish chart pattern. The 5D and 1WK frames show a more balanced scenario. Here, the RSI is notably weaker on the 5D frame suggesting oversold conditions which could indicate an upward correction. In the 1WK frame, the MACD remains significantly bullish despite high discrepancies from the signal line, suggesting strong but potentially volatile growth. Derivatives and aggregated signals. Predominantly strong buy signals across almost all short and medium time frames, with a conflicting sell signal only in the 15M derivatives. Strong buy signals continue in longer time frames, particularly the 1D, 5D, and 1WK periods, pointing towards a good bullish momentum build-up over time. Recommendation: buy. Entry point. Optimal entry, given the current bullish indicators across most time frames and strong buy signals from derivatives, entering shortly after a minor pullback would be ideal. The slight pullback might be expected due to the high RSI in the 15M frame. Watch this closely. Take profit and stop loss. Take profit. Aim for a take profit level of around 3 to 4% above the entry price. This target acknowledges the strong bullish sentiment and movement on the lower and higher time frames. Stop loss. Set a stop loss at approximately 1.5% below the entry point. This tight stop loss strategy minimizes the risk given the existing volatility and the potential overbought conditions on shorter time frames. Risk-reward ratio. Following the 1:2 risk-reward ratio, the recommended take-profit and stop-loss levels should maintain this balance. Here, a 1.5% risk, stop-loss, pairs with a potential 3% reward, take-profit. Summary. While derivatives strongly indicate buy sentiments and EMAs are positively aligned for an upward trajectory, monitor the higher RSI values closely. The recommended buy should consider potential short-term volatility, using the specified take-profit and stop-loss strategy to manage associated risks effectively. This trade is favorable but requires active monitoring, particularly due to the overbought signals perceptible on shorter durations. Analyzing the provided trading data across various time frames, including indicators and derivatives, here is the final recommendation for a cryptocurrency trade. Analysis breakdown. Short term, 1M, 5M, 15M. We have mixed signals here, with the 1 minute suggesting strong sell indications, while 5 and 15-minute charts lean towards a buy. Given the volatility in shorter time frames, a cautious approach would prioritize more stable, longer-term signals. Medium term, 1H, 90M. Both these time frames give buy signals. Notably, all three derivatives in each time frame indicate strong buying conviction, which typically highlights potential upward momentum. Long term, 1D, 5D, 1WK. The daily, 5-day, and weekly data suggest a strong buying pattern, except for some bearish indicators in the 5-day data. However, the overall weight from the daily and weekly charts should overpower the 5-day bearish signal due to higher gains predicted via derivatives. Conclusion and final trade recommendation. Final recommendation: buy. The aggregated buy signals from the majority of the time frames, especially influential longer ones like 1D and 1WK, paired with strong buy derivatives, suggest entering a long position. Trade management. Entry point: current prices or slight retracements offer a good entry considering the robust bullish signals in hourly to weekly time frames. Stop loss. Set the stop loss at -5%. This narrow stop loss window helps protect against unexpected downtrends, particularly considering the slight inconsistency in the 5-day data. Take profit. Set initial take profit at +10%. If the price approaches this target and the momentum indicators remain strong, consider implementing a trailing stop loss to capture further gains while securing achieved profits. Risk/reward and monitoring. The recommended risk/reward ratio, 1:2, is maintained with the above stop loss and take profit levels. Continuously monitor the MACD and RSI on the daily and weekly charts for any potential exhaustion or reversal patterns which may signal a need for adjustment to the stop loss or closure of the position. Conclusion. Adherence to these trade handling and monitoring guidelines allows for potential significant profits while effectively controlling for risk. The hold signal aggregation reflects balanced caution, which is wise to override due to the compelling buy signals in critical longer time frames and derivative foresights. Analyzing the extensive indicator and derivative data provided, the cryptocurrency's trading dynamics represent a compelling situation. Based on the indicator patterns, moving averages, MACD values, RSI levels, and particularly the derivative forecast data spanning from 1 minute to 1 week time frames, here's a detailed assessment. EMA analysis. Exponential moving averages, EMAs, across time frames show an ascending trend in shorter time frames, 1M, 5M, 90M, and 1H, but a divergence in longer time frames, 5D, 1D, which generally signifies a more bullish performance in the short term while hinting at potential volatility or correction phases in the longer term. MACD and signal line. In most time frames, the MACD is above the signal line, suggesting bullish momentum with buying pressure. However, the daily, 1D, MACD below the signal line indicates caution. RSI levels. Short-term RSI levels are generally high, near or above 70 in 15M, 1H, suggesting overbought conditions which might lead to short-term pullbacks. Conversely, longer-term RSIs like the 5D suggest slight oversold conditions, which is generally a buying signal but requires careful monitoring due to volatility. Patterns and charts. Bullish patterns across all time frames and bullish technical setups such as double bottom and golden cross indicate a prevailing upward trend. Derivative and aggregated signals. Short term, 1M, 5M, and medium term, 1H, 90M, derivatives recommend strong buy signals, while the 5-day and weekly time frames also indicate buy but with a risk of high volatility considering the MACD and RSI readings. Strategy recommendations. Final signal, buy with caution. Given the majority of technical indicators and derivatives recommending buying in both short and medium terms, it's an optimal entry point for a bullish position. Take profit and stop loss settings. Take profit, given the strength of the buy signals, especially in the shorter time frames. A take profit range of +4% to +6% from the entry price would capture likely short-term upsides without staying overly exposed to mid-term corrections. Stop loss, to manage risk effectively, and considering potential volatility, a stop loss of -2% from entry price would limit potential losses, maintaining a 1:2 risk-to-reward ratio. Monitoring. Frequent review of MACD and RSI for signs of divergence or a turn to grave overbought conditions is advised for timely exits or strategy adjustments. In summary, the overall analysis suggests that an entry now, with stringent control on take profit and stop loss levels, could capitalize on short-term bullish momentum. This strategy aligns with a proper risk management framework to secure gains while limiting potential downside risk effectively. Analyzing the provided cryptocurrency trading data, we observe the following from the indicators across different time frames and the derivative metrics that they translate into effective trading actions. Short-term analysis, 1M, 5M, 15M. 1 minute, while short-term indicators show a bullish pattern, derivative forecasting suggests strong signals to sell. This suggests potential very short-term volatility or pullback. 5 minute, all indicators and derivative forecasts recommend a buy action. The parameters are consistent in showing upward momentum. 15 minute, MACD above its signal line and a high RSI indicates overbought conditions possibly pointing to an upcoming correction, hence the derivative forecast recommends a sell. Medium-term analysis, 1H, 90M. Both 1-hour and 90-minute forecasts strongly suggest buying, supported by the MACD being significantly above its signal line and RSI is high, though cautious of potential overbought on the 1H time frame. Long-term analysis, 1D, 5D, 1WK. Daily, despite a bearish MACD ready to reverse, MACD ascending towards its signal, the overall recommendation is to buy. This might suggest the beginning of a potential longer-term upward trend reversal. 5-day, contrastingly, on a 5-day scale, indicators are bearish with RSI very low, suggesting oversold conditions which might connote a potential bounce back or recovery given the bullish derivative forecasts. 1 week, strong buy indicators from both EMA patterns and derivative metrics across. Although RSI is moderate, suggesting the cryptocurrency is neither overbought nor oversold. Aggregated final signal: despite the mixed signals in the shorter time frames, medium and long-term indicators, particularly across 1D, 90M, 1H, and 1WK drive a rather bullish sentiment with strong buying pressure indicated in derivatives. Final recommendation: buy. Entry point strategy: look for minor pullbacks as opportunities to enter. Given the bullish signals, especially in medium to long time frames, enter on slight dips rather than chasing peaks. Use the 1 hour or 90 minutes chart to pinpoint a more precise entry after confirmation of the continuation of the uptrend. Take profit and stop loss settings. Take profit, set at about plus 10% from the entry point. This target allows enough room to capitalize on expected upward movement without holding too long, which might risk reversal damages. Stop loss, set around minus 5% from the entry price. This tight stop conforms to the 1:2 risk/reward ratio, protecting the investment from any unforeseen downturns, especially noted from the short-term volatility. Overall trading strategy: maintain vigilance on the 1H and 90M indicators to adjust the trade if necessary. If RSI approaches extremely overbought levels, greater than 80, or a reversal pattern emerges, consider taking profit earlier to mitigate risks. Similarly, monitor significant news or events that could affect market sentiment drastically. This trade setup and management strategy adheres to your goal of executing intelligent trades with controlled risks, achieving a sensible balance between potential profit and exposure to downside risk. Based on the comprehensive analysis of the provided indicator data and derivatives for various time frames, the overarching sentiment predominantly leans towards a bullish outlook across most durations, particularly notable in the 1-minute, 5-minute, 90-minute, 1-hour, 1-day, 5-day, and 1-week indicators. However, it is crucial to note a divergence in the 15-minute time frame where indicators suggest a sell. This implies a possible short-term pullback or volatility, which can affect the immediate price movement. Detailed assessment: short-term, 1M, 5M, 1-5M. 1M and 5M intervals show strong buys with supporting bullish patterns and derivatives suggesting increasing bullish momentum. 1-5M interval diverges, signaling sell. These corrections could imply either a brief consolidation or onset of a more significant pullback, which would be critical to monitor. Medium term, 90M, 1H. Both 90M and 1H time frames strongly support buying with high bullish MACD values diverging from their respective MACD signals and highly elevated RSI, particularly in the 1H suggesting an overbought condition that may temporarily plateau or pull back. Long term, 1D, 5D, 1WK. The one-day time frame shows a current bearish crossing on MACD signals, but overall derivatives and EMA tend towards buying. 5-day and 1-week data shows strong bullish signals and golden crosses on charts, although RSI levels are varied, with the 5-day being oversold, which could anticipate potential rebound gains. Trade recommendation. Action: buy. Given the predominance of bullish signals across multiple significant time frames and derivative forecasts, initiating a buy position is recommended. However, keen monitoring of the 15M and any emerging data is advised to manage potential short-term volatility. Entry points. Immediate entry is suggested based on overall bullish momentum signals. Given the bearish insight on the 15-minute chart, the next immediate dip might provide a more favorable entry point to leverage short-term price actions to enter the market. Exit points, take profit and stop loss settings. 1. Take profit, set at plus 4% from the entry point. This is computed based on the overall volatility and the potential for short to medium-term price increases indicated by longer time frame bullish tendencies and significant derivatives forecasts. 2. Stop loss, placed at minus 2% from the entry. This narrower stop loss is due to the potential volatility indicated by the 15-minute chart and the need to preserve capital against unexpected downturns. Risk/reward strategy. The recommended positions are structured around a 1:2 risk-reward ratio, suited to a conservative yet opportunistic trading stance given the current market signals. Monitoring. Constant monitoring, especially of the 15M signals, is essential. If the market presents a consistent downturn across several shorter time frames post-entry, an exit strategy should be considered to mitigate losses beyond the set stop loss. This strategy positions to capitalize on the dominant bullish momentum while adequately safeguarding the invested capital through a balanced risk-averse approach. Analyzing the provided trading data and summarizing key indicators across various time frames gives us insights into potential trading strategies for the cryptocurrency in question. Breakdown analysis. Shorter time frames, 1M, 5M, 15M. These exhibit a mixture of bullish technical chart patterns, but the immediate derivative indicators mostly signal sell. This suggests potential short-term volatility or pullbacks. Medium time frames, 90M, 1H. Both time frames show strong buy signals across their derivative indicators, which indicates a bullish outlook in the near to mid-term. Longer time frames, 1D, 5D, 1WK. The 1-day and 1-week both show compelling buy derivatives and bullish patterns, endorsing a longer-term optimistic forecast. However, the 5-day remains mixed with a slight bearish sentiment. Aggregated signals. The mixed signals in the very short-term windows suggest volatility, but the predominantly strong buy signals in the longer time periods, 90M, 1H, 1D, 1WK, advise a favorable longer-term outlook. Trading strategy recommendation. Final decision, buy. Entry point. The best entry would be during a short-term pullback as indicated by the shorter, 1M, 5M and some of the medium, 15M, time frame sell signals. For instance, watch the RSI and MACD closely in the 1M or 5M windows for entry during temporary undervaluations. Exit strategy, take profit and stop loss. Take profit, due to the positive outlook in medium and longer time frames, especially significant buy derivative signals in the 1H and 1D time frames. Set a take profit level at a 20% rise from the entry price. This captures likely gains from bullish signals without overstaying in potential volatility downwards. Stop loss. Establish a stop loss at around 10% below the entry price. This threshold limits potential losses if the market reacts unexpectedly or if the forecasted growth fails to materialize soon enough. This respects our 1:2 risk to reward ratio, aiming to double potential rewards compared to risks. Conclusion. The recommendation to buy comes with a strategy aiming to maximize the upside observed in the medium to long-term forecasts while protecting against short-term downtrends. Monitor the trade closely and be prepared to adjust the stop-loss/take profit levels based on actual market movements and any new relevant data. To derive a considered trading recommendation, let's analyze the data provided based on each time frame, macro indicators, and derivative forecasts to optimize the entry and exit points while managing risk effectively. Analysis of time frames. 1 short term, 1M, 5M, 15M. Although 1M and 5M show a strong buy signal on the derivative forecast, the 15M derivatives suggest a sell. This discrepancy indicates potential volatility or a rapid change in direction in the very short term. Consider the RSI levels. The 15M RSI is overly high at 89.24, implying the asset may be overbought and could see a correction shortly. 2 medium term, 90M, 1H. Both 90M and 1H time frames indicate strong buy signals, both through MACD analysis and derivative forecasts. The RSI for both is elevated but not in the extreme overbought zone, 81.59 for 1H. 3 long-term, 1D, 5D, 1WK. The daily shows a mixed signal with a significantly negative MACD but a bullish chart and overall buy in derivatives. The weekly indicators are positive though oscillators like RSI are lower, safe ranges, hinting at controlled buying without overvaluation. Derivative forecasts. Across all derivatives and time frames, except for the 15M, the forecasts are overwhelmingly suggesting buy actions, indicating potential for upward momentum or a bullish trend. Aggregated signals and preliminary final signal. The dominant aggregated signal points toward buy across all except the 15M time frame. Yet, the preliminary final signal recommends a hold. This could suggest uncertainty or that the potential upside may not be sufficient given the risk. Recommendation: given the details provided, and focusing on managing risk and optimizing reward. Final trading recommendation: buy. Entry point, current market price. Take profit level, 2% 5% from the entry point, leaning on the conservative side due to mixed signals in certain time frames. Stop loss level, set at approximately -1% to -2.5% below the entry price, providing a solid risk-reward ratio of 1:2. Risk management. Monitor short-term time frames, 1M, 5M, 15M, closely to adjust if there are signs of high volatility or reversals. Given the overbought conditions in some short and medium time frames, be prepared to exit swiftly if the market begins to turn, adhering strictly to the stop-loss strategy. Conclusion: the buy recommendation hinges on the strong forecasts and aggregated signals across most time frames and indicators suggesting an upward price movement. However, it's vital to monitor the trade closely and adjust as necessary, utilizing the stop-loss and take-profit levels to ensure the risk-reward balance. Upon analyzing the presented data, it's crucial to make an informed decision regarding the entry and exit points for cryptocurrency trading while maintaining the targeted risk-reward ratio. Here's the breakdown. Key indicators. 1. Moving averages. The shorter-term moving averages, EMA 10, EMA 20, EMA 50, on the 1M, 5M, 15M, and 1H time frames are consistently above the longer-term averages, which indicates a strong uptrend in these lower time frames. 2. MACD. The MACD is above its signal line and is positive in most lower time frames, 1M, 5M, 15M, 90M, 1H, which is a sign of upward momentum. 3. RSI. The RSI levels in the 15M and 1H segments are quite high, above 80, suggesting overbought conditions that may typically warrant caution due to potential pullbacks. However, in longer time frames, RSI values are more moderate. Derivative insights. The shorter time frames, 1M, 5M, 15M, show mixed signals leaning towards sell, primarily from minute and 5 minutes. Medium to longer durations, 90M, 1H, 1D, 5D, 1WK, predominantly indicate a buy signal. Though we need to be cautious about the high RSI values in the shorter durations, the overwhelming momentum indicated by MACD and derivatives in the longer time frames is hard to ignore. Aggregated signal analysis. Aggregated signals see mixed insights but lean towards buy in most frames except 5D, which suggests sell. This could be due to natural variances across different time perspectives, but the majority support is for upward momentum. Final recommendation: buy. Trading strategy. Entry point: given the current bullish signals in longer time frames and the golden cross pattern observed, entering at the current level could be strategic. Take profit: given the bullish long-term perspective, setting a take-profit level around 3 to 5% higher than the entry point can allow capturing upside while still being realistic about price pullbacks. Stop loss: to manage risks effectively, especially considering the overbought conditions on shorter time frames, setting a stop loss at around 1.5 to 2% lower than the entry point protects against potential downturns. Risk-reward ratio. Given the selected take profit, 3 to 5%, and stop loss, 1.5 to 2%, the trade complies with the desired risk-to-reward ratio of approximately 1:2. Residual notes: traders must be aware of the overbought conditions and adjust strategy if the cryptocurrency experiences sudden shifts. Consider the macroeconomic conditions and potential market moving events that could affect the cryptocurrency prices outside of technical analysis. Based on the comprehensive review of the provided cryptocurrency trading data and indicators, here is an assessment and final trading recommendation. Analysis of indicator data and derivatives. 1. EMA trends, exponential moving averages. Short-term time frames, 1M, 5M, 15M, 1H, 90M. The EMA values show a positive bias suggesting an upward momentum very prominently on 15M, 1H, and 90M charts. Long-term time frames, 1D, 5D, 1WK. The wider gap between long-term EMAs and current price on the 5D and 1WK may indicate overvaluation, but this disparity is counteracted by strong derivative signals. 2. MACD, moving average convergence divergence. On higher time frames, 1WK, there's a significant increase, reflective of strong bullish momentum. The 1D chart shows reversing from bearish to bullish, where MACD crosses above MACD signal. In contrast, 1M, 5M, and 15M time frames show immediate short-term trading opportunities backed by bullish MACD. 3. RSI, Relative Strength Index. Primarily within bullish parameters in shorter time frames. Extreme caution is advised on the 15M time frame as the RSI is hugely above typical thresholds, 87.10, indicating possible overbought conditions leading to a pullback or reversal in the short term. 4. Derivative forecasts and aggregated signals. They predominantly indicate a buy across most time frames except for short selling opportunities noticed in 5M. These should likely be transient corrections within a broader bullish trend. Final recommendation. Action, buy. Entry point, current market price or slight pullback due to possible short-term corrections shown by 5M RSI and derivative signals. Take profit, plus 6% from entry point. This level is chosen considering previous EMA and resistance points on daily and weekly charts indicating possible ceilings beyond this point. Stop loss, minus 3% from entry point. A conserved stop-loss level accounting for the volatility and allowing room for minor pullbacks without ejecting from the position too early. Reasons for trade configuration. Established bullish signals across multiple time frames indicating sustained upward potential. Risk-reward ratio of about 1:2 respects the trading plan parameters and addresses current market volatilities. Confirmation through derivative forecasts supporting a robust bullish stance in medium to long-term investing. Risk management. Regularly reevaluate the RSI and MACD readings, especially in the shorter time frames, to adjust the stop-loss/take profit levels as the market signals evolve. Monitor global economic news influencing cryptocurrency markets, e.g., regulations, tech innovations, for potential impacts on the trading strategy. By focusing on this structured entry and exit method, and considering both technical indicators and derivative insights, the recommendation aims to maximize profits while keeping risk under control. Based on the provided data and the aggregated signals, we need to determine whether to buy, sell, or hold, considering the risk-reward ratio of 1:2 and market indicators. Analysis of indicators and signals across time frames. 1. Short term, 1M, 5M, 15M. The 1-minute and 5-minute frames suggest selling pressure, though there's a contradicting bullish signal on 5-minute from EMA and MACD which are in alignment but countered by a negative forecast from the derivative data. On the 15-minute frame, there is a stronger buy indication from both EMA trends and MACD divergence, and the derivative forecast supports this with positive values. 2. Medium term, 90M, 1H, 1D. The 90-minute frame shows strong buy signals with significant positive divergence in MACD and a bullish RSI. The 1-hour frame is mixed, with computational buys from MACD but negative short derivative forecasts. This can be seen as a confusing signal. The 1-day indicator leans heavily towards a buy with EMA trends steadying and a clearly positive derivative forecast. 3. Long-term, 5D, 1WK. The 5-day signals are mixed with an overall MACD downturn, despite a bullish RSI low which may suggest undervaluation or upcoming corrections. The 1 week shows very strong buy signals across technical indicators and forecasts, suggesting sustained upward momentum. Final recommendation. Given the overall analysis, short-term indicators are mixed with slight leaning towards hold/sell. Medium-term and long-term indicators predominantly suggest buy. Since the medium and long-term indicators suggest sustained bullishness, and these usually have a higher impact due to having a broader view of the market. Action: buy. Entry point: considering the slight short-term volatility, an optimal entry would be around the current market price or a slight dip if observed in the 1-hour trend. Take profit: set take profit at plus 4% from the entry point. Given that the MACD in the 1-day and 1 week is bullish, and EMAs are tending to cross upwards, a plus 4% profit is achievable. Stop loss: set stop loss at minus 2% from the entry point. This tight stop loss will protect against unfavorable moves given the slight inconsistencies in the shorter time frames. Rationale: the choice of 2% stop loss against 4% take profit aligns with the 1:2 risk-reward ratio, maintaining conservative risk management while capitalizing on the identified bullish medium and long-term trends. The wider time frames offer strength to the bullish outlook, providing a stabilizing effect against short-term swings. After analyzing the comprehensive data provided, we can develop a structured trading strategy for maximizing profits while managing risks effectively. Analysis overview. Indicators and patterns. Short term, 1M, 5M, 15M. The mixed signals in the very short time frames, 1M and 5M, indicate near-term volatility, but overall, the bullish patterns and positive derivatives data at the 1-5M interval supports a slight upward bias in momentum. Medium term, 9-0M, 1H. These intervals show assertive bullish signs, but the 1H time frame presents a sell on derivatives, hinting at potential overbought conditions given high RSI. Long term, 1D, 5D, 1WK. Strong bullish signs and signals, with the increase in buying derivatives supporting upward momentum over the longer horizon, despite some overbought signals in the daily interval. Trade recommendation. Action. Given the strong bullish signals in the medium and long-term intervals and the fact that aggregated signals lean towards buy versus a preliminary hold, it's advisable to take a buy position, particularly focusing on a strategic entry based on the 1-hour and daily interval data. Entry point. Since the 1-hour frame shows some signs of potential overbought conditions, high RSI and a derivative sell, a good entry would be at a slight retrace from the current price level. Look to enter at a 0.5% to 1% retraction from the current market price. Risk management. Stop loss. Given the subtle signs of overbought conditions in the shorter time frames, and to keep risks controlled, set a stop loss at approximately 3% below the entry point. Take profit, in line with a 1:2 risk/reward ratio, and considering the bullish sentiment from medium to long range analyses, setting the take profit at about 6% above the entry point is prudent. Conclusion. By positioning your entry after a mild retraction, and setting strategic stop loss and take profit levels, you effectively manage the risk while positioning for profitable potential indicated by longer-term bullish trends. Regularly reassess the positional validity based on real-time developments and be prepared to modify your take profit and stop loss levels in response to significant changes in the technical patterns or external market conditions. This strategy ensures a well-rounded approach to trading that leverages detailed technical analysis while keeping risk thresholds firmly in view. Based on the provided trading data, here is a comprehensive analysis to derive a final trading recommendation for cryptocurrency. Analysis of indicators and derivatives. 1 short term, 1M, 5M, 15M, 90M. 1M time frame, bearish from the derivatives, minus 18.0746, minus 11.7861, minus 3.3047, signaling a consistent sell despite the bullish patterns and moving averages. 5M time frame, mixed, initial sell followed by buy signals in the derivatives, minus 10.4136, plus 7.1385, plus 3.7441, predominantly bullish indicators. 15M time frame, strong buy indicators from derivatives, 41.2239, 10.5070, 7.5327, and very bullish with high RSI, indicating possible overbought condition. 90M time frame, strong buy signals in derivatives, 535.0135, 118.6415, 16.5818, with medium RSI at 68.67, suggesting continued upward movement. 2 medium to long term, 1H, 1D, 5D, 1WK. 1H time frame, predominantly a sell signal from derivatives, plus 239.9844, minus 22.4580, minus 12.1435, even though indicators suggest bullish patterns but possibly peaking as suggested by an RSI of 84.01. 1D time frame, strong buy on all derivative signals, 2425.6804, 1775.9350, 398.5399, coupled with moderate RSI, indicating a healthier bullish outlook. 5D and 1WK time frames, these long-term signals are more mixed. The 5D has a sell on derivative aggregation, potentially due to high divergence in MACD signals but still underpinned by bullish patterns. The 1WK shows strong buy signals which could suggest long-term bullishness but comes with high volatility, RSI at 40.79. Final recommendation. Given the mixed signals in the short term but stronger bullish indication in the medium to long-term perspectives, adopting a buy strategy appears favorable. The market seems to be more positively inclined in the daily and weekly time frames, suggesting a stable upward trend over time. Entry/exit point. Entry point, immediate, due to strong buy signals in daily and weekly derivatives. Take profit, aim for plus 5% from entry point based on the robustness of the daily and weekly gains. Stop loss, set at minus 2.5%, maintaining approximately a 1:2 risk-reward ratio. This stop loss accounts for the short-term volatility observed and protects against any unforeseen market downturns. Conclusion. Buy, with an entry point at the current price level. The take profit level is set at plus 5%, and the stop loss level is minus 2.5%. Move forward with this trading plan if you are comfortable with a moderate risk level and have conducted additional market context checks or have other risk management contingencies in place. Analysis summary. Indicators overview. 1 short term, 1M, 5M, 15M. There is a mixture of buy and sell signals at the 1-minute frame, leaning towards a sell, mostly based on a negative MACD divergence and low RSI. Both 5-minute and 15-minute frames show strong buy signals, reflected in bullish patterns and positive MACD divergence above the signal, indicative of potential upward momentum. 2 medium term, 1H, 90M. The 1-hour frame shows a sell signal, with MACD above the signal but showing divergence, alongside a very high RSI, suggesting overbought conditions that could precede a pullback. The 90-minute frame, however, indicates strong buying momentum with high MACD values above the signal and a moderately high RSI. 3 long-term, 1D, 5D, 1WK. Strong buy signals dominate the longer time frames, with bullish patterns and increasing separation between MACD and its signal line, despite the 5D RSI suggesting potential oversold conditions. Derivative analysis. The derivatives forecast points predominantly towards buys in the majority of time frames, with considerable positive momentum, particularly on a daily and weekly scale. Final recommendation. Buy. Entry point. Given the strength in the medium to long-term indicators, entering at the current market price or a slight retracement would be advantageous. Exit strategy. Take profit. Set at approximately plus 4%. This is based on the strong upside potential indicated by the 1D and 1WK derivatives, where the momentum has considerably positive forecasts. Stop loss. Set at minus 2%. This considers the potential retracement risk given the slightly mixed signals at shorter time frames and a high RSI at 1H indicating overbought conditions. Risk management. This recommendation adheres to a 1:2 risk/reward ratio, complying with balanced risk management and profit maximization objectives. Adjust the position size accordingly to ensure that the maximum exposure adheres to your overall portfolio risk management strategy. Note, market conditions can evolve rapidly, and it's critical to monitor key indicators and derivative forecasts frequently to adjust stop loss or take profit levels as needed. Stay vigilant for any macroeconomic news or events that may influence market movements. Analysis Overview. The data provided indicates a predominantly bullish sentiment across most time frames excluding shorter time frames. The indicators like EMA, exponential moving averages, MACD, moving average convergence divergence, and RSI, relative strength index, along with chart patterns indicate strong buying signals, especially in middle to longer time frames, 1D, 1WK. The derivative signals, which seem to predict upcoming movements, align mostly with buys, which strengthens the bullish argument. Key observations. 1. EMA trends. Most time frames show the shorter-term EMAs, EMA 10, above the longer-term EMAs, EMA 20, EMA 50, which suggests an ongoing uptrend. 2. MACD values. The positive divergence between MACD and its signal line in the longer time frames, 90M, 1H, 1D, and 1WK, supports the momentum in buying. 3. RSI readings. Shorter time frames, 1M, 15M, and 1H, show overbought conditions which could signal a short-term pullback. However, in the daily and weekly charts, the values are moderate to slightly overbought, suggesting a robust bullish trend in the medium to long term. 4. Derivative forecast. Strong buying signals in the longer-term forecasts, 1D, 1WK, reinforce confidence in sustained price increases. Final recommendation, buy. Entry point. Given the current bullish setup, especially in the medium and long-term outlook, an entry point near the current price or a slight dip, considering short-term overbought conditions, can be optimal. Exit point. Take profit aiming for a profit target of about 8 to 10%. Given the current momentum, setting a reasonable expectation based on recent highs or resistance levels observed in the pattern analysis might be beneficial. Stop loss, set at around 4 to 5% below the entry point. This level should adequately protect against downward volatility and any short-term pullbacks without exiting too early from the overall bullish trend. Risk-reward ratio. The given configuration ensures a risk-to-reward ratio close to 1:2, aligning with the set trading strategy goals. Monitoring points. React promptly to any drastic changes observed in the 1M or 5M indicators that might suggest a shift in market sentiment. Watch for any crossover of MACD below its signal line or EMA 10 falling below EMA 20 in higher time frames, which might indicate a trend reversal, prompting an exit or adjustment of the stop loss/take profit levels. By adhering to this strategy, the recommendations focus on capturing upside potential while maintaining strict risk control, capitalizing on identified strong bullish trends and protecting against undesirable shifts in market conditions. Based on a comprehensive analysis of the trading data provided, below are the recommendations and strategic trade plan. Overall market sentiment and signal analysis. From the available data across time frames, we see a prevalent bullish sentiment except in the 1-minute time frame, where the indication is towards a sell position. This could be seen as noise within shorter time frames, which often display greater volatility and less reliability in trend prediction. Indicator analysis. Shorter term time frames, 1M, 5M, 15M. The sell signal on 1M is contradicted by buy signals in 5M and 15M time frames. The exponential moving averages, EMAs, show rising trends as the time frame increases, especially noting positive crosses in all the observed time frames signaling bullish conditions. Medium to long-term time frames, 90M, 1H, 1D, 5D, 1WK all have strong buy signals, supported by bullish MACD divergences and rising RSI levels, indicating sustained bullish momentum. The RSI is notably high in the 1-hour time frame, 86.55, suggesting possible overbought conditions short-term but balanced by less extreme levels on 1-day and longer time frames. Recommendation. The optimal strategy considering the present data would be a buy recommendation based on strong bullish signals in the majority of analyzed time frames, especially on longer ones indicating a more sustained upward trend. Trading parameters. Entry point, current market price or slight retracement could offer a good entry. Considering the 5M time frame data could provide a precise entry if a minor pullback happens. Profit target. Place a take profit level at approximately plus 5% to plus 7% from the entry point. This captures a reasonable upside given the current uptrend while aiming for a practical and attainable profit in the short to medium term. Stop loss. Setting a stop loss around minus 2.5% to minus 3.5% from the entry point to maintain a balanced risk-to-reward ratio of 1:2 or better. Risks and considerations. The high RSI levels in the shorter time frames could suggest potential for short-term pullbacks, which can be productively used as entry point opportunities. Traders should monitor for any emerging bearish reversal patterns or significant breaks below the shortest time frames EMAs which could revise the trade dynamics immediately. Conclusion. Given this analysis, initiating a long position aligns with market data and expected outcomes, backed by a majority of bullish indicators and forecast derivatives across multiple key time frames. Ensure continuous risk assessment and readiness to adjust plans based on actual market movements once the trade is active. Analysis overview. We will analyze the key components of the trading data across multiple time frames, synthesizing the indicators and forecast derivative information to devise a strategic entry and exit strategy for cryptocurrency trading with a focus on managing risk effectively and aiming for a 1:2 risk-reward ratio. Key indicator analysis. EMA, exponential moving averages on shorter time frames, 1M, 5M, 15M. There is a consistent upward trend indicated by EMAs across the board. EMAs on daily and weekly time frames are mixed, signaling potential caution in mid to long-term bullish bets. MACD, moving average convergence divergence. The MACD across most time frames above 90M is bullish, 1H and up, except for 5D where MACD versus signal disparity raises caution. The daily MACD, even though negative, is regaining ground as it approaches the signal, suggesting a decrease in downward momentum. RSI, Relative Strength Index RSI over shorter periods, 1H and less, show potential overbought conditions except for 5M. Daily and weekly RSI values indicate a neutral to slightly bearish sentiment in longer terms. Derivative forecasts. Short time frame, 1M, 5M, 15M derivative forecasts show a mixed short-term view, calling for caution in immediate trades as forecasts vary within these short time spans. Longer time frame, 1H to 1WK higher aggregation time frames all signal strong buying derivatives. The sustained bullish derivative signals in long-range forecasts mesh with the overall bullish pattern and EMA trends noted earlier. Aggregated signals analysis. Despite the short-term variability, 15M showing a sell, medium to long-term indications show a strong buy, conflicting only with the 5D sell signal. Weighing these trends suggests higher confidence in medium-term positions held over several days but less than a week. Trading recommendation: buy. After analyzing all data points and matching them against a desire to hold a controlled risk profile, the following strategy is advised. Action: initiating a buy position may be opportune given the strength in aggregated longer-term buy signals, with the market sentiment leaning towards bullish. Take profit: aim for a conservative 5% profit from the entry point. The bullish trends on longer time frames support this as a realistic goal within a medium temporal scope. Stop loss: set a stop loss at 2.5% below the entry level to maintain a 1:2 risk-reward ratio. Given the volatile nature of cryptocurrencies, this tight stop is prudent. Summary: this trading position is predicated on interpreting mixed signals with a bias towards strong longer-term buying signals and overall bullish patterns. An emphasis is placed on loss mitigation with a very conservative stop loss, reflecting an approach optimized for risk management in a potentially volatile market. Analyzing the provided data, we see a mix of signals across different time frames, which suggests varying short-term and long-term trends and momentum in the market. Key observations from indicator data. 1. Short-term, 1M, 5M, 15M. RSI on the 1M indicates oversold conditions, which is usually a buying signal. However, both MACD and derivative forecasts suggest bearish momentum. The 5M time frame also confirms a selling sentiment as evidenced by the derivatives forecast. The 15M charts show a relatively high RSI, which could indicate overbought conditions, suggesting potential for a pullback, yet derivatives suggest selling. 2. Medium to long term, 90M, 1H, 1D, 5D, 1WK. Medium time frames like 90M and 1H still suggest bearish tendencies in the immediate term. Longer time frames, 1D, 5D, 1WK, portray a bullish outlook, deeply supported by their respective EMAs, MACDs, and rising RSI values, signaling a strong buy in the medium to long-term outlook. Recommendation: Given the bullish sentiment across daily, 5-day, and weekly indicators combined with strong buyer momentum and indicators suggesting a long-term upward trend, a long position would be beneficial. However, short-term indicators suggest potential volatility or a slight downturn. Trading strategy. Entry point: seek entry after any short-term consolidations or minor pullbacks, ideally when signals on the 1-5M time frame start showing convergence towards a bullish sentiment or when MACD across 90M or 1H starts trending upwards. Exit: take profit, point, set take profit at around plus 10 to 15% from the entry point. The strong bullish signals on the longer time frames suggest potential for sustained upward movement. Stop loss: place stop loss at minus 5% from the entry point. This conserves the capital against unexpected downturns while maintaining a risk-reward ratio of about 1:2.5 to 1:3. Final trade recommendation: buy based on the strong bullish trends observed in the 1D, 5D, and 1WK time frames, which overshadow shorter-term bearish signals. The final preliminary signal could be more towards a buy than hold, considering the stronger long-term positive momentum. Market analysis. Upon analyzing the given indicator data strictly from the perspective of effective risk management combined with profit optimization, it's clear that the situation is somewhat mixed across different time frames, which complicates entry and exit strategies. However, based on critical analysis of prevalent patterns, EMA crossovers, MACD signals, RSI levels, and derivatives forecast, here is a structured overview. Short term, 1 minute to 90 minutes time frame. Signals are predominantly bearish or sell signals, especially in the shorter time spans such as 1 minute through 15 minutes. RSI levels fluctuate significantly, indicating a degree of volatility. Specifically, in 1M and 1.5M, we observe a nearing of oversold and overbought conditions respectively. Medium to long term, 1H to 1WK time frame. Consistently, stronger buying signals emerge particularly in daily, 5-day, and weekly charts with bullish patterns and EMA crossovers. The RSI suggests caution in the 1-hour time frame where it is heading towards being overbought, but daily and weekly time frames offer more stable signals. Derivatives analysis. The 1-minute, 1-day, 5-day, and 1-week forecasts suggest strong or moderate buy signals, aligning with historical patterns observed. The compilation of different forecast models, first, second, and third derivatives, further justifies a bullish outlook in the longer time frames despite short-term volatility and sell signals. Final trading recommendation: buy. Entry should be cautiously timed, considering the current mixture of signals. Entry point: wait for a short-term retracement, especially in the 15M or 90M time frames, utilizing the current negative bias. This could provide a better entry price, aligning with a buy setup determined by 1D and longer trends that suggest upcoming upward momentum. Take profit and stop loss settings. To maintain a standard risk-reward ratio of about 1:2. Stop loss: set a stop loss at approximately 2 to 3% below your entry point to protect against unexpected downturns, especially given short-term volatility. Take profit: aim for a take profit level around 4 to 6% above the entry point. Given the bullish signals in longer time frames, there is a reasonable expectation that the asset's value will increase provided the market conditions do not change drastically. Caution: continue monitoring the short-term indicators and derivatives closely. If the bearish signals in shorter time frames become dominant, consider re-evaluating the hold time and possibly tightening the stop loss. Additional notes: maintain vigilance on macroeconomic news and other external factors that could abruptly affect market stability and asset prices. With bullish indicators in significant time frames, this approach balances between leveraging potential profits during bullish momentum and mitigating potential downside risks. This structured approach not only allows capitalizing on long-term bullish forecasts but also instigates careful monitoring of market changes that could necessitate trade adjustments. Based on the comprehensive review of the presented indicator and derivative data across all time frames, I have concluded with the following trade recommendation and risk management strategies. Trade recommendation: buy. Justification: 1. Technical indicators and chart patterns. Bullish indicators. EMA crossovers, particularly the golden cross observed across multiple time frames, 1M, 5M, 15M, 90M, 1H, 1D, 5D, 1WK, suggest strong bullish trends. MACD values above the signal in longer time frames, 90M, 1D, 5D, 1WK, support an ongoing bullish momentum. High RSI values, especially in the 15M, 79.00, and 1H, 85.95, frames, initially suggest overbought conditions which typically indicate strong buying momentum, although this warrants cautious monitoring for potential pullbacks. 2. Derivative forecast analysis. The signals from longer time frames like 1D, 5D, and 1WK overwhelmingly suggest a buy signal, with derivatives being positive, which reflects strong momentum. Short-term sell signals noted in durations like 1M and 15M reflect minor pullbacks or volatility. Risk management. 1. Stop loss, SL. A stop loss is set at 2% below the entry price to minimize potential downside exposure and manage unforeseen market volatility. 2. Take profit, TP. A take profit level is suggested at a 4% gain from the entry price to achieve a risk-reward ratio of 1:2, allowing profits to be realized while the market sentiment remains favorable. 3. Market monitoring. Continuous monitoring of RSI across time frames is necessary to avoid the pitfalls of potential reversals from overbought territories. Trading plan. Initiate buy, at the current or a slightly dipped price to gain better entry. Stop loss, set at 2% below your entry price. Take profit, set at 4% above your entry price. Review, closely monitor higher time frame trends and RSI levels, and adjust stop loss/take profit levels accordingly. Conclusion. The overall market signals, backed by multiple time frame analyses and derivative data, strongly point towards a bullish momentum in a short to medium term perspective. Using the defined stop loss and take profit levels will ensure that the trade is positioned to capture upside potential while effectively managing the inherent trading risks. Analyzing the given data incorporating both the technical indicators and derivatives information, we derive insights on optimal trading decisions. Assessment of time frames and indicators. 1 1-minute interval, indicators, EMA, MACD, and RSI, suggest a bearish momentum as seen by MACD below its signal and an RSI in the lower range. Short-term derivatives align with selling. 2 5-minute interval, both EMAs are demonstrating bullish momentum with rising MACD above its signal line and a healthy RSI. Derivatives forecast a strong buy signal. 3 15-minute interval, features an overbought RSI scenario, RSI at 79.87. Despite bullish patterns and positive MACD values, an overly high RSI typically warns of potential price retracements or consolidations. Derivatives, however, remain mixed on this. For 1 hour and 90-minute intervals, both intervals depict bullish signals in broader time frames with MACD above signal and favorable RSI, excluding the slight overbought condition in 1 hour. Derivatives for 90M are to buy, but 1H mixed, indicating some uncertainty. 5 daily and weekly intervals show strong buy signals, especially in daily derivatives forecasting significant bullish movement. Despite the bearish MACD in daily indicating a recent downturn, the MACD is narrower than its signal, depicting a potential reversal. Weekly interval bullishness is supported by solid derivative forecasts. 6 5-day interval, despite bullish chart patterns, the RSI is extremely low indicating strong overselling, which can be a buying opportunity if other signals align. Final recommendation, buy. Entry point, the market shows strong buying signals in multiple key intervals, particularly in the 5M, 1D, and 1WK intervals. A wise entry would be a slight retracement in the 1HR or immediate entry if there's market momentum continuation as indicated by 5M and 1D derivatives and patterns. Exit strategy, take profits at a take profit level at plus 5% to plus 7% from the entry point based on the strong upward potential indicated by daily and weekly derivatives. Stop loss, considering the volatile nature of cryptocurrency, setting a stop loss at minus 2.5% to minus 3.5% from the entry point would protect the trade against unforeseen downturns while maintaining a risk-reward ratio of approximately 1:2. Additional recommendations. Continuously monitor the 1HR and 1/5M intervals for early signs of deviation from the forecasted bullish trend. RSI should be particularly watched on the 15-minute interval to avoid staying in the trade during potential retracements. Keep an eye on market news and global economic indicators as cryptocurrency markets are quite sensitive to external influences which might affect the expected trade outcome. Based on the provided comprehensive trading data for the cryptocurrency, I will analyze and provide a detailed trading recommendation, focusing on managing risk and maximizing profit via optimal entry and exit points. Overall signal analysis. 1 short term, 1-15M. 1M, bearish signal with MACD below signal and RSI neutral, indicating potential pullback or consolidation. The derivatives also suggest a strong sell. 5M, strong bullish indications with the EMA lines well below current levels and a MACD crossover above signal. RSI is neutral, supporting a potential upside. 1/5M, this time frame moves into more extended short-term territory where the RSI is very high indicating overbought conditions which typically suggest caution, however, the MACD is strong. 2 medium term, 90M to 1H. 90M, a generally bullish outlook with MACD sustaining above the signal but a slight sell in the third derivative. RSI is only moderately high. 1H, mixed signals with RSI at extremely overbought levels and conflicting derivative signals. Caution is advised despite bullish MACD due to potential overbuying. 3 long-term, 1D, 1WK. All signals strongly favor bullish momentum with substantial buys across derivatives. However, RSI contrasts in the daily versus weekly where it is moderate in daily but lower in weekly, indicating some room for growth on a broader scale. Aggregated view, predominantly bullish on the longer time frames but mixed signals in the short to medium term. Final recommendation: hold with a lean towards preparing for a buy on confirmation of a stronger consolidated support in the short-term indicators or a cool down in the RSI on hourly charts. Entry strategy: target entry: look to buy after confirmed support around the 5M EMA 50 or if there's a notable pullback towards daily EMA 20, around 84,257.81 to 84,878.18 range. This range provides a decent entry point with recent historical support. Exit strategy: take profit and stop loss. Take profit: setting a profit target at a 2.5% increase from the entry point would leverage the current bullish momentum on the longer time frames. Stop loss: establish a stop loss at approximately 1.25% below the entry point. This allows for enough market movement while managing risk. Risk reward: the 1:2 risk to reward setup aligns with these targets, reflecting a conservative yet opportunistic approach, respecting both the volatility of the market and the need for profit maximization. Note: vitalize the need to adapt to any rapid changes in market conditions or new incoming data, as cryptocurrency markets are notably volatile. Use this planned approach as a guideline and conduct continuous surveillance on market trends and indicators. This balanced strategy should help manage risks effectively while positioning for potential profitable opportunities, aligning with the observed mixed but overall optimistic signals. Analyzing the provided data for optimal entry and exit points requires a comprehensive consideration of the indicators and derivative forecasts across various time frames. Indicator overview: short-term time frames, 1M, 5M, 15M. Mixed signals predominantly. The 1M time frame points towards a sell due to negative MACD relative to its signal and a low RSI, while 5M shows slight bullish indicators but divergence in MACD signals pointing towards indecision. The 15M time frame is strongly selling. Medium-term time frames, 1H, 90M. Generally mixed signals. The 1H time frame leans towards a buy based on EMA, but the MACD and RSI figures indicate overbought conditions which predict possible retracements. Long-term time frames, 1D, 5D, 1WK. Predominantly bullish indicators, especially on a daily basis and weekly basis. However, the 5-day indicators show some bearish sentiment. On longer time frames, MACD on daily shows divergence. The RSI at the weekly level is quite neutral. Derivatives and forecast analysis. Derivatives forecasts hint at a bullish sentiment for the longer time frames, strongly suggesting a buy for 1D, 5D, and 1WK, which may help counterbalance the bearish and mixed signals on shorter time frames. Aggregated signals and signal strength. There's a clear divergence in signals between short-term and long-term analyses. The long-term bullish signals could signify robust upward momentum which could potentially outweigh the short-term volatility or negativity. Trading recommendation: buy, with cautions. Entry point: given the strong long-term buy signals, entering the market can be considered if the price nears the lower EMA levels on daily charts, around 84,237.95, to optimize the entry point under the current bullish sentiment. Take profit point: setting a take profit at about plus 10% from the entry level provides a decent target while not being overly ambitious based on current volatility levels. It also aligns with the emerging bullish patterns on longer time frames. Stop loss point: given the mixed signals especially in shorter time frames, a stop loss around -5% from the entry point guards against potential downtrends and unforeseen reversals, complying with the necessary risk-return management of 1:2. Additional notes. Establishing the trade should be done cautiously, observing live market reactions, and any sudden shifts in market sentiment on the lower time frames should prompt reassessment of positions. Adjust both the take profit and stop loss thresholds based on real-time market developments. For instance, if MACD or RSI shows stronger signs of reversals, consider tightening the stop loss. This careful balancing between the indicators, derivatives forecasts, and risk management should provide a resilient trading strategy under current market conditions. Analyzing the data presented from the various time frames and derivative projections, we see mixed signals that necessitate a thorough analysis to optimize the trading strategy. Given the aggregation of signals and aiming for a 1:2 risk-to-reward ratio, we'll make a trading decision by aligning the trade with the more significant time frame trends and indicators. Key observation: 1. Longer-term views, 1D, 5D, 1WK. All these frames are showing a bullish movement with both EMAs and derivative indications supporting a buy action. This suggests a strong underlying bullish trend in the medium to long-term perspective. 2. Shorter-term views, 1M, 5M, 15M, 1H, 90M. Here, there's a notable conflict in signals with both buy and sell indications. Notably, the 15M and 90M frames and the derivative indicators from 1H suggest a potential temporary pullback or volatility in the shorter time frames. Trading strategy: given the bullish indications at longer time frames, we will prioritize these to define the overarching trade direction. However, recognizing volatility and conflicting signals in shorter intervals, it's prudent to wait for a more optimal entry point that mitigates risk from potential short-term fluctuations. Final recommendation: hold. Entry point consideration: look for any strong pullbacks or corrections that align closer to significant support levels, while keeping an eye on the 1M and 15M derivative indications switching to a stronger buy. Potential entry trigger: a solid bullish reversal pattern in the 15M or 1H chart post-pullback could be a good entry point. Risk management: stop loss: set the stop loss at a level that allows enough room for trading volatility but not too much to absorb unnecessary losses. A target of around 1.5% below the entry price can be a starting point. Take profit: considering the bullish outlook in larger time frames, set the take profit at around 3% above the entry price to maintain a minimum 1:2 risk-to-reward ratio. Additional considerations: monitor closely the MACD and RSI indicators across different frames for any signs of convergence or divergence that might suggest a strengthening or weakening trend. Adjust stop loss and take profit thresholds based on updated market data and indicator trends. Regular monitoring will ensure that the positions are aligned with the most current market dynamics. Though currently a hold position is recommended until a more favorable entry point is identified, maintaining readiness to act on short-lived opportunities is crucial in such dynamic market conditions. Based on the provided comprehensive indicator and derivatives data, let's summarize and analyze the key factors to determine a precise trading strategy. Summary of key indicators across time frames. Short term, 1M, 5M, 15M predominantly bearish signals with RSI values suggesting oversold conditions in the 1M time frame but moving towards neutral or overbought conditions in higher frames. MACD values generally below signal lines, indicating bearish momentum. Midterm, 90M, 1H mixed signals, with RSIs moving towards overbought in the 1H time frame, and a significant divergence between MACD and its signal line. Long term, 1D, 5D, 1WK bullish signals dominated with higher RSIs suggesting a growing positive momentum. Significant bullish crosses and double bottom patterns on charts hint at a potential reversal upwards. Derivative forecasts analysis. Short-term forecasts, 1M, 5M, 15M short-term forecasts show bearish trend, suggesting possible further decrease or high volatility. Mid-term forecasts, 90M, 1H mixed signals continue with a dominant bearish sentiment. Long-term forecasts, 1D, 5D, 1WK very strong buy signals, indicating favorable bullish momentum and potential for appreciable price increases. Final recommendation. Given the diverging indications in short-term versus long-term time frames, greater weight should be given to the long-term data given its broader impact potential and less susceptibility to transient market noises. Action: buy. Take profit point, 5%, implying you expect the market to increase further. Stop loss point, 2.5%, this manages your risk effectively while allowing for some market fluctuation. Rationale. Time horizon. Given the strong bullish signals in longer time frames, this trade is best suited for a slightly longer horizon, such as days to weeks. Risk management. The proposed 1:2 risk-reward setup allows a balanced approach, considering both the potential gains and the inherent risks involved in cryptocurrency markets. Market conditions. bearish short-term indicators may offer an opportune entry point, assuming a reversal confirmed by bullish long-term outlooks. Conclusion: given the strong long-term bullish signals, entering a buy position now can capitalize on potential upward trends. The mixed mid-term signals suggest that close vigilance is necessary, adhering strictly to the proposed take-profit and stop-loss thresholds to navigate potential volatility. Analyzing the provided data across different time frames and indicators, it appears that the cryptocurrency shows mixed short-term signals but predominantly positive longer-term outlooks. Here's a breakdown and final trading recommendation based on the analysis. Time frame analysis. 1-minute to 15-minute frames. Signals are generally bearish or mixed, with the EMA and MACD indicators showing signs of a downtrend or uncertainty. RSI levels suggest oversold conditions on the shorter, 1M, time frame, but on a 1-5M basis, they are borderline normal to high. Derivative forecasts predominantly signal short-term selling pressure, but since there is bullish pattern formation and RSI being very low in the 1M, it indicates potential for a quick reversal. 2 1-hour to 90-minute frames. Mixed signals with the MACD trending positive in the 1-hour time frame but negative in the 90-minute context. RSI is relatively high on the 1-hour, suggesting a possible overbought situation which could coincide with a temporary retracement. 3 1-day to 1-week frames. Clearly bullish across these higher time frames, with all showing double bottom and golden cross chart patterns, suggesting strong upward momentum potential. EMA, MACD, and RSI are stable and indicate healthy buying pressure, especially over longer periods. Final recommendation: buy. Considering the predominantly bullish outlook in the higher time frames, which usually have a more significant impact on the price direction, a buy position is recommended. It's expected that current short-term volatility may offer a good entry point, leveraging the strong upward potential indicated by long-term trends. Entry, take profit, and stop-loss strategy. Entry point: aim to enter during a short-term pullback exploiting the oversold condition as suggested by the 1M RSI of 21.40, targeting a price close to the lower short-term EMAs such as the 84,149.35 mark. Take profit, %. Given the high time frame uptrend and bullish patterns, set the take profit around the recent maximum or at least a 5% increase. Consider the EMA levels in the 1-day time frame with a possible target around the 84,854.54 mark, EMA 20, representing around a 1.3% upside from the EMA 10. Stop loss, %. Set a stop loss at about half the anticipated profit margin, aligning it with recent lows or a 2.5% decrease from the entry point. Given the high volatility of cryptocurrencies, slightly wider stop loss could prevent premature exits. Specifically, setting it near a 2.5% loss ties in with the risk-reward ratio of 1:2, optimally managing the trade's potential exposure. Conclusion: by focusing on these entry and exit points, the trade aims to exploit the longer-term positive momentum while still accounting for and mitigating the risks that come with short-term fluctuations within the cryptocurrency markets. Adjust the strategy based on any major news or market sentiment changes before execution. Final trade recommendation analysis. Based on the provided trading data and aggregate market signals, we need to consider the following key points to develop a strategy. 1. Short-term analysis, 1M to 90M charts. The majority of very short-term signals, 1M, 5M, show sell tendencies, although the 1-5M signals contradict this with a buy indicator. This suggests market volatility in shorter time frames. MACD indicators generally show convergence/divergence away from the signal lines, which further suggests an uncertain market in the very short term. 2. Medium-term analysis, 1H, 1D charts. Signals here are mixed with 1H showing a sell signal but moving to a strong buy signal in the 1D chart. The 1H chart indicates short-term overpurchase, RSI at 77.81, potentially signaling a brief correction. 3. Long-term analysis, 5D, 1WK charts. Strong buy signals are prominent, though the RSI and MACD values are mixed. The 5D chart suggests current undervaluation, RSI at 28.61, indicating good potential entry for longer-term positions. The 1WK chart supports this with strong bullish patterns and increasing MACD values suggesting a strengthening longer-term uptrend. Entry strategy and indicators. The 1D and 1WK charts provide compelling signals for a buy tactic, supported by bullish chart patterns and a recovering MACD above the signal line. Trade entry and exit strategy. Entry point, considering the analysis, an ideal entry would be shortly after a small dip, monitored through the 1H to 1D charts. Exit strategy, set a target of achieving at least a 2:1 reward to risk ratio. Take profit and stop loss recommendations. Stop loss, set the stop loss to trigger at a -2% move against the entry price to minimize potential loss. Take profit, set the take profit at approximately a +4% increase from the entry price to ensure a good reward to risk ratio. Conclusion and final signal. Based on the current long-term bullish market indicators and aiming to optimize entry on slight market pullbacks, a buy strategy is recommended. This is driven by stronger buy signals in higher time frame charts, which typically have more predictive power over market movements, offsetting the current short-term sell signals. Manage risk diligently by adhering to the prescribed stop loss and take profit levels. Always consider adjusting stop loss and take profit levels based on ongoing market conditions and news that may affect market dynamics. From the given cryptocurrency trading data, let's conduct a comprehensive analysis to deduce the optimal trading strategy under the given parameters. 1. Key insights from indicator analysis. Short term, 1M, 5M, 15M. EMA analysis. All short-term time frames suggest the EMAs are converging and beginning to form a bullish pattern as shorter EMAs cross above longer EMAs. MACD. Positive divergence is observed in the shorter time frames, particularly evident in the 1-5M time frame with MACD crossing above the signal line. RSI, the 1-5M time frame indicates a potentially overheated market, RSI of 73.92, which could suggest a potential pullback in the very near term. Medium term, 1H, 90M. EMA analysis. Bullish indications as shorter EMAs cross above longer ones. MACD, both show bullish divergence, though the MACD crosses signal some inconsistencies, with the 90M time frame showing potential sell signals. RSI, the 1H time frame demonstrates an extremely high reading, 78.96, suggesting possible overbuying and imminent consolidation or pullback. Long term, 1D, 5D, 1WK. EMA analysis. The EMA directions suggest bullish momentum is building up significantly, especially in the 1D and 1WK outlook where shorter EMAs are well above the longer ones. MACD. The longer time frames indicate strong bullish trends, particularly in the 1WK time frame despite a dip in the 5D view. RSI. Heavily varied RSI readings indicate specific opportunities, most notably the undervalued situation in the 5D time frame, RSI of 28.64, significantly oversold. 2 derivative signals. Overall derivative signals from different time frames primarily indicate buy with an overall final signal of hold. The variations in the shorter versus longer term signals suggest that while immediate bullish opportunities are apparent, risk from potential short-term pullbacks exists. 3 aggregated signals and final recommendation. Given the cumulative indicator and derivative signals, the convergence towards bullish movements in both short-term and long-term analyses, and taking into account the risk associated with the overheated RSI in shorter terms, the recommendation would be to final trading call, buy. Entry point, current level, convincing bullish patterns and derivative buy signals hit multiple checkpoints. Take profit, plus 15%. Stop loss, minus 7.5%. Risk/reward ratio, 1:2, adhering to the outlined risk management strategy. 4 additional considerations. Monitor the market closely for any rapid changes in the RSI and MACD, particularly on the 1H and 90M time frames. Adjust trades swiftly if reversal patterns are identified or if global macroeconomic events affect market sentiments. Analysis overview. The provided cryptocurrency trading data encompasses multiple time frames with various technical indicators and patterns, suggesting differing market sentiments. My role is to distill this complexity into a clear and actionable recommendation, carefully balancing risk management and profit optimization. Key indicator insights. 1-minute and 15-minute charts. These charts predominantly indicate sell signals, as evidenced by negative derivative figures and a recent MACD line below the signal line. 5-minute chart, contradicting the shorter frames, this shows a strong buy signal with positive derivatives and a bullish pattern. 1-hour and 90-minute charts, both provide mixed signals but are leaning more towards a sell, particularly on the 1-hour chart with a high RSI possibly indicating overbought conditions. Daily and weekly charts. These longer terms give strong buy signals. RSI levels are moderate to low, suggesting no overbought conditions, and MACD on the daily is recovering. The weekly derivative data also strongly supports bullish sentiment. Strategic recommendations. Given the disparity in signals, particularly between shorter and longer time frames, and aiming for a conservative approach with a 1:2 risk-reward ratio. 1 immediate trade, entry/exit. Action, hold. Rationale, the immediate time frames, 1M, 5M, 15M, show conflicting signals that do not confidently support entering a trade now. Waiting for alignment or clearer signals may be prudent. 2 long-term trade, entry/exit. Action, buy. Entry point, look for slight retracements on the daily chart as a potential entry point, ideally when the price touches or is near the EMA 20, currently at 84,855.20. Take profit level, set near the upper EMA 50 on the daily chart, around 87,795.23, reflecting approximately plus 3.5% potential gain. Stop loss level, set just below the daily EMA 20 or 84,855.20, to mitigate risk, approximately minus 1.75% potential loss. Risk-reward analysis. The suggested stop-loss and take-profit levels provide a risk-to-reward ratio slightly above 1:2, aiming for a more controlled exposure while allowing for reasonable profit capture. Conclusion. The overall final recommendation based on the comprehensive analysis and considering both the risk and reward scenarios would be to hold in the immediate term and prepare for a buy on a longer-term perspective as per the specified conditions. Monitoring the charts continuously to refine the entry based on real-time data feeds and ensuring alignment across different time frames will be crucial in executing this strategy effectively. Analyzing the provided trading data and indicators across different time frames, we can derive a trading strategy focused on maximizing profits while managing risk effectively. Here's a detailed assessment. Summary of key indicators and signals. Short term, 1M, 5M, 15M. The 1-minute and 5-minute indicators are leaning bullish despite a recent buy signal in the 1M forecast derivatives. The 15M forecast is a sell, indicating potential volatility in the extremely short term. Medium term, 90M, 1H conflicting signals where MACD is positive in the 90M time frame but forecast derivatives suggest a sell. The 1-hour indicators suggest sell action in derivatives, despite the high MACD. Long term, 1D, 5D, 1WK strong bullish signals with all showing buy in forecast derivatives. The EMAs are trending upward and MACD, although negative on the 1D, is greatly improving towards 5D and 1WK time frames, hinting at longer-term recovery and upward movement. Final recommendation, buy. Given the predominantly bullish signals on medium to long-term time frames and the supportive buy signs in most forecast derivatives, a buy strategy seems optimal. Short-term volatility should be watched, but it doesn't outweigh the stronger medium and long-term bullish indications. Entry point. Considering the current market sentiment and the bullish patterns across multiple time frames, entering the market at the current price would be recommended. Take profit and stop-loss strategy. Take profit, since the signals are stronger in longer periods, a profit of around 6% from the entry can be a reasonable target considering the volatility and bullish potential. Stop loss, to manage risks effectively, setting a stop loss at around 3% below the entry point will protect the investment from short-term fluctuations and any unforeseen downturns. Risk/reward ratio analysis. Aiming for a risk-reward ratio of 1:2. TP, take profit plus 6%. SL, stop loss -3%. This trade suggestion aligns with the goal of maximizing profits while limiting risks appropriately given the current market conditions and indicator interpretations from various time frames. Maintaining close monitoring on short-term market moves and adjusting the stops or taking profits when necessary will be crucial for the effective execution of this trade recommendation. Analysis. Upon closely examining the indicator data and derivative forecasts for various time frames, a comprehensive approach is necessary to reconcile conflicting signals and optimize our entry and exit strategies. 1 Short-term time frames, 1M, 5M, and 15M. The 1M and 5M indicators depict bearish momentum, which is corroborated by the derivative forecasts suggesting a strong sell. The RSI levels are divergent, with the 1M at a neutral level and the 5M quite low, oversold, potentially indicating an impending, although not immediate, reversal. The 1-5M time frame is nearer to a bullish bias as indicated by derivative forecast switching to buy in a slightly higher RSI, suggesting increasing positive momentum. 2 medium-term time frames, 90M, 1H. Signals here are varied, with the 90M showing mixed derivatives but ultimately a sell signal and the 1H showing consistent bearish derivatives despite bullish patterns indicated by long-term EMA alignment. 3 long-term time frames, 1D, 5D, 1WK. The substantial bullish signals in the 1D, 5D, and 1WK frames, all supported by larger time frame derivatives forecasting strong buy momentum, point to a promising upward trend over the longer run. Preliminary conclusion. Given the bullish tendencies in longer time frames alongside the conflicting shorter time frames, the recommendation is to wait for more alignment or a correction in shorter time frames to match the bullish sentiment observed in longer time frames. Final recommendation: hold. Reasoning: presence of significant long-term bullish indicators which are however not sufficiently aligned with short-term signals to justify an immediate entry, especially with the close range time frames, 1M, 5M, indicating potential short-term pullbacks or consolidation. Trade setup if conditions align. Entry point: look for alignment in shorter-term derivatives turning more neutral to bullish, or after observing a clear bounce off oversold conditions, RSI around or below 30, in the 5M time frame with supportive volumes. Stop loss: set a stop loss at approximately 3% below the entry point to protect against unforeseen reversals. Take profit: target a take profit at around 6%, to preserve a 1:2 risk-reward ratio. Adjust these parameters slightly depending on actual market conditions and volatility observed post-entry. Continue monitoring the market closely for the shorter time frame indicators and derivatives to turn more favorable, which would offer a safer entry with clearer probability of sustained upward momentum. Adjust the trading plan dynamically based on real-time evolution of technical indicators and global market sentiment. Analyzing and interpreting the comprehensive trading data provided for the cryptocurrency market, I'll form a strategic recommendation on whether to buy, sell, or hold, and suggest appropriate take-profit and stop-loss levels. Decision-making rationale. Short-term indicators, 1M, 5M. Predominantly bearish with the derivatives and EMA lines indicating a downtrend. Selling pressure is apparent with the RSI in oversold territory, however, impending rebounds could be short-lived. Mid-term indicators, 15M, 90M, 1H. Mixed signals with the 15M frame flipping into bullish territory while the 90M and 1H remain mixed or bearish. EMA trends on 1H are more positive, indicating possible mid-term recovery. Long-term indicators, 1D, 5D, 1WK. Strongly bullish with all relevant indicators, EMAs, MACD, RSI, suggesting a likely upward trend. Higher time frames are beginning to show more confidence in an offsetting bullish perspective for sustained growth. Final recommendation. Given the divergence between short-term and long-term forecasts, and the strong bullish trends observed in longer periods, the final recommendation leans towards a hold if currently invested but shifts to a buy if looking for entry due to the following. 1. EMA trends. Long-term EMAs are bullish with potential resistance levels being tested. 2. MACD and RSI. Long-term perspectives are strong, especially on daily and weekly charts. 3. Derivative trends. Strong buys on daily through weekly derivatives align with a reinforcing bullish sentiment. Entry, exit, and risk management. Entry point, now, or at any slight short-term dip, given the 1M and 5M oversold conditions. Take profit, recommend setting take profit at approximately plus 15% from entry price based on the potential tested on the upside and previous local highs. Stop loss, set stop loss at minus 7.5%. This maintains a healthy risk-reward ratio of 1:2, protective against unforeseen dips but not too tight to get stopped prematurely. Conclusion. This analysis points to a purchase, advocating for entry given current market conditions, with the bullish outlook more convincingly established in the long-term trends. However, vigilance on short-term indicators is vital, as they can provide signals for potential exit points or to adjust stop-loss/take profit levels in response to changing market dynamics. Trading should remain dynamic, adjusting strategies as new data becomes available. To formulate an effective trading strategy based on the provided comprehensive data, we need to analyze the significant elements indicating bullish or bearish trends across multiple time frames. This analysis will enable us to determine an optimal entry point, establishing suitable take profit, TP, and stop loss, SL, thresholds to maintain a risk-reward ratio of approximately 1:2. Analysis overview. 1. Short-term signals, 1M, 5M, 15M, 90M predominantly bearish with sell derivatives across these time frames. The RSI values in the 1M and 5M frames indicate oversold conditions, but persistence in negative momentum suggests a downward trend in very near-term prices. 2. Mid to long-term signals, 1H, 1D, 5D, 1WK show mixed signals but generally more bullish, particularly on daily and weekly time frames. Notably, both daily and weekly charts show strong buying derivatives and bullish chart patterns. Given that short-term signals suggest a current downtrend while mid to long-term signals forecast a stronger bullish stance, the optimal strategy for entry should consider waiting for shorter-term indicators to show signs of reversal aligning with the long-term bullish outlook before entry. Trading strategy. Entry point: look for short-term stabilization. Either 1M or 5M indicators should start showing less intense sell derivatives, followed by the initiation of upward momentum. A practical trigger might be an increase in RSI above the 35 to 40 range coupled with MACD line crossing above the signal line on the 1M or 5M time frame. Exit points: take profit and stop loss. Take profit, TP set at 3% above the entry price. This is based on the volatility reflected in the large intraday price ranges noted in the bullish long-term indicators. Stop loss, SL place at 1.5% below the entry price to ensure risk containment. This close SL is based on the uncertain short-term volatility but should trigger only if the estimation of the trend reversal is incorrect. Risk/reward ratio: the TP and SL settings maintain a ratio of approximately 1:2, which is aligned with the target trading strategy. Final recommendation: conditional buy. Analyze real-time data continuously and enter a buy position once the short-term indicators show reversal signals as outlined. The current overarching signal is a hold, transitioning into a buy upon the fulfillment of the specified conditions, ensuring a solid entry point better aligned with the bullish medium to long-term outlook. Always consider ongoing market developments, including external economic indicators and sector-related news, which could affect market sentiment and hence cryptocurrency prices. Trading in cryptocurrencies involves high risks and should be approached with caution. Analysis of trading data and indicator alignment. 1. Short-term observations, 1M, 5M, 15M, 90M, 1H. EMA, MACD, and RSI, the short-term moving averages, 1M to 90M, show a mixed pattern around crucial EMAs, 10, 20, 50, while the MACD across these frames shows mixed signals with predominant sell recommendations. Notably, RSI levels are divergent, ranging from an oversold state, 20.33 on 1M, to nearing overbought, 71.63 on 1H. Patterns and chart formations: predominantly bullish patterns like double bottoms and golden crosses are observed, which usually indicates potential upside. 2. Long-term observations, 1D, 5D, 1WK. EMA, MACD, and RSI. Here, the EMA values on the daily and weekly charts suggest smoother trends, though on a 5D and 1WK frame, we are seeing reactions to possibly earlier overextensions as shown by previous high EMA 50s. MACD values are more positive in these longer frames, with a bullish crossover in 1 week. RSI levels are showing neutrality on daily but are gearing toward an oversold situation in longer frames, suggesting that a potential uplift in prices could be supported if investor sentiment gains bullish traction. 3 derivatives and aggregated signals. There is a clear inclination towards buying in the 1D to 1WK frames, while short-term frames exhibit weaker selling or transitionary bullish signals. Trading strategy and recommendation. Entry strategy. Given the bullish convergence in the long-term frames and some short-term indicators suggesting a recovery, or bottoming out, entering at the current position could capitalize on expected upward price movements. Exit strategy. Take profit and stop loss. Take profit. Identify a price level from the 1WK EMA10 at approximately 87,839.52, which provides a reasonable target, suggesting around 4% potential gain from the present level. Stop loss. Set around the 1WK EMA20 at 87,736.87, slightly beneath the planned take profit level, limiting potential loss to about -3.5%, which closely aligns with a risk/reward ratio of 1:2. Final recommendation: hold to buy. Action. The indication based on the current analysis leans more towards holding for now but preparing to buy on confirmations of strength in shorter-term indicators matching the bullishness in the long-term forecasts. Considerations: watch shorter duration MACDs and EMAs to pivot positively, reinforcing the bullish signals in long-term forecasts. Await the potential settling down of volatility which the mixed short-term signals might be indicating. This balanced strategy should adequately manage risks while capitalizing on potentially profitable long-term bullish trends, with adherence to smart entry and exit points as outlined. Given the comprehensive indicator and derivative information presented, let's synthesize the data to discern an optimal trading strategy for the current market conditions in cryptocurrency. Analysis. Short-term time frames: 1M, 5M, 15M, 90M, 1H. 1M to 90M, we see a mixture of buy and sell signals, which reflects high volatility and short-term uncertainty in the market. Specifically, the 1-minute time frame indicates to sell, while the 15-minute and 5-minute suggest buying. Here, there is no clear direction, suggesting limited reliability in these shorter time frames for a stable entry point. 1 hour, the derivative data suggest a strong sell, supported by an extremely high RSI of 74.88, indicating overbought conditions which may soon reverse. Longer-term time frames: 1D, 5D, 1WK. 1 day to 1 week, these signals are predominantly bullish, with strong buy derivative signals alongside technical indicators such as golden cross and double bottom patterns, which are traditionally bullish. All three of these time frames show significant buying strength and a forecast for upward momentum, particularly with the 1-week time frame showing an encouraging rise in the MACD above its signal. Final recommendation. Signal, buy. Given the bullish signals on the longer time frames and the alignment across various technical indicators, a buy strategy is preferred. The shorter time frames reflect typical intraday volatility and should be considered for timing the entry rather than the overall direction. Entry point. A prudent entry would be waiting for a minor retracement on the 1-hour or 90-minute charts to take advantage of any short-term pullbacks, optimizing our entry point. Risk management, take profit and stop loss. Take profit, set at plus 5%. Aiming for reasonable yet profitable returns aligns with the market's current bullish signals on a longer time frame. Stop loss, set at minus 2.5%. This maintains a strict limit on potential losses, ensuring we adhere to a 1:2 risk-to-reward ratio. We are seeking to minimize exposure if the market's condition changes unexpectedly. Conclusion. Take advantage of the current bullish momentum indicated by long-term technical indicators and derivatives data, while maintaining strict risk controls with a protective stop loss. This strategy balances the aim of maximizing profit from positive market movements with the discipline of risk management necessary in the volatile realm of cryptocurrency trading. Based on the comprehensive analysis through multiple time frames and derivative forecasts provided, a conclusive trading recommendation can be made with corresponding entry, stop loss, and take profit strategies guided by a risk-reward ratio of approximately 1:2. Analysis breakdown. Time frame concordance. Short-term indicators, 1M and 5M frame showing weakness through negative MACD divergence and low RSI, prompting near-term caution. Medium-term indicators, 1-5M, 9-0M, 1H mixed, with some bullish signals on a 1-5M frame but bearish or mixed in the 9-0M and 1H frame. The 1-5M time frame suggests positive momentum, but the higher frames, 9-0M, 1H, offer more weight towards caution with selling pressure evident. Long-term indicators, 1D, 5D, 1WK predominantly bullish with all showing consensus on a buy signal. This includes a strong bullish divergence in the MACD and high RSI levels, pointing towards sustained upward potential over the long term. Derivative forecasts. Short-term derivatives indicate sell signals on minute-based derivatives but contradict themselves in the slightly longer 5M derivatives. Medium to long-term derivatives, strong buy signals are evident ranging from the daily to weekly derivatives, supporting the long-term bullish narrative highlighted through other indicators. Recommendation. Final trading signal, buy. Entry point, the market sentiment from 1D, 5D, and 1WK indicators and derivatives demonstrate a robust bullish trend. Entering when short-term sell-offs occur, taking advantage of any small dips as entry opportunities, would be optimal. This could likely be when the price touches the lower bounds of any short-term EMA indicators or upon short-term RSI dipping nearer to or below 50 without contradicting long-term buy signals. Take profit. Percentage, set take profit at approximately plus 15%, based on the combined momentum suggested by the bullish EMAs and MACD divergence on daily and weekly charts. Logic: this percentage aligns with reaching near the higher long-term EMA levels, fitting within the observed volatility and market trend strength. Stop loss percentage: place stop loss at minus 7.5%, half of the take profit to maintain a 1:2 risk-reward ratio. Logic: this limit ensures exit before any major reversal is solidified, underpinned by a fall below critical short-term moving averages or any consistent bearish reversal in MACD and RSI signals on the 1M or 5M time frames. Summary: in essence, the strategy is to take a bullish position with protection against short-term volatility. Given the strong long-term buy indications amidst short-term fluctuations, our approach prioritizes capturing prolonged upward trends while safeguarding against potential transient downturns, a method aligned with maximizing returns in a dynamic cryptocurrency market environment. Analysis: short-term, 1M, 5M, 15M, indicators and derivatives analysis. 1M, mixed indicators with a slight bearish tilt due to the negative MACD and its proximity to the signal. The RSI is roughly neutral. Derivatives generally suggest buying, but EMA trends are downward. 5M, notably negative MACD divergence and a very low RSI indicate a possible oversold condition but bearish strength in the short term. The derivative signals lean towards buy but are risky in the immediate term. 15M, mixed condition with the MACD above the signal but declining, and the RSI is neutral. The derivative signals predominantly suggest buying. Mid to long term, 1H, 1D, 5D, 1WK, indicators and derivatives analysis. 1H, strong negative derivative signals and high bullish MACD divergence suggest trying bottom formation, yet the overall signal is bearish short term. 1D, strong bullish indicators with all derivatives leaning to buy signal, EMAs point to uncertainty awaiting rebound, RSI is neutral. 5D, strong bullish patterns despite a comparatively lesser bullish MACD, inconsistent with signal interpretation, but overall a long-term buy. 1WK, powerful long-term bullish strength with high derivative signals all suggesting a buy. MACD strongly positive relative to its signal, RSI leans a bit bearish. Summary: while there is a mixed signal in the short term, the overall medium to long-term signals point towards a more bullish outlook, suggesting potential buying opportunities as long-term prevailing conditions are stronger and suggest growth. Recommendations: final signal, buy. Entry point, look for stabilizing or slight pullback in the 1H or shorter duration charts to enter, to capture a favorable entry price. Risk/reward analysis: to maintain a risk-reward ratio of 1:2. Take profit, plus 10%. Stop loss, minus 5%. Reasoning: entering during a slight pullback or stabilization period increases the chances of buying at or near a short-term low. 5% stop loss mitigates risk from unexpected downturns, while a 10% profit target respects the analysis showing potential for growth, providing space to capitalize on longer-term bullish indicators. Please ensure to adjust strategies according to actual market developments and personal risk tolerance. Keep an eye on macroeconomic indicators and market sentiment, as cryptocurrencies are highly volatile and susceptible to broader market movements. Analyzing the comprehensive indicator and derivative data for the various time frames, the trading strategy must prioritize an aggregate understanding to align with our risk management and profit maximization approach. Quick summary of key signals. Short term, 1M, 5M mainly bearish signals are observed with selling recommendation prevalent in derivatives. Medium term, 15M, 90M, 1H, a mix of signals. 15 minutes time frame is bullish, whereas 90 minutes and 1 hour indicate a bearish sentiment. Long term, 1D, 5D, 1WK strong bullish signals across daily and weekly time frames, reflected in both technical indicators and derivative forecasts. In-depth analysis. Moving averages, EMAs. The shorter time frames show a downtrend or volatility, but the crucial insight comes from higher time frames, daily and weekly, where the EMAs are solidly bullish. MACD, short-term frames display negative and volatile MACD values, suggesting a sell or hold. Meanwhile, the larger time frame MACDs suggest bullish market conditions, although the disparity between the MACD and its signal line in some cases, like 1D and 5D, suggests careful monitoring is required. RSI values range widely across time frames, however, longer durations show stable optimism, apart from the very high RSI on the hourly frame, which might suggest a temporary overbought scenario. Trading recommendation. Given the mixed signals in the short term and medium term but a stronger bullish trend in the long term, it's prudent to focus on a position that benefits from the expected long-term upward trend while mitigating short-term volatility. Final trading decision, buy, with a longer-term perspective in mind, considering more weight is given to daily and weekly signals. Entry point, current or near a minor dip in price on the hourly charts, if available. Take profit, TP. Percentage, plus 15% from entry point. Rationale, aligns with the general trend strength observed in the daily and weekly data, providing room to capture profit from expected upward movements. Stop loss, SL. Percentage, minus 7.5% from entry point. Rationale, balances the trade's exposure to short-term fluctuations and ensures preservation of capital. Maintains a risk-reward of approximately 1:2, which aligns with the set trading ability to absorb risks while aiming for substantial returns. Trade monitoring. Frequent evaluation, primarily on the 1 hour and daily frames. It is crucial to monitor any emerging trends or reversal patterns. Adjustments: be ready to adjust TP and SL based on emerging patterns and market sentiment shifts. Regular updates from derivatives might be insightful for these adjustments. This strategy is tailored to maximize gains from the visible bullish patterns on larger scales while protecting from potential short-term downturns or volatility that the smaller time frames suggest. Analyzing the provided trading data for cryptocurrency, the objective is to delineate a trading strategy that maximizes profit potential while managing risks effectively. Here's a detailed examination of the information. Indicator and derivative analysis. Short-term indicators, 1M, 5M. Both moving average indicators show a bearish pattern with a sell recommendation based on derivative trends. The MACD is below the signal line, and RSI values are non-extreme, confirming no strong momentum. Medium-term indicators, 15M, 90M, 1H. The 15M data significantly stands out with a bullish recommendation and is supported by derivative trends. The 90M and 1H intervals suggest a sell position due to negative derivative metrics, despite a bullish pattern from moving averages and RSI on 90M and high RSI on 1H suggesting overbought conditions. Long-term indicators, 1D, 5D, 1WK. The 5D data shows mixed signals. Despite bullish pattern indicators, derivative trends suggest sell. Given that RSI is very low, it indicates potential undervaluation or overselling. The 1D and 1WK intervals both show strong bullish indicators on all fronts, aligning with moving averages, MACD, and RSI metrics. Final recommendations. Signal summary. Short-term indicates sell, mid-term is mixed, while long-term leans significantly towards buying. The mixed signals in the short and mid-term create uncertainty, suggesting higher risk in immediate entries. Recommended approach. Long-term entry, considering the strength in the daily and weekly derivatives and indicators, a long-term entry is recommended. Enter when short-term negativity reduces and aligns more consistently with bullish trends from the long term. Entry point, ideally, enter during a short-term consolidation or slight bear moment when the price is closer to the lower EMAs, e.g., near EMA 20 or EMA 50 on a 1H or 90M chart, while ensuring daily and weekly are still bullish. Take profit and stop loss. Take profit, TP aim for a plus 6% profit based on the entry price. Stop loss, SL limit losses with a minus 3% stop loss strategy. Conclusion. Final trading decision, wait for a more favorable entry aligning with short-term stabilizing toward bullish trends to reinforce and ensure consistency with long-term positive signals. Risk/reward strategy, given the setup aligns to a 1:2 risk/reward ratio, it entails a wise anticipation of market fluctuations, offering a conservative yet potentially profitable position. Reminder. This recommendation is strictly analytical based on provided data. Be vigilant to market changes, as cryptocurrencies can be highly volatile. Any trading activity should be conducted within an established risk management framework. Analysis Overview. The data provided shows a mix of bullish signals across various time frames, with notable discrepancies in the shorter-term intervals such as 1-minute and 5-minute frames, and stronger buy signals in the longer-term frames, 1 day, 5 days, 1 week. This indicates a potential overall upward trend but necessitates careful entry to manage risk properly given the mixed shorter-term signals. Indicator and derivative synthesis. 1 short-term, 1M, 5M, 15M, 90M, 1H. There is volatility as seen in the fluctuating MACD and RSI levels. However, 1 minute shows a strong buy, indicative of immediate upward momentum which contrasts the selling pressure seen in the 90-minute and 1-hour frames. This suggests potential for short-lived rallies but also indicates risk due to sudden changes. 2 medium to long-term, 1D, 5D, 1WK. Stronger buy indicators supported by bullish patterns like the double bottom and golden cross. Despite the bearish MACD in the daily frame, the RSI levels are mostly neutral to slightly low, indicating the potential for upside without excessive overbought pressures at the moment. Final recommendation: buy. Entry strategy. Optimal entry point: given the strength of longer-term indicators, entry around current price levels seems justified. However, observing the 1-hour or 90-minute frame for slight dips could provide a safer entry. Ideal entry would be a pullback near the EMA20 of the 1-hour chart, approximately around 83,356.90. Exit strategy: take profit and stop loss. Take profit: set take profit at around 3 to 5% above the entry price. Given current volatility, capturing short to medium-term gains is advisable. For a more precise target, aim just below the 1-day EMA20 at 84,856.19. Stop loss: given the discrepancies in the short term and to maintain a risk-reward ratio of about 1:2, place a stop loss at 2 to 2.5% below the entry price. This would protect against unexpected downturns while capitalizing on upward trends. Risk management. Keep the volume of trade conservative relative to your total investment capacity to mitigate potential losses. Monitor the RSI and MACD closely, especially on the 1-hour and 90-minute frames, for any signs of bearish reversals, and maintain flexibility to exit quickly if indicators significantly change. Conclusion. With the prevalent bullish indicators on more significant time frames and the potential for an upward trend, a meticulously timed entry with protective stops should optimize the risk-reward balance. Ensure constant vigilance on short-term trends to adjust strategies as needed. Analysis Overview. Upon careful examination of the trading data provided across various time frames and the derivative market signals, we can form a strategy grounded on the critical indicators showing us the likely market directions. The exercise focuses on aligning the strategy to identify optimal entry and exit points for cryptocurrency while maintaining a risk-reward ratio of approximately 1:2. Key Indicator Analysis. 1. EMA, Exponential Moving Average. Shorter time frames, 1M, 5M, 15M, show close EMA values suggesting a consolidating market. Longer time frames, 1D, 5D, 1WK, show a divergence in EMA readings, which means there could be a potential reversal or more robust trend forming. 2. MACD, Moving Average Convergence Divergence. Most time frames indicate bullish convergence except the 90M and 1H charts displaying significant bearish divergence. 3. RSI, Relative Strength Index. Majority of timescales are indicating relatively neutral to slightly overbought conditions, particularly notable in the 1H chart. 4. Derivative signals. Predominantly bullish across most time frames except for some bearish signals on the 90M and 1H charts. Recommendations. Based on the synthesis of the data. Trading decision by. Rationale. despite some bearish signals in the shorter time frames, 90M, 1H, overall sentiment from EMA, MACD, and aggregated indicator data leans bullish. Especially crucial, longer time frames, 1WK, 5D, 1D, show a stable bullish trend, which often dictates more substantial market movements. Entry point. Optimal entry. Consider entering around the current market price or at a slight pullback. Particularly, monitor the 15M chart's near-term movements, as its signals are strong and less volatile than the 1M counterparts. Exit strategy: take profit and stop loss. Take profit, aim for a profit of around plus 4% from the entry point. This target respects the trends observed in the 1D and 1WK charts, providing a reasonable expectation for short to midterm gains. Stop loss: set the stop loss at minus 2% from the entry point. This limit not only upholds our strategic risk-reward ratio of 1:2 but also accounts for possible volatility dictated by the observed bearish signals in the shorter 90M and 1H time frames. Final remarks. While the immediate analysis says hold, the bullish sentiment in significant time frames and crucial indicators, coupled with maintaining a strict stop-loss strategy, justifies a buy recommendation. It's essential to continuously monitor the trades closely and adjust strategies as more data becomes available and market conditions evolve. Maintain vigilance, and remember to reassess positions regularly to adapt to any sudden market changes that could affect the risk-reward balance initially calculated. Analyzing the presented data, a comprehensive approach is required to draw an effective trading recommendation for crypto assets, specifically focusing on timing entry and exit in relation to the signals derived from multiple time frames and indicators. Trend analysis. Short term, 1M, 5M, 15M all showing a buy signal with positive momentum on indicators such as MACD and RSI trending above midpoint in many cases, although some values exceed typical zones indicating potential overbought conditions, especially the 1M RSI at 83.37. Medium term, 1H, 90M conflicting data here, while 1H indicators suggest careful watching with a borderline overbought RSI, the 90M frame hints at a downturn as indicated by all sell signals, showing the necessity for cautious approach. Long term, 1D, 5D, 1WK these signal buy across all derivatives and indicators are indicating a significant strength in the market moving upwards despite oscillations in MACD readings, especially highlighting a strong buy in longer time frames. Macro signal analysis. Derivative forecasts primarily indicates stronger buying in longer terms, which might suggest momentum could pick up, leading to an appreciation in the asset's valuation. Aggregated signals, predominantly buy signals across the board except for the current hold status, suggesting a potential shift in momentum may be initiating. Final recommendation. Considering the aggregation of signals, especially the bullish patterns identified in all periods and significant buy calls in longer time frames. Action, recommend switching the status from hold to buy. Entry point, optimal entry would be at current market price, acknowledging a consistent bullish trend across multiple timelines. Take profit, set at approximately plus 5% from entry price. Given the volatility and the strength observed, this is a conservative estimate while positioning for notable gains. Stop loss, recommend setting at minus 2.5% from entry price to manage potential declines and guard against unexpected market movements, maintaining the desired risk-reward ratio of about 1:2. Risk management. Adhering to this recommendation ensures a balanced approach towards maximizing profit while mitigating risk effectively. Entering the trade under these settings allows levering up the current favorable market conditions as indicated by long-term bullish trends and the overall sentiment led by indicators and derivatives forecast, while keeping potential losses under strict control. Always monitor market conditions actively, as cryptocurrency markets are notoriously volatile, and adjust the take profit and stop loss thresholds dynamically if significant changes in indicator readings or market news demand such flexibility. Analyzing the provided comprehensive dataset for cryptocurrency trading across multiple time frames, patterns, and technical indicators, here's a detailed synthesis. Key observations. 1. Short-term momentum, 1M, 5M. Negative momentum with EMA alignment, MACD below signal, and declining RSI suggesting short-term bearish trends. Derivative forecasts indicate sells, aligning with the momentum. 2. Intermediate momentum, 1.5M, 9.0M, 1H. Mixed signals with 1.5M showing a bullish divergence, but 9.0M and 1H show bearish alignments especially potent due to the high RSI in the 1H suggesting possible overbought conditions. Derivative signals are predominantly selling except for a buy in 1.5M. 3. Long-term view, 1D, 5D, 1WK. Strong buy signals based on EMA, MACD, and RSI levels, despite a temporary bearish signal in the 5D frame. Dominant long-term indicators and derivative signals align mostly to buy positions. Aggregate insight. Short-term indicators suggest caution, forecasting potential for further downward movement or market corrections in the near term. Long-term indicators display strength and upward potential, making them more favorable for entries respecting longer trade horizons. Trading strategy and recommendations. Final signal, hold on immediate short-term trades. Prepare to buy for medium to long-term investment, adjusting entry on slight corrections or stronger buy signals in the short-term data. Entry point, look for stabilization or slight pullbacks in the immediate short-term data, 1M, 5M, combined with consistent buy signals in 1.5M or more robust affirmations in hourly data. Take profit, aim for approximately 5% to 10%, considering the volatility and momentum in the cryptocurrency involved. Stop loss, set stop loss around 2.5% to 5%, based on entry point calibration ensuring a risk-reward ratio near or better than 1:2. Action steps. 1. Monitor short-term indicators closely, wait for improved signals or stabilization in the 1M and 5M frames. 2. Set alerts and triggers, given the quick changes in crypto markets, setting up alerts for RSI dips, MACD shifts, and EMA crossovers in the 1M or 5M frames improves entry timing. 3. Review daily and weekly charts, for broader confirmation before executing trades mainly guided by the stronger long-term buy signals. Caution: the cryptocurrency market is volatile. Always reassess the trading environment and adapt strategies continuously based on real-time data and market conditions. Let's analyze the provided data and come up with an optimal trading strategy based on the indicators and derivatives for each given time frame. 1. Indicator analysis. Short time frames, 1M, 5M, 15M. The indicators at 1M and 15M suggest bullish patterns with some signs of a reversal as evidenced by the EMAs and MACD indicators beginning to converge or showing strength above their signal lines. However, the 5M time frame is bearish according to the MACD and RSI values. Medium to long time frames, 90M, 1H, 1D, 5D, 1WK. These indicators generally support a buying strategy over the longer term. RSI values are moderately high in the 1H and 1WK charts, indicating emerging overbought conditions but remain within thresholds that do not discourage a bullish stance in the medium to long term. 2. Derivative analysis. Short term, 1M, 5M, 15M. Conflicting signals with buy driven at 1M and 15M, but a distinct sell signal at 5M. Long term, 1H, 1D, 5D, 1WK. Predominantly buy signals on the long-term outlook, suggesting underlying strength. 3. Aggregated trading signal. The mixed indications in shorter intervals contrast sharply with the stronger long-term bullish signals. Given the variations, a nuanced approach tailored to risk tolerance and time horizon is optimal. Final trading recommendation. Recommendation: buy. Entry point: look to enter a trade based on current levels or a slight pullback using the 1H time frame for a more precise entry as it begins to show relief from the overbought conditions. Using the 1D and 1WK charts for additional confirmation of continued bullish sentiment. Take profit point: set a take profit at approximately 5% above the entry price. This is reasonable given the potential indicated by the longer frame bullish signals and typical volatility of cryptocurrency markets. Stop loss point: place a stop loss at about 2.5% below the entry price, providing a risk-reward ratio of about 1:2. This matches the risk management target and protects against undue losses should short-term bearish signals take effect. In conclusion, the recommendation to buy is supported by strong long-term indicators despite short-term noise, ensuring adherence to a strategy that tolerates moderate risk for higher potential returns. As always, continuous monitoring and readiness to adjust stop-loss/take profit levels in response to market movements or news are crucial. Analyzing the provided data across multiple indicators and time frames, the final trading recommendation needs to balance recent trends and momentum across short-term, 1M, 5M, 15M, medium-term, 1H, 90M, and long-term, 1D, 5D, 1WK, signals. Let's break down the essential components. Indicator analysis. 1 short-term, 1M, 5M, 15M. EMA and MACD indicates mixed signals with particularly short-term bearish tendencies, EMA closeness in 1M and 5M, negative MACD values in 5M. RSI, neutral to slightly bearish levels, all below 50 except for 1M slightly above. Derivatives forecast, suggesting short-term sells in the 1M and 5M time frames, however, there seems to be a shift towards buy in the 15M time frame. 2 medium term, 1H, 90M. EMA and MACD, bearish signs are evident with a declining MACD from the 1-hour time frame, however, 90M shows bullish signs. RSI, overbought in 1H, 78.86, relatively neutral towards bullish in 90M, 56.70. Derivatives forecast, strong selling signals in these time frames. 3 long-term, 1D, 5D, 1WK. EMA and MACD, mixed signals. 1-day has moderate bullish inclinations and strong buys in derivatives, while 5D and 1WK time frame is strong bullish over the long-term horizon. RSI, 1D is neutral, 5D is oversold, suggesting possible reversal. 1WK RSI is neutral, indicating hesitancy for strong momentum. Derivatives forecast, strong buying signals that increase with the time frame. Final recommendation. Given the data, the aggregate signals align mostly with a slight bullish inclination over the long term, countered by short and medium-term variability. Notably, the medium-term strong sell signals and high RSI in 1H suggest potential near-future downturn risk. Final action, hold. Trade setup, if entering trade. Entry point, look for entry if short-term indications shift noticeably to buy, particularly if 1H and 90M align with more bullish signals. Take profit, set at +3% to +5%. Benefited by medium to long-term bullish outlooks. Stop loss, set at -1.5% to -2.5%. Guarding against potential downturns and short-term instability. Risk-reward ratio, approximately 1:2, adhering to the outlined trade strategy for managing risks effectively. Continued monitoring of indicators, especially RSI levels and MACD divergence across all timelines, will be crucial to catch early signs of shifts in market momentum, to adjust this recommendation timely. Analyzing the data provided, the majority of indicators across various time frames exhibit bullish patterns, double bottom, golden cross, and bullish derivative forecasts, particularly in the longer time frames, 1D, 5D, 1WK, which supports a potential upward trend in the longer term. However, short-term signals on the 1M and 5M time frames suggest bearish tendencies. This mismatch indicates a need for a cautious approach. Analysis and interpretation. 1 short-term view, 1M, 5M, and 15M. All these time frames have bearish forecasts suggesting immediate caution. RSI levels are relatively low or median, not indicating strong buy signals in immediate short term. 2 medium and long-term view, 90M, 1H, 1D, 5D, 1WK. All these time frames except 90M and 1H have bullish forecasts, with RSI levels in a moderate range but trending towards oversold, particularly in 5D and 1WK, which might suggest a good momentum gathered for a buy opportunity in the longer run. MACD across these time frames shows divergence, with the MACD signal leaning towards bullish crossovers, which further validates a longer-term bullish trend. Trading strategy and final recommendation. Final recommendation: buy. Entry point: recommend entering trades on pullbacks or minor dips as given by the bearish short-term signals. This allows for an advantageous entry price in anticipation of long-term gains. Take profit, TP. Calculate TP levels by aiming for a 0.5% to 3% increase from the entry price, considering long-term bullish trends. Adjust according to market behavior after entry. Stop loss, SL. Set the SL at a level that is approximately 1.5% below the entry price to maintain a risk-reward ratio close to 1:2, aligning with the 1WK time frame RSI, which suggests readiness for upside while protecting against downward spikes. Monitoring and adjustment. Closely monitor market behavior post-entry, especially how the price responds to MACD and EMA levels on medium to long-term charts. Adjust TP and SL levels based on emerging patterns, RSI and MACD values on all considered time frames. Summary. Given the bullish signs in the medium to long-term time frames despite bearish short-term indicators, a buy strategy with a controlled entry on market dips is recommended. This balanced approach allows participation in anticipated upward trends while keeping risk under control based on rigorous analysis of multi-time frame data you've provided. Adjust the exact price points of TP and SL based on real-time market data at the time of execution. Analyzing the data provided, we need a clear strategy to target our trades effectively, while managing the risk. Given the mixed signals across various time frames for different indicators and derivatives, we will synthesize this information carefully to arrive at an optimal recommendation. Insight from the indicators and derivatives. 1 minute to 15-minute time frames. These shorter time frames mostly suggest sell signals, indicating some immediate bearish pressure. 90-minute to 1-hour time frames. Here again, short-term analysis leans towards sell, suggesting that bearish sentiment holds in the intraday scopes. 1 day to 1 week time frames. These longer time frames suggest strong buy signals, indicating potential bullish momentum building up over the longer term. Key observations. 1 short term, under 1 hour bearish trend, perhaps due to immediate market reactions or transient factors. 2 long term, daily to weekly bullish trend, which might be reflective of underlying positive fundamentals or macroeconomic factors affecting the asset. Strategy. Given the mixed signals, a prudent approach will balance the negative short-term technical indicators with the positive long-term outlook. We aim for trades aligning with the stronger, more sustained signals. Aggregated decision and final recommendation. Final recommendation: cautious buy. Reasoning: the strength of the longer-term buy signals, daily to weekly, which typically have more sustainability, outweighs the short-term sell sentiment. The cryptocurrency market tends to be highly volatile, and longer trends can give us a safer and more reliable trajectory. Trade execution. Entry point: initiate a buy order at the current price level. Exit: take profit. Point: set a take profit level at a plus 6% to plus 8% price increase from the entry point. This is because the longer trends support growth, and we can capitalize on any positive swings supported by bullish indicators in daily and weekly charts. Stop loss point: set a stop loss at minus 3% from the entry point. This allows us to manage the downside given the short-term bearish signals, respecting a 1:2 risk to reward scenario. Risk management. Ensure the trade size aligns with the risk tolerance of the trading account. Monitor the trade actively, especially watching how the market responds to upcoming economic events or high-impact crypto-specific news that might affect sentiment. Recap. This balanced approach of venturing into a cautious buy maximizes the potential gains indicated by strong long-term bullish signals, while closely managing risks highlighted by short-term volatility. Always continue to assess market conditions as they evolve. To provide a solid trading recommendation, it's crucial to dissect and synthesize the data based on the indicators and derivatives across all time frames effectively. Comprehensive analysis. 1 shorter time frames, 1M, 5M, 15M, 90M, 1H. EMA, MACD, and RSI are mostly showing bearish signals in these time frames, with the MACD below its signal line for most, except certain bullish inclinations in 1M EMA readings. Patterns and charts. Bullish patterns like double bottoms and golden crosses contradict the bearish indicators a bit, suggesting some volatility and potential for reversals. Derivative forecasts predominantly suggest a sell other than the 1M, which has contradictory signals. 2 longer time frames, 1D, 5D, 1WK. EMA, MACD signal, and RSI are more bullish in these time frames, especially noticeable in the daily and weekly charts. Derivative forecasts give a strong buy signal, aligning with the bullish pattern identification. Decision criteria. Given the data, while shorter time frames lean towards bearish/sell signals, longer time frames are bullish/buy. This suggests possible short-term volatility or pullback, but a longer-term uptrend. This poses a classic dilemma in trading, timing the market for entry and exit while accounting for different signals based on varied time frames. Final recommendation: hold. Given the inconsistency between shorter and longer time frames, the safest decision here is hold, as recommended by the aggregated preliminary signals. If considering future entries, entry point: aim to enter once there's more alignment among the shorter time frames towards a buy signal, particularly if they begin aligning with the clearly bullish longer time frame trends. Stop loss: set a stop loss at approximately 3% below the entry point to protect against unforeseen sharp declines. Take profit: target a take profit at around 6% above the entry point to maintain a favorable risk-reward ratio of 1:2. Monitoring needed. Should short-term indicators, 1H and below, start mirroring the bullish sentiment of longer time frames, 1D and above, reconsider the position to switch from hold to buy. Conversely, if long-term starts reflecting the bearish sentiment of short-term indicators, reassess for potential selling strategies. In summary, this hold stance provides a cautious approach amid mixed signals, awaiting a clearer trend conformity across all analyzed time frames for safer and more strategic trading decisions. Analyzing the extensive trading data you've provided, we are presented with a mixture of bullish patterns, RSI levels, MACD divergences, and forecast derivatives across different time frames. It's critical to integrate these inputs, focusing on consistency in signals across time frames and the overall market sentiment to make a well-informed trading decision. Let's break down the essential signals and formulate the trading recommendation considering the suggested risk-reward ratio and the given financial market conditions. Key observations. 1. EMA trends. Short term, 1M, 5M, 15M. There are discrepancies in EMAs where shorter periods like 1M and 5M indicate falling prices but slightly rebounding. Mid to long term, 1H, 1D, 5D, 1WK. The EMAs suggest more stability, with longer EMAs, 1WK, showing strong bullish sentiments, although the 5D indicates some volatility. 2. MACD. Most time frames exhibit variance between the MACD and the signal line, with notable bearish divergence across shorter periods, 1H, 90M, 15M, and mixed signals in longer durations, 5D and 1WK. 3. RSI levels. RSI values suggest oversold conditions on extremely short time frames, 1M, significantly under 30. More balanced or slightly overbought levels in longer time frames, 1H, 1D. 4. Derivative and aggregate signals. Derivatives, strong buy signals on longer durations, 1D, 1WK, versus sell signals on short and mid-term scales, 15M, 90M, 1H. Aggregated signals, present a conflicted view with sales on shorter durations and buys on a daily and weekly basis. Trading strategy. Considering the mixed signals, and aiming for a risk-reward ratio of 1:2. Entry strategy. Entry point, look to enter on bullish confirmations on shorter intervals, possibly corroborated by a rise above EMAs or a positive crossover in MACD values close to real time. Exit strategy. Profit target, considering the bullish long-term signals, setting a profit target at plus 5% from the entry might be reasonable, utilizing longer time frame EMA levels as dynamic resistances. Stop loss. Setting stop loss at -2.5% from entry compensates for the volatility and protects against downward trends noticed in the short and medium-term signals. Final recommendation: cautious buy. Condition: enter the trade if and only if real-time short-term signals align with this analysis, showing clear signs of reversals or bullish momentum that confirms the potential forecasted by daily and weekly scales. Monitor closely. Given the conflicts in the data across time frames, it is advisable to actively manage this trade, looking for signs of trend confirmation or reversal in the 90M to 1H intervals. Note: cryptocurrency markets are highly volatile. Continuous monitoring and flexible, real-time decision-making are crucial to adapting to sudden market changes. Keep abreast with the latest market news and global economic indicators for shifts that could affect the crypto market. Analyzing the provided cryptocurrency trading data, let's evaluate the conditions for making a strategically optimal trading decision based on your aim of achieving a risk-reward ratio of 1:2 and our insights from the indicators and derivative forecasts. Indicators and patterns review. 1. Short-term, 1M, 5M, 15M, 90M dominantly bearish short-term signals, particularly evident in the derivatives that suggest selling. The moving average convergence divergence, MACD, across these time frames shows dominance by bearish sentiments, except in the 90M chart. However, there exists a significant negative orientation in 1M, 15M, and 90M towards selling based on derivative data. 2. Medium term, 1H mixed signals with a bearish undertone in derivatives but strongly bullish according to RSI and pattern indications. 3. Long term, 1D, 5D, 1WK strong bullish signals from derivative forecasts, all suggest buying, and generally constructive indicator readings such as RSI balancing off and MACD becoming less negative compared to the signal line over daily and weekly frames. Recommendation: given the above cumulative analysis, with strong bullish signals especially from longer time frames and midterm evasion from overbought conditions, RSI values are reasonable. There is an impending suggestion that the asset might have bottomed out and is gearing for an upward trajectory. Trade strategy. Action: buy. Entry point: given the current market conditions and signals, a prudent entry would be closely monitoring the 1-hour to daily charts and entering upon confirming bearish exhaustion, possibly when MACD lines cross upwards or derivative negative numbers reduce on shorter time frames. Take profit. Aim for a +4% to +6% from the entry point. This aligns with typical resistance levels identified through the EMA values or previous price interaction zones. Stop loss, set at -2% to -3% from the entry point. It's crucial from a risk control perspective to exit the trade should the market sentiment dramatically shift against the bullish bias we perceive. Risk management. The proposed risk-reward setup, approximately 1:2 to 1:3, will protect the trading capital from heavy downside risks while exploiting the upside potential which seems evident from larger time frame analyses. Adjust the exact percentages based on real-time volatility assessments and liquidity conditions. Final thoughts. This recommendation to buy is predicated on aligning with stronger, longer-term bullish signals while acknowledging and preparing for possible short-term fluctuations. Always ensure this strategy fits within a broader diversified portfolio strategy to mitigate specific risks associated to trading in unpredictable assets such as cryptocurrencies. Analyzing the trading data across various time frames, we see a range of bullish and bearish patterns and some disparities in the signals provided by the different indicators and time frames, which make this a complex decision. Synopsis of indicator and signal analysis. Short term, 1M, 5M, 15M overall bearish, with notable negative readings from MACD derivatives and RSI levels towards the lower range. Medium term, 90M, 1H mixed signals, with the somewhat bullish indicating through RSI in 1H though with bearish derivative movement. Long term, 1D, 5D, 1WK predominantly bullish, especially on 1-day and 1-week time frames which exhibit buying derivatives and relatively healthier RSI levels. Especially, the 1-day and 1-week MACD indicators turning positive. Key observations. EMA analysis. Long-term EMAs, 1D, 1WK, indicate the price could be attaining support after a possible recent dip, considering the previous higher EMA readings. Shorter-term EMAs suggest price consolidation or slight downtrend. MACD and RSI, varied readings, RSI near or above typical oversold conditions in 5M and 15M, but closer to overbought in 1H, MACD readings in shorter periods trend lower, suggesting near-term price pressures. However, long-term MACD readings demonstrate impending price recoveries. Chart patterns. Persistent bullish patterns like double bottom and golden cross across multiple time frames indicate underlying strength. Trade recommendation. Final signal, hold. Given the conflicts in short-term versus long-term signals and the preliminary final signal being hold, it appears prudent not to initiate a new position right now. The market seems poised for more definitive movement after resolving the current divergences in indicators. If entering a position, should enter a buy position, if considering the longer-term bullish outlook since the risk-reward and derivative trends on 1-day and 1-week frame favor a buy. Entry point, should consider an entry post-confirmation of upward momentum perhaps when shorter-term time frames like 15M align more evidently with 1D/1WK signals. Take profit, plus 4%, given the volatility and expected range movement from a typical trading session. Stop loss, minus 2%, preserving a risk-reward ratio close to 1:2. Rationale, long-term signals dominate the bullish stance, providing some compensatory buffer against short-term downtrends. Caution. Initiating a trade based purely on heavily divided signals could expose to higher risk. Monitoring the market for a clearer, coherent signal alignment across time frames would be ideal before entering. Furthermore, it makes sense to adjust positions dynamically as new data points, especially MACD and RSI adjustments, come in. Final trade recommendation, buy. Analysis. 1 short-term trend, 1 minute to 15 minutes indicators and derivatives are mostly bearish with selling pressure indicated on the shorter time frames of 1 minute to 15 minutes. This is further supported by negative MACD diversions, although the EMA patterns aren't too far off, suggesting brief volatility rather than a strong downward trend. 2 medium-term trend, 1 hour to 90 minutes. There is a split between the 1 hour and 90 minute time frame where the MACD and RSI indicators start showing a bullish reversal on the 1 hour frame, but still reflect selling on the 90 minutes. This implies that our entry should favor a circumstantial shift towards a bullish momentum which could be forming in the medium time frame. 3 long-term trend, 1 day to 1 week strong buy signals are evident across all long-term indicators from daily to weekly time frames. Particularly notable are the bullish patterns and high derivative forecasts which suggest a significant upcoming uptrend. EMAs demonstrate convergence towards bullish setups and RSI levels are stabilizing and leaning positive in longer frames. Conclusion. The overarching bullish indicators in the long-term analysis overshadow the bearish sentiment seen in the short-term analysis. Given that the bullish trends are supported from 1 day to 1 week forecasts and considering the current bullish derivative indicators on the 1 day and longer time frames, a buy signal is recommended. Entry, take profit, and stop loss recommendations. Entry point, wait for a small retracement on the short-term charts, if possible, near the 1 hour EMA or slightly below the current price for better entry. Take profit, plus 2% to plus 4%. Based on the EMA 10 and EMA 20 trends, a reasonable expectation is that a rise of around 2%-4% from the entry point is achievable within the rising trend. Stop loss, -1% to -2%. Given the potential volatility indicated, and to ensure a strict risk management strategy with a risk-reward ratio close to 1:2. Risk management notes. Due to the discrepancies in the short-term and medium-term trends, maintaining vigilant stop-loss strategies is crucial. Adjustments should be based on upcoming trading signals or significant shifts in derivative forecasts. The trade should be re-evaluated if there are any significant deviations in market conditions or external influential factors affecting the crypto markets generally. Final analysis and recommendation. Upon examining the provided trading data, we notice discrepancies between shorter term, 1M, 5M, 15M, and longer term, 1D, 5D, 1WK, indicators and derivative forecasts. The shorter time frames primarily indicate bearish sentiments whereas longer time frames suggest bullish trends with stronger buy signals. It is crucial to notice that medium-term, 1H, 90M, signals are mixed, reducing clarity for trade initiation. Key observations. EMA comparison. Exponential moving averages. The EMAs indicate a downward trend in the very short term but an upward or potentially stabilizing trend in the longer term. In the 5-day and 1-week frames, the EMA 10 is above EMA 50, indicating bullish momentum building up over a longer period. MACD, moving average convergence divergence. Notable divergence in short-term vs long-term views. Short-term frames show negative MACD, hinting at potential price decreases or volatility. In stark contrast, longer time frames like 1D and longer show positive momentum building up. RSI, relative strength index values under 30 in short-term, 15M frame, suggest oversold conditions, which typically precede a rebound or suggest that the asset is undervalued temporarily. Meanwhile, 1H and longer frames show healthier RSI close to or over 50, indicating more stable conditions. Patterns and charts. Consistent bullish patterns across all timelines indicate underlying positive sentiment about the asset across different market participant perspectives. Derivative forecasts. They are dominated by strong buy signals in daily and weekly frames, which generally influence longer-term price movements more reliably compared to minute-based forecasts. Conclusion. Given the comprehensive analysis, while acknowledging the risk associated with short-term volatility, the dominant bullish signals in the longer-term frames coupled with oversold conditions in the shorter time frames suggest that a buy recommendation is prudent. Trade setup. Entry point, current or near current price, monitoring short-term frame for slight recovery signs, thereby ensuring buying near the potentially lowest point. Take profit. Percentage, approximate plus 10 to 15%. Justification, achieving a minimal but substantial gain considering the currency's movements and general volatility. Stop loss. Percentage, approximate minus 5 to 7.5%. Justification, limiting the risk in a volatile market, corresponding to half the expected gain, aligning with a 1:2 risk to reward strategy. Additional notes. Monitor the short-term indicators such as the 1H and 90M MACD and RSI closely post-entering to ensure that they flip to more bullish signals, confirming alignment across time frames. The trade should be reviewed continuously for any significant news or market sentiment shift due to the high volatility commonly associated with cryptocurrencies. As always, our strategy remains under close scrutiny based on ongoing market developments and internal risk management practices. Analyzing the data you provided, let's make a detailed recommendation based on the indicators, patterns, and derivative forecasts. Indicator analysis. 1. The shorter time frames, 1M, 5M, 15M, and 90M, are generally showing either bearish or neutral signals. Particularly notable. MACD values across these time frames except the 15M show negative divergence from their MACD signal lines, suggesting a potential downtrend or correction in the short term. However, RSI values are leaning towards oversold regions in shorter time frames, 5M and 15M, which often predicts a potential rebound. 2. In contrast, longer time frames, 1H, 1D, 5D, 1WK, are demonstrating strong bullish signals. The daily, 5-day, and weekly charts all show a bullish configuration in EMA trends and very bullish MACD divergences, suggesting a steady longer-term uptrend. Positive RSI values around or slightly above neutral in the longer time frames support the notion of sustained strength. Derivative forecasts. 1. Bearish in shorter time frames, 1M, 5M, 15M, 90M, which means immediate future might see price declines. 2. Strong buy signals in longer time frames align with the bullish interpretations from the indicators and highlight potential sustainable gains. Final recommendation. Given the mixed signals between the short-term and long-term time frames and their respective indicator and derivative data. Final decision, based on a more weighted approach towards longer-term bullish signs, a buy recommendation is suggested. Entry point: since the shorter time frames are showing bearish signals which could lead to temporary price dips, entering when these indicators start showing signs of reversal, such as RSI exiting oversold territories or MACD cutting its signal line upwards, could provide a good entry point. Look to enter at a slight dip which might be around current levels or slightly lower. Risk management: take profit and stop loss. Take profit. Considering the bullish momentum in longer time frames, setting a take profit level of around 15 to 20% above the entry point would be reasonable. Stop loss. Given the volatility and mixed signals, a stop loss at 7 to 10% below the entry point would maintain a healthy risk-reward ratio closer to 1:2. Conclusion: with conflicting time frame signals, great caution is advised, and it's crucial only to proceed if you are comfortable managing the suggested risk. The trade leans towards exploiting the longer bullish trends predicted by higher time frame charts and forecasts while carefully observing short time frame volatility that could be used as strategic entry points. Based on the comprehensive analysis of the indicator and derivative data across multiple time frames, we can deduce an advisable investment strategy for the cryptocurrency in question. Analysis summary: 1 short term, 1M to 15M. 1M, strong buy signals across most indicators, indicating a micro-bullish trend. 5M, conflicting signals with a predominance of sell, suggesting short-term volatility or a possible small correcting dip. 15M, signals are suggestive of a bullish stance but mixed with the 5M time frames recommendation. 2 medium term, 1H to 90M. Both the 90M and the 1H frame indicate sell. There's likely a slowing in momentum, warning of a possibly more significant pullback or consolidation. 3 long term, 1D to 1WK. Strong buy signals, particularly in the 1D and 1WK time frames, indicate a long-term bullish trend. The 5D signals, although bullish, show less robustness compared to 1D and 1WK. Final recommendation: given the mixed signals in the short and medium term but strong bullish signals in the longer time frames, a strategic approach would be to enter a buy position with caution towards a longer horizon, capitalizing on the significant bullish sentiment shown in the 1D and 1WK time frames. Entry, stop loss, and take profit strategy. Entry point: considering the strong buy in 1D and 1WK time frames, an entry point at or near current market price would be ideal as long-term indicators are positive. Stop loss: set a stop loss at approximately -2% below the entry point. This limit is recommended to protect from short to medium-term volatility reflected in the smaller time frames. Take profit. Initial target, plus 4% from the entry point. This level corresponds to twice the risk, 1:2 risk-reward ratio. Extended target: if the market exhibits continued strong bullish momentum, trailing the stop loss to break even or securing partial profits at plus 4% and letting the remainder run could capture further gains. Adjustment might follow further analysis of ongoing market conditions. Considerations: risk management: continuously monitor the market for changes, especially the short to medium-term indicators that might affect the long-term outlook. News and market events: stay vigilant for any significant news or events that might impact market sentiment and price action. This strategy is designed to leverage strong long-term bullish sentiment while mitigating potential adverse effects from short-term fluctuations. The recommended approach focuses on managing risks effectively while aiming for a profitable outcome. Analysis: the trading data presents a complex scenario with mixed signals from various time intervals, indicating a significant divergence in short-term and long-term trading dynamics. Short-term analysis: 1M, 5M, 15M data. Bullish chart patterns: notwithstanding bullish patterns detected, double bottom, golden cross, immediate signals from the 1-minute and 5-minute derivatives forecast suggest a bearish outlook with recommendations to sell. Indicators: RSI values are at fairly neutral levels in shorter time frames but demonstrate possible overselling on a 5-minute and 15-minute scale, showing potential for a near-term lift. However, MACD line below the signal in shorter frames, 1M and 5M, confirms bearish momentum. Mid to long-term analysis: 1H, 1D, 5D, 1WK data. Bullish indicators and patterns: MACD in notably longer time frames, 1D, 5D, 1WK, and daily time frames are above their respective signal lines, strongly indicating bullish momentum. RSI: the RSI on the 1-hour frame is slightly in the overbought territory, which could suggest a potential pullback. The daily and 5-day frames present a more balanced view, conducive for bullish outlooks. EMA: long-term EMAs show that the market might be currently underpriced, which may suggest a strategic buying opportunity. Combined insight and signal: the derivatives trend suggests more confidence in buying long-term while cautious about short-term declines. Seeing that the aggregated signals are divergent with a final preliminary signal as hold, a keen assessment of the risk-reward configuration is essential. Final recommendation: buy, with precaution. Entry point: ideal entry: wait for a slight pullback on shorter time signals to cool off or enter during stabilization after the current sell signals in 1M and 5M frames lessen. Exit points: take profit: set the take profit level at approximately plus 20% from the entry level based on long-term bullish momentum from daily, 5-day, and weekly analyses. Stop loss: set the stop loss at approximately -10% from the entry level, safeguarding against any unforeseen downturns from volatile shorter time frame movements and mitigating risk. Risk-reward strategy: the suggested 1:2 risk-to-reward ratio aligns with setting a 10% stop loss and a 20% profit target. This configuration cautiously capitalizes on the positive long-term outlook while hedging against short-term uncertainties. Note: given the inherent volatility and complexities associated with cryptocurrency trading, continuous monitoring and adjustment of your positions in response to significant price actions or news that could impact market sentiments are recommended. Analysis summary. Based on the provided indicator and derivative data across various time frames, here is a detailed analysis of the current cryptocurrency trading environment. Short-term analysis, 1 minute, 5 minutes, 15 minutes. 1 minute time frame shows conflicting signals with negative MACD yet a bullish pattern. The derivatives strongly suggest buying opportunities. 5-minute and 15-minute time frames are displaying negative divergences in MACD, indicating potential upcoming weakness, despite bullish chart patterns and mixed derivative signals. Intermediate term analysis, 90 minutes, 1H. 90-minute and 1-hour charts show a bearish tone with significant negative values in MACD compared to their signals. The derivative forecast also suggests that selling actions are favored. However, RSI levels are moderate to high, suggesting underlying strength. The combined signals indicate a cautious approach in this range. Long-term analysis, 1D, 5D, 1WK. The daily, 1D, 5-day, 5D, and weekly, 1WK, charts show strength with bullish patterns, improving MACD values, favorable derivatives, and rebounding RSI levels. Notably, the 1-day chart provides a strong buy signal, considering its RSI is neutral and MACD is improving relative to its signal. Final recommendation: hold with monitoring for entry. Given the conflicting signals across different time frames, the optimal decision would be to maintain a hold position currently, but with a close watch on the long-term charts for a potential entry. The longer-term bullish signals are compelling, but the short-term volatility demands restraint. Proposed entry strategy. Entry target: monitor 1-day and 5-day time frames closely. Consider initiating a buy position if the 1-day RSI trends towards 60 without crossing into the overbought territory and if MACD continues to improve. Risk management. Stop loss: set a stop loss at around 3% below the entry price to safeguard against unexpected downturns. Take profit: aim for a take profit level at 6% above the entry price to maintain a 1:2 risk-reward ratio. Continuous monitoring. Given the dynamic and sometimes unpredictable nature of cryptocurrency markets, it's crucial to reassess these positions frequently, considering the rapid changes in market conditions indicated by intraday trading patterns and derivative signals. This strategic recommendation provides a balanced approach by mitigating risk during uncertain short-term conditions and capitalizing on the stronger signals in longer time frames. The trading data provided includes a variety of time frames and comprehensive technical indicators and derivative forecasts. To formulate a strategic trade recommendation, I will evaluate the major trends from short-term to long-term, focusing on key indicators such as EMA, exponential moving average, MACD, moving average convergence divergence, RSI, relative strength index, and the derivative signals. Time frame analysis. 1 minute to 15 minutes. The 1M, 5M, and 15M derivatives and MACD signals indicate bearish momentum, suggesting potential selling pressure in the immediate short term. However, the very short time frames can be prone to rapid fluctuations and may not fully represent a robust entry point for a structured trade based on a balanced risk-reward strategy. 1 hour and 90 minutes. The 1H frame signals a sell on derivatives but shows a bullish MACD momentum and high RSI, suggesting overbought conditions which could imply an upcoming reversal or pullback. The 90M data corroborates a sell signal showing a strong divergence in MACD and high sell pressure in derivatives. Daily to weekly. From the 1D, 5D, and 1WK time frames, there is a strong bullish indication from derivatives and patterns. MACD is turning favorable especially in higher time frames, 5D and 1WK, despite RSI in the 1D time frame being at midpoint, which still offers room for upward movement before reaching overbought territories. Consolidation and recommendation. Based on the aggregation of data, the shorter durations suggest a temporary pullback or sell pressure, however, with MACD in some cases showing lesser divergence and derivative forecasts highlighting sell. The longer durations indicate substantial bullish momentum, suggesting any near-term declines may be temporary and could present buying opportunities on DIPs. Final recommendation: hold. Reason: immediate signals mix with short-term indicating potential decline and long-term projecting growth. A hold status is recommended until clear confirmatory signals for either bullish continuation or a reversal are observable. Risk management. Stop loss. Set a stop loss at approximately 3% below the current market price to safeguard against unforeseen sharp declines. Take profit. Set a take profit at around 6% above the current market price to ensure a favorable risk-reward ratio of 1:2. This recommendation takes a cautious approach, focusing on entering the market at more defined and optimal conditions based on a convergence of signals across multiple time frames. Monitoring the market for stability or confirmation of trend continuity in the coming days will be crucial. To evaluate the trading strategy and provide an optimal recommendation, let's break down the trading data and forecast derivative information. Indicator and derivative analysis. 1 short-term time frames, 1M, 5M, 15M. Consensus, bearish to neutral. These shorter time frames are generally indicating bearish trends, sell signals, except for a buy on the 15M derivative. Actions, caution advised. These frames suggest market instability or immediate downside risk, suitable for day traders or those looking for quick entries/exits. 2 medium-term time frames, 1H, 90M. Consensus, predominantly bearish. Both 1-hour and 90-minute frames advise sell, with RSI being higher in the 1H, indicating potential overbought conditions. Actions, consider reducing exposure or maintaining existing positions with close monitoring. 3 long-term time frames, 1D, 5D, 1WK. Consensus, bullish. Strong buy signals on longer time frames with rising EMAs and significant MACD indications suggesting a potential upside. Actions, suitable for long-term investors preferring less frequent, more strategic positioning. Current market position, hold. Given the divergences in short-term and long-term outlooks, the preliminary final signal of hold is justifiable since market conditions do not clearly favor one single direction convincingly. However, to position appropriately for potential future trends. Final recommendation. Action, moderate buy, with a cautious approach focusing on long-term potential. Entry, take profit and stop-loss strategy. 1 entry, await a small pullback or stabilization in short-term frames, i.e., entry around current prices or slightly lower if a quick drop happens due to short-term sell signals. 2 take profit. Set profit targets beginning from a plus 5% move from entry, extending up to plus 10% based on continuous assessment of long-term bullish continuation. 3 stop loss. Set stop loss at around minus 2.5% from entry point, maintaining a strict risk management protocol to protect against unexpected downturns, particularly noted in shorter time frames. This trading plan aims to leverage long-term bullish signals while protecting against volatility and downturns shown in shorter time frames. Such a strategy necessitates vigilant monitoring and readiness to adapt to rapid changes typical of cryptocurrency markets. This suggested approach manages risk with a ratio slightly better than 1:2, aligning with prudent trading practices. Risk management. Continuous monitoring of macroeconomic indicators and market sentiment is essential. Adjust the positions as necessary in response to significant news or market events. Diversification should also be considered, not overcommitting to a single market or asset. Analyzing the detailed cryptocurrency market data you've provided, including multiple time frames and derivative signals, here's an optimized trading recommendation taking into consideration risk management and maximizing profit potential. Analysis overview. Shorter time frames, 1M, 5M, 15M. These show mixed signals with dominant bearish derivatives and weak RSI values, indicating immediate selling pressure. However, MACD differences and signal readings suggest that decisions can't solely rely on short-term fluctuations. Longer time frames, 1H, 1D, 5D, 1WK. The trend reverses in these larger intervals, showing strong bullish derivative signals and generally healthier RSI signals. Bullish chart patterns and EMA trends indicate a more stable growing trend, potentially due to fundamental or broader market sentiments. Aggregated signals. The weights of the buy and sell signals varied, but longer time frame indicators being generally more stable and reliable hint at a more bullish overall sentiment. Final recommendation, buy. Entry point. The optimal entry point would be during a momentary low following the 5M or 15M chart sell signals. This would capitalize on the short-term selling pressure while aligning with the long-term bullish trend. Exit point. Take profits at a take profit level at 3 to 5% above the entry price. Given the recent higher RSI figures and bullish MACD readings on daily and weekly charts, this provides a reasonable upper threshold before possible overbought conditions and reversals. Stop loss: set a stop loss at about -1.5% below the entry point. This level ensures exposure is limited while still giving the trade room to breathe through common intraday volatility. Risk-reward assessment: with a stop loss at -1.5% and a take profit at 3 to 5%, the trade maintains a healthy risk-to-reward ratio around 1:2 to 1:3.3. This positioning respects the balance between capital preservation and profit-taking, aligning optimally with the overall trading strategy for your risk appetite. Additional advice: continuously monitor, given the rapid pace of change in cryptocurrency markets, staying updated with patterns especially on shorter intervals, 1M, 15M, around your entry point will be critical. Adjust strategy as necessary. If the derivative trends on the 1H or more significantly on the 1D chart shift towards negative, re-evaluate the positions accordingly. Be prepared for volatility. Cryptocurrency markets are inherently volatile. Ensuring that the defined stops and profit levels are adhered to will be essential in managing sudden price movements. This strategic approach leverages mixed signal data to time a market entry that captures growth while managing downside risk effectively. Analyzing the provided data requires a deep dive into both the indicator trends across various time frames and the corresponding derivative forecasts. Let's summarize key insights and derive a trading action. Key indicator analysis. 1. Short-term time frames: 1M, 5M, 15M, 90M. Predominantly bearish with RSI values indicating oversold conditions particularly in 5M and 15M. MACD across 1M and 90M indicates bearish momentum as it is below the signal. 15M shows mixed signals, MACD crossing above signal indicating potential reversal, but still a lower RSI. 2. Medium to long-term time frames: 1H, 1D, 5D, 1WK. Bullish indications in longer time frames: 1D upwards. MACD in 1D and 5D, despite currently being negative, shows a cross above signal indicative of a potential bullish reversal. Strongest bullish signals are on the weekly chart with both EMA and MACD indicators. 3. Derivative analysis. Shorter time frames, 1M to 90M, suggest strong selling pressures. Positive buying signals are clear in longer time frames, 1D, 5D, 1WK. 4. Aggregated signals and preliminary recommendation. A mixed signal approach with short-term advocating for sell and long-term pushing towards buy, leading to a preliminary signal of hold. Final recommendation, buy. Rationale. Given the strength and clarity of the bullish signals in the longer time frames, especially on the 1D, 5D, and 1WK charts, which typically oversee shorter time fluctuations and suggest a trend setting or reversal motion, the bullish bias seems potent. Short-term sell signals could reflect minor retracements rather than a trend reversal. Entry, exit, and risk management. Entry point, current levels or a minor retracement in price. Aim for entry at 1H EMA20 or around 83,334.37 if possible, as 1H shows a strong bullish setup if it retraces to the EMA10 or EMA20 line. Take profit. Considering the 1-week chart EMA10 at 87,773.07, setting the take profit around the EMA10 or slightly below it provides a reasonable target, around 87,000. Stop loss. Set stop loss slightly below the recent small time frame bearish indicators or 5% below the entry point to allow some room yet control risks. Using the 1-day EMA50, 83,069.95, could be a strategic point as it should hold if the upward trend is true. Risk-reward ratio. Aim for a risk, stop loss, of -5% and a reward, take profit, of approximately plus 10%, maintaining just above a 1:2 risk-reward ratio. Summary. Given the strong bullish indicators in larger time frames and the potential for short-term bear signals as a retracement, the suggested trade is a controlled buy with well-defined exit and entry points to capitalize on likely upward trends while managing potential downside risks effectively. Analysis. Short-term analysis, 1M, 5M, 15M, 90M, 1H. The indicators for shorter time frames, 1M to 1H, show a confusion of signals, particularly the significant sell recommendations for the 90M and 1H time frames. This divergence might indicate volatility in the nearer term. Notably, the RSI values in the shorter time frames show either slight overbought conditions, 1H, or near neutral, others. Long-term analysis, 1D, 5D, 1WK. The longer time frames, from 1 day to 1 week, show a more consistent bullish sentiment. The RSI for the 5D and 1WK time frames indicates underbought territory, suggesting potential for upward movement. EMA patterns are also favorable, showing consistently bullish patterns. Derivative forecast analysis. Derivative forecasts for the shorter time frames are mixed, but predominantly sell for 1H and 90M, suggesting short-term downside. Conversely, the 1D, 5D, and 1WK derivatives advise strong buys, which aligns with other long-term bullish indicators. Strategizing entry and exit. Time frame consideration. Given the stronger and more consistent signals in longer time frames, 1D, 5D, 1WK, and the inconsistency in short-term data, emphasis should be placed on a medium to long-term holding strategy. This strategy will bypass the short-term volatility indicated by the shorter time frames. Entry point. A recommended entry could be timed during a short-term pullback as evidenced in the 90M and 1H time frames. A retest near the EMA values at these time frames could provide a viable entry. Exit point, take profit and stop loss settings. Take profit, given the bullish indications in long-term charts, setting a take profit around 5 to 10% above the entry point considering the current bullish patterns should capture potential gains. This should be aligned with resistance levels potentially near the 5D or 1WK EMA levels. Stop loss, to maintain a roughly 1:2 risk-reward ratio, a stop loss should be set at approximately 2.5 to 5% below the entry point. The stop loss trigger should ideally be just below recent short-term support levels to guard against losing more than necessary. Recommendation: conditional buy. Conditional on the trajectory, assuming entry during a short-term downturn as noted in the 1H time frame. Risk management: monitor closely for shifts particularly in the 1H and 90M time frames that might suggest a shortening of the bullish expectations. Adjust stop loss/take profit points accordingly. Final thoughts. This trading opportunity is predicated heavily on market timing and monitoring the indicated divergences. The general bullish sentiment in higher time frames coupled with strategic entry during short-term pullbacks should optimize the risk-reward ratio favorably. Always monitor the market trends and adjust the stops and targets dynamically to maximize gains and minimize losses. Analyzing the comprehensive set of indicator data and derivative forecasts provided, we'll craft a trading strategy that maximizes profits by capturing significant price movements while managing risk effectively. Breakdown of indicators and signals. Here's a summary of key elements from different time frames. Short term, 1M, 5M, 15M. Mixed signals with a sell on 1M, and buys on 5M and 15M. The 5M and 15M frames both show bullish patterns and golden cross indicators, providing some support for considering an entry. Medium term, 90M, 1H. Predominantly sell signals in both 90M and 1H slots. High RSI on 1H, overbought territory at 71.48, indicates potential for a price correction or pullback. Long term, 1D, 5D, 1WK. Strong buy signals, especially on the daily and weekly charts, indicating favorable long-term trends. Consistent bullish patterns and significant buy derivatives forecast. Final recommendation: buy. Considering the strong buy signals evident in the medium to long-term charts and the bullish formations and golden cross occurrences across most time frames, despite some bearish short-term indicators, the recommendation is to buy. The weight of the longer-term positive signals suggests an underlying bullish trend. Entry, take profit, and stop-loss strategy. Entry point. Aim to enter the market as soon as the price shows signs of stability or slight retraction in the short-term time frames, perhaps evidenced by a recovery in the 1-minute and 90-minute RSI or a bullish crossover in MACD in the shorter frames. Take profit. Set a take profit level of plus 10%. Given the significant bullish indicators in the long-term charts, setting a higher profit target aligns with capturing a potentially larger move upwards. Stop loss. Implement a stop loss at -5%. This moderate stop loss percentage ensures protection against unexpected downturns, respecting the overbought conditions in the shorter term while considering potential volatility. Risk/reward analysis. With a risk/reward ratio of 1:2, 5% risk for a 10% reward, this strategy respects the conservative trading posture needed in the volatile cryptocurrency market, yet aims to take advantage of identified bullish trends. The given thresholds utilize your appetite for moderate risk against the opportunity for substantial gain, based on comprehensive market data. Monitoring. Ongoing monitoring of market movement and the mentioned indicators is crucial, especially observing changes in RSI levels and MACD crossovers in shorter intervals, which could signal the need for adjusting the strategy dynamically. Additionally, heightened market news awareness is crucial to anticipate and respond to global economic factors that may influence cryptocurrency prices. Conclusion. This trading strategy leverages strong longer-term bullish signals balanced against short-term volatility. With protective stop loss and a substantive take profit level, it aims to maximize potential returns with controlled exposure to risk. Analyzing the available trading data, we need to look at both the technical indicators and the derivative forecast data to make an informed trading decision, focusing on finding smart entry and exit points and effectively managing risk. Analysis of key indicators across time frames. 1 short term, 1M, 5M, 15M. These shorter time frames show mixed signals. Despite showing bullish patterns and a favorable RSI and MACD values at the 15M, 1M, and 5M intervals indicate a sell. These suggest volatility and potential downside risk in the very short term. 2 medium term, 90M, 1H. These intervals generally suggest a selling posture with higher MACDs signaling overbought conditions, especially visible in RSI levels reaching towards 70, 1H, hinting at potential pullbacks. 3 long-term, 1D, 5D, 1WK. The daily, 5-day, and weekly data showcase strong buy signals with a positive adjustment in MACD and increasing RSI levels suggesting sustained strength. The broader bullish patterns such as the double bottom and golden cross support an upward trajectory over the longer term. Aggregate signal evaluation. The combined view across different time frames and derivative suggestions provide a hold as a preliminary final signal. Given a mixed short to medium-term outlook tempered by an optimistic long-term view, a cautious approach is advisable. Final recommendation: hold. By recommendation, trigger if there is a distinct positive shift in shorter intervals aligning with the long-term view. Look for stabilization in the 1M to 15M time frames. Entry point: await clear bullish signals on the 1H or more confirmation from the 1D time frame before engaging a buy to ensure alignment across several intervals. Take profit: aim for a profit margin of about 6 to 12%, considering the volatility and current bullish trends in the long term. Stop loss strategy: set a stop loss at -3% to protect the downside, maintaining a risk-to-reward ratio near 1:2. The stop loss is relatively tight due to the existing short-term volatility. Heightened vigilance on short-term indicators and rapid response to any changes in the overall market sentiment will be crucial to maximizing potential gains while minimizing risks. Always reassess the position as new data flows in, particularly from the critical 1H and daily time frames. Based on the available data and the balance of indicators across multiple time frames, here is the detailed analysis and final trading recommendation. Analysis Overview. Short-term indicators, 1M, 5M, 15M. Bullish patterns identified. All these time frames indicate bullish patterns, double bottom, golden cross. EMA alignment. In 1M and 5M, EMAs are relatively close with slight bearish crossover potential, whereas in the 15M, the EMAs are in a more bullish sequence. MACD, suggesting bearishness in 1M and 5M due to proximity and crossings below the MACD signal. Slightly against the trend, 15M shows a positive divergence between MACD and its signal, indicating a possible bullish reversal. RSI, they are mainly neutral to slightly bearish, with 15M showing oversold conditions, which can be a precursor to a bullish rebound. Medium-term indicators, 1H, 90M. MACD, bullish on 1HR with a significant divergence above MACD signal and strongly negative in the 90M time frame. RSI, moderately high in the 1H time frame suggesting possible overbought conditions, which can at times predict a downturn. Long-term indicators, 1D, 5D, 1WK. EMA alignment, highly divergent. Long-term indicators show a clear bullish trend in the 1D and 1WK but a bearish divergence in the 5D. MACD, strong bullish signals in 1WK contrasted by strong bearish indication in the 5D time frame. RSI, shows more neutral to slightly bearish conditions in longer time frames. Derivative analysis. The derivative insights strongly signal buying opportunities in longer time frames, daily, weekly, whereas short-term derivatives largely suggest a selling bias. Final recommendation. Trade decision, buy. Entry point, current price level, considering the strong long-term bullish derivatives and indicators. Take profit, plus 10%, aiming for a conservative target aligning with the average expected movement in trending markets. Stop loss, minus 5%, keeps the strategy within the risk-reward ratio of about 1:2, conservatively managing downside risks amidst mixed signals in short and medium terms. Risk management. Observe the RSI and MACD closely following your trade, adjust the stop loss tighter if both start showing stronger bearish signs across multiple time frames. Be agile to manage positions, especially given the short-term volatility suggested by 1M, 5M, and 15M time frames. Conclusion. The balance between strong long-term bullish signals and mixed short to medium-term signals merits engaging with a conservative bullish position, seizing on the current bullish patterns and daily and weekly derivative forecasts. This provides an optimal entry point while managing risks effectively given the uncertain markets. Analyzing the provided trading data, there are mixed signals from the different time frames. Here's a breakdown for ticker granularity. 1 short-term view, 1M, 5M, 15M. The moving average convergence divergence, MACD, values and relative strength index, RSI, suggest bearish trends in these very short time frames, with MACD generally below signal and RSI in oversold zones, especially in the 15M time frame. The derivative data also leans heavily towards sell signals, indicating a negative bias in the near term. 2 midterm view, 90M, 1H. The RSI is neutral to slightly bullish, but the derivative forecasts lean towards sell, suggesting that there may not be strong immediate upward price movement without further confirmation. 3 long-term view, 1D, 5D, 1WK. This view shows strongly bullish signals with both EMA and MACD lines indicating upward momentum, and RSI fluctuating in a zone that might suggest an upcoming oversold to normal recovery, particularly in the 1D range. Derivative data in these ranges are primarily giving buy signals. Consolidating across time frames. The mixed signals in the short and mid-term views against a bullish sentiment in the long-term perspectives suggest that an immediate entry might carry higher risks with potentially limited reward opportunities due to near-term volatility. Recommendation: hold. Considering the mixed signals and the aim to maintain a risk-reward ratio of around 1:2, the best course of action presently is to hold. Short-term noise and mid-term skepticism could jeopardize entry points, whereas long-term prospects seem promising but may not yet provide optimal entry. If opting for entry point should be considered only if subsequent data reaffirms strengthening in the mid-term signals, 90M and 1H, aligning closer to the bullish view of the longer time frames. Take profit, aiming for a 10% profit, based on the average volatility observed, could be an achievable target, falling well within the normal range for the cryptocurrency's typical movements. Stop loss, setting a stop loss around 5% could provide adequate protection against volatility and align with the intended risk-reward strategy. Monitoring strategy. Given the hold recommendation, continual monitoring of the short and mid-term indicators is crucial. Any shift towards a more consistent buy signal across several major time frames could prompt an immediate review of the potential entry strategy and recalibration of take profit and stop loss thresholds. Final decision-making should always consider real-time updates and further analysis of emerging patterns and indicators. Analyzing the provided data, we need to carefully evaluate the signals from different time frames to optimize the trading decision. Reviewing each spectrum of time frames helps us create a well-rounded strategy. Immediate short-term analysis, 1M, 5M, 15M, 1H. The signals from 1 minute to 1 hour are predominantly indicating a sell. The MACD is generally below the signal in all shorter time frames, 1M, 5M, 15M, suggesting downward momentum. The RSI levels are mostly in the lower spectrum, very low in 15M at 18.35 indicating oversold but moving up the scale in 90M and 1H. Bearish derivative forecasts strengthen the sell sentiment in these time frames. Medium to long-term analysis, 1D, 5D, 1WK. In the longer time frames, the MACD in the daily, 1D, frame is negative but the derivatives are pointing towards a buy, indicating a potential reversal or pullback in the downward trend. The RSI in daily and 5-day time frames is neither in the oversold nor overbought zones, hovering around neutral to slight bearish. The 1-week indicators show a more bullish outlook with MACD and its derivatives tending towards a buy. Final recommendation. Given the mixed signals across different time frames, the higher weight should be given to longer time frames as they reflect more sustained trends. The indication of recovery in these larger frames suggests a potential change in momentum is possible soon. Final decision, cautious buy. Entry point, look for affirmations in the 1-hour to daily charts for slight recovery, moderating the bearish short-term pressures. Stop loss, set a stop loss at around 4% below the entry point to protect against unexpected drops. Take profit, aim for a profit at around 8% above the entry point, keeping in line with a risk-reward ratio of about 1:2. Additional note. Monitor the 15M and 1H indicators closely after entering. If the indicators start to strongly align with the daily improvement suggested by the MACD turning up and RSI moving past midpoint consistently, it would validate the position. Adjust stop loss and take profit levels dynamically using RSI and MACD signals based on market momentum. This approach balances the observed near-term bearish pressures with the potential upcoming positive corrections suggested in the larger time frames, managing the risk while looking to capitalize on potential profitability. Based on the provided cryptocurrency trading data and the derivative forecast information, it's crucial to carefully analyze the signals to determine an optimal trading strategy that balances potential profit with risk exposure. Analysis. 1. Short-term analysis, 1M, 5M, 15M, 1H, 90M. The majority of these time frames exhibit a clear sell bias underscored by bearish MACD and low RSI signals. The negative forecast derivatives further support a bearish outlook in these shorter-term time frames. 2. Long-term analysis, 1D, 5D, 1WK. The daily, 5-day, and weekly charts lean towards a bullish sentiment, as indicated by the MACD, RSI, and positive buying signals in the derivative forecasts. This suggests potential upside movement in the longer run. 3. Indicator consistency. Bullish patterns are noted across all time frames, including double bottom and golden cross, which typically suggest bullish reversals and continuations. However, the short-term indicators are contradictorily bearish. Conclusion. Given the contradicting signals between shorter-term, bearish, and longer-term, bullish, intervals. Recommendation, hold. Although there are bullish signs in the long term, the prevalent short-term bearish indicators suggest it's prudent to wait for more consistent signals across all time frames or for the short-term data to start reflecting the bullish potential seen in the long-term indicators. Risk management. Take profit, aim for a take profit that is twice the amount risked in the stop loss. For example, if the stop loss is set at -5%, the take profit should be at least +10%. Stop loss. Given the current volatility and the mixed signals, a stop loss slightly tighter than usual could be appropriate, around -5%. This minimizes potential loss if the trend unexpectedly moves against the position due to short-term bearish pressures. Supervision and adjustment. Reassess regularly. Due to the dynamic nature of cryptocurrency markets, frequent reassessment of this position is recommended. Pay close attention to changes in MACD, RSI, and price actions in relation to EMAs. Flexibility. Be prepared to adjust the take profit and stop loss levels in response to significant news or market fluctuations. Final note. This approach, focusing on holding until a clearer trend emerges, is chosen to carefully balance potential profits against associated risks, respecting your requirement for a risk-reward ratio of about 1:2. This conservative stance helps avoid potential losses during uncertain market conditions while still keeping the door open for future opportunities. Analysis brief. The trading data and indicators you've provided show mixed signals across different time frames. Short term, 1M to 1H. Strong bearish indicators are noted in the very short term frames, 1M to 1H, with consistent sell signals in derivatives and negative momentum on MACD signals. RSI in these time frames is generally low, suggesting oversold conditions. However, the persistence of negative MACD across most frames and the bearish derivative positions lean heavily towards a downward pressure in the immediate future. Medium term, 1D and 5D. A shift occurs in the daily time frame with a strong bullish derivative reading. This might indicate potential stabilization or a reversal of the price trend seen in the shorter time frames. However, in the 5-day time frame, even though indicators are slightly bullish, the discrepancy in the EMA trends and the high-risk fluctuations suggest caution. Long-term, 1WK. The weekly indicators and derivatives suggest strong bullish sentiment, with a notably high MACD compared to its signal, adequate RSI, and EMAs starting to align positively. Market positioning. Given the divergent signals across the array of time frames, a balance of risk and opportunity is key. Recommended final recommendation: hold. Given the current analysis, maintaining a hold position is prudent as there is notable short-term bearish pressure which conflicts with the medium to long-term bullish readings. A change in either direction in the short-term indicators could sway decision-making towards a buy or sell. Recommended strategy: 1. Monitor closely the short-term indicators. Immediate action might become necessary if the short-term RSI decreases further, risking a plunge, or if the MACD starts showing convergence towards positivity in the 1M to 1H time frames. 2. Evaluate market sentiment and news. External factors could heavily influence the next movement, which is currently on a thin line between sustained recovery and a possible downtrend. 3. Prepare for quick reaction. Set up alerts for changes in the RSI and MACD specifically on the 1-day and 5-day time frames to ensure readiness to either take advantage of a bullish recovery or to prevent loss in a continued drop. Take profit and stop loss recommendations. Take profit, set at approximately plus 8% from the entry level. This aims to capitalize on potential short to medium-term gains without waiting for a possibly unstable longer-term bullish recovery. Stop loss, set at approximately minus 4% from the entry level. This limits risk, preserving capital against uncertain short-term downturns. The current risk-reward setup at about 1:2 adheres to your requirements for cautious yet opportunistic trading. Immediate trading is not recommended until a clearer trend is confirmed. After a detailed analysis of the trading data provided, I can provide an informed recommendation. The aggregation of various time frames and indicators is essential for a nuanced decision to capture profit opportunities while effectively managing risk. Indicator and pattern analysis. 1. Short-term time frames, 1M, 5M, 15M, 1H, 90M. Most of the indicators point towards a bearish trend. The RSI values are well below 50 in the shorter time frames, 1M, 5M, 15M, indicating strong oversold conditions, which might suggest a potential for a price rebound or that the selling pressure is high. MACD is below its signal line across these intervals, confirming the above sentiment. The derivative recommendations are majorly in the sell direction, particularly strong with the shorter time frames. 2. Long-term time frames, 1D, 5D, 1WK. More bullish signals are observed in the daily and longer durations. RSI for these frames shows healthier or neutral signals, especially on the 1-day and 5-day frames indicating some potential uptrend or stabilization. MACD on these time frames, particularly for 1 week, is above the signal line, suggesting a bullish trend. Derivative signals and daily candlestick formations, like double bottom and golden cross, further emphasize the potential for growth. Final recommendation. Given the mixed signals across different time frames, the key will be to focus on the risk-reward balance essential for a sound trading strategy. The strong sell signals in the short term and significant buy signals in the longer term make a direct day trading strategy challenging without high risk. Therefore, a prudent approach is recommended. Action: hold. Rationale: the current market indicates instability and mixed signals across various indicators. A hold position reduces the risk while still keeping potential to make a strategic entry when a clearer trend forms, either for a short-term buy on oversold rebound or a long-term buy as per daily and weekly bullish signals. Given the observed volatility and divergence in signals. Recommended monitoring and conditional orders. Entry trigger: monitor the market for stabilizing signals in the 1-hour and 15-minute frames, particularly an improvement in MACD convergence with its signal line and RSI moving back towards 50 could rationalize a limited buy. Exit strategy: upon entry, set a strict stop loss at a 1% decline from entry price to mitigate risk. Take profit: place a take profit order at a 2% increase from the entry price to maintain a 1:2 risk-reward ratio. Conclusion: a hold position is best at this moment due to contrasting short-term and long-term signals. It ensures risk management while keeping an open opportunity to engage either in the market's sell-off rebalancing or in capturing any upward momentum indicated by the daily or weekly charts. Continue to monitor indicators actively and adjust strategy as clearer trends emerge. Analysis and final recommendation. Indicator overview. 1 short-term, 1M, 5M, 15M, 1H, 90M indicators. Bearish dominance. Most of the short-term indicators show a bearish trend with MACD below MACD signals, and RSI values either in the oversold region, under 30, in the 1M and the 15M time frames, or marginally above the midline in others. Derivative actions, predominantly, sell signals in derivatives up to the 90M time frame align with the bearish momentum. 2 long-term, 1D, 5D, 1WK indicators. Bullish signals, daily, 5-day, and weekly charts provide bullish indicators with RSI at healthier levels, suggesting potential long-term upside. Additionally, MACD values in the 1-week time frame show strong bullish momentum. Derivative actions. Long-term derivatives echo strong buy signals, especially prominent in the 1-week time frame. Final signal consideration. The aggregated signal suggests a sell. Short-term indicators predominantly signal bearish momentum, highlighting immediate downside risks. Long-term potential. the bullish long-term indicators suggest potential recovery or growth over a longer period, but these are contradicted sharply by the current negative short-term momentum. Trade execution strategy. Given the bearish short-term outlook opposed by a bullish long-term perspective, a cautious approach leans towards not opening new positions immediately. Opt for a hold strategy if already holding positions, unless the stop-loss limits are hit. Await clearer bullish signals in short-term indicators or for the bearish momentum to dissipate, aligning more closely with long-term positive trends before committing to new entries. Risk management. Stop loss. Set a stop loss at a 3% decrease from the current level to protect against significant capital erosion due to prevalent short-term bearish trends. Take profit. Once a position is considered favorable for entry in the future, a take-profit level should aim for a 6% increase, maintaining a 1:2 risk-to-reward ratio. Conclusion. At present, the market's short-term indicators suggest significant volatility and a prevailing downside which opposes the optimistic long-term outlook. Hold current positions with strict stop losses and monitor for a shift in short-term market sentiment which aligns more closely with bullish long-term indicators before making further moves. This strategy minimizes immediate risk while keeping open the opportunity for potential gains as indicated by long-term trends. Analysis. Given the variety of data across multiple time frames, a precise estimation requires integration of both the indicator trends and the derivative forecast data to identify a strategic entry or exit point with the goal of maximizing profits while minimizing risk. Here's a breakdown of the relevant insights and how they are used to shape our trading strategy. 1. Indicator trends across time frames. Shorter time frames, 1M, 5M, 15M, 90M, 1H. These predominantly show a bearish trend with EMAs trending downwards, MACD values generally lower than their corresponding signal lines except in 90M, and RSI values that are generally low but not universally in oversold territory except in 15M. Longer time frames, 1D, 5D, 1WK bullish patterns are evident with EMAs showing a wider gap between shorter and longer EMAs over the longer term. RSI levels are near neutral to slightly oversold, suggesting potential impending rebounds. 2. Derivative signals. Short time frames predominantly suggest immediate selling actions with 15M, 90M, and 1H pointing towards sell signals due to negative derivative values indicating short-term downtrends. Derivative signals shift towards buying for the longer time frames, 1D, 5D, 1WK, consistent with the indicator trends for these durations. 3. Final analysis and trade recommendation. Dynamic differences between the short-term and long-term signals suggest a potential pivot in market sentiment is near but has not fully manifested in immediate price action. On shorter time frames, bearish sentiment dominates, but the overarching bullish signals in longer frames, particularly on a week scale, suggest upward momentum may resume soon following a short-term pullback. Recommendation. Hold stay neutral for now, but prepare to initiate a buy once more concrete bullish signs manifest in shorter time frames aligning with the long-term positive outlook. Entry and exit strategy. 1. Entry point. look to enter a buy trade if RSI on the 1HN/ or 90M time frame drops below 30 and begins to pivot upwards, or if the MACD on these time frames crosses above the signal line. 2. Take profit and stop loss strategy. Take profit, set at plus 5% from the entry price. This allows for capturing gains from potential upward price movements while considering the volatility and the mixed signals across the different time frames. Stop loss, set at minus 2.5% from the entry price to maintain a 1:2 risk-to-reward ratio. This is vital due to the uncertain environment and to safeguard the position against unfavorable swings. Final notes. This trade recommendation stays conservative, recognizing the possible bullish trend on the horizon as indicated by long-term data while acknowledging the present short-term bearish pressure. Stay prepared to recalibrate strategy dynamically as new data and market conditions evolve. Analyzing the given cryptocurrency trading data, we must focus on maximization of profit while managing risk effectively. To determine the final buying or selling recommendation, we will review the aggregated derivative signals and various time frames to identify potential trends and reversals. Indicator analysis by time frames. Short-term view, 1M, 5M, 15M. 1M shows buying sentiment with the derivative buying signals. The EMA, exponential moving average, values are generally high, but the RSI, relative strength index, is nearing an overbought condition at 66.39. MACD, moving average convergence divergence, is below its signal, which could hint at a potential bullish crossover soon. 5M and 15M, both are signaling a sell, despite the RSI being at oversold levels, particularly for the 15M, 29.35, which often precedes a bullish reversal. This suggests a mixed signal in ultra-short-term trading windows, with potential for volatility. Medium-term view, 1H, 90M. Both display selling sentiment with increasing intensity in sell signals as the chart scope widens. MACD on both time frames are signaling higher than their respective signal lines, giving a short bearish outlook. Long-term view, 1D, 5D, 1WK. Shows more strong buying signals with RSI values on larger time frames indicating room for potential upside, especially the RSI on 5D at 27.94 signaling highly oversold. EMAs on these longer time frames show price consolidation and potential reversal patterns. Final recommendation. Considering the conflicting signals among the various time frames, positioning a buy order might seem premature based on ultra-short-term indicators but lucrative based on long-term views. Given the current preliminary final signal indicating sell, but with strong buy signals in longer-term frames. Final trade signal, hold. Recommended trading strategy. Entry point. Enter the position if the short-term indicators, particularly 15M, shows a recovery in RSI above the threshold of 40 and / or a bullish MACD crossover happens in the 1M or 5M time frames. Take profit. Set take profit at 5% above the entry price. This target allows for a reasonable but attractive upside based on the observed volatility in the longer-term forecasts. Stop loss. Set stop loss at 2.5% below the entry price. This keeps the risk-reward ratio around 1:2, optimal for maintaining a balanced risk management strategy. Rationale. This position stance is taken to manage risk effectively while still positioning ourselves to capitalize on potential price reversals indicated by the long-term bullish momentum. By awaiting more congruence in shorter time frames, we reduce the potential for entering on adverse short-term fluctuations. Final recommendation: hold. Analysis. Short-term analysis: 1M, 5M, 15M, 1H, 90M. The majority of short-term signals indicate a bearish trend with a final signal leaning towards sell. RSI values in these time frames are mixed, ranging from slightly oversold to neutral, suggesting inconsistency in momentum. The MACD values are primarily negative or showing divergence from their respective signal lines, indicating potential downward momentum or correction. Despite bullish chart patterns, the derivative forecast and aggregated signals for shorter time frames mainly encourage a selling stance, which can often indicate a short-term pullback or consolidation. Long-term analysis: 1D, 5D, 1WK. Long-term indicators show a predominantly bullish trend, with all major time frames recommending a buy. This is reflected in positive derivative forecasts and a generally bullish chart setup, like double bottom and golden cross patterns noted. However, such setups juxtaposed against the short-term bearish trends suggest that the market might be in a phase of consolidation or might soon experience a correction that aligns these long-term bullish opportunities with shorter-term entries. Risk management considerations. Given the discord between short-term and long-term signals, a cautious approach is advised. Entering a trade at this point might expose the trade to short-term volatility, which could erode potential profits before the long-term bullish signs come to fruition. Risk-reward ratio: aim to maintain this at 1:2. The current market conditions do not clearly offer a safe entry point that meets this ratio with confidence. Recommended action: hold your current position or stay out of the market until clearer alignment between the short-term and long-term indicators emerges. Monitor the EMA and MACD indicators closely for signals where short-term recovery aligns with the long-term bullish trend. Set alerts for significant movement within the 1D, 5D, and 1WK time frames to catch the beginning of expected bullish momentum. Potential strategy upon market alignment. Entry point: wait for short-term EMAs, especially on the 1-hour and 90-minute charts, to stabilize or start to show an upward trend aligning with the daily and weekly trends. Exit, take profit, strategy: ideally set take profit levels at a 2% increase from the entry point, considering the volatility and recent price swings. Stop loss strategy: set stop loss at approximately 1% below the entry point to minimize potential losses if the market moves contrary to expectations. Conclusion: holding or not entering the market at this stage is the wisest decision given the mixed signals. The aim should always be to enter the market during conditions offering a higher probability of profit with defined risk exposure, which is not confidently present at this moment. Keep vigilant for signs of alignment and prepare to move quickly once they present themselves. Given the complexity of the data and the variability in signals across different time frames, I'll perform a thorough analysis to determine the best course of action. Summary of key indicators. 1. Short-term analysis, 1M to 15M. The moving average convergence divergence, MACD, generally shows increasing momentum in the 1M and is below the signal in the 5M and 15M, indicating potentially overbought markets which could lead to a reversal. Relative Strength Index, RSI, signals are quite divergent, overbought on 1M and nearing oversold on 15M. 2. Medium-term analysis, 90M and 1H. There's a mixed signal from the 1H, net bullish with both buy and sell indicators from derivatives, while 90M suggests a strong sell. 3. Long-term analysis, 1D to 1WK. In longer time frames, almost all indicators are turning more positively, with significant buy signals from all granular data, suggesting increasing bullish momentum. Derivative forecast analysis. Strong short-term buy signals are contradicted by the medium-term sell signals, while long-term signals are strongly bullish. This situation suggests that while there might be a potential short-term pullback or volatility, the overall longer-term outlook is more positively skewed. Final recommendation, moderate buy. Entry point, consider timing your entry during a potential short-term dip as indicated by the 90M and 5M signals. This may allow better pricing in an overall bullish market trend, as supported by long-term signals. Exit strategy, take profit with long-term signals strong. A profit target of around 3% to 5% above entry price could be reasonable. Stop loss, set a stop loss at approximately 1.5% to 2% below the entry price to maintain the 1:2 or better risk-reward ratio, effectively managing risks. Execution notes. Monitor closely the 1M and 5M intervals after placing the trade, especially if immediate market reaction to external factors contradicts the bullish long-term indicators. Keep an eye on global economic indicators and news potentially impacting cryptocurrency markets given their sensitivity to macroeconomic factors. Adjust the stop loss and take profit points incrementally as the market moves favorably or introduces new dynamics or information. Conclusion. The decision to opt for a moderate buy stems from balancing between immediate bearish potential and strong positive signals in the longer time frames. This strategy aims at leveraging the favorable long-term prospects while cautiously navigating through short-term volatility and discrepancies. Analyzing the extensive trading data provided, including indicators from various time frames and derivative forecasts, it becomes crucial to holistically assess the conditions for buying, selling, or holding to arrive at an optimal trading decision aimed at maximizing profits and managing risks effectively. Indicator Analysis Breakdown. Short-term view, 1M, 5M, 15M. The immediate short-term indicators, 1M, 5M, suggest bearish tendencies with a sell signal derivative, showing the potential downward pressure. The 15M time frame, interestingly, shifts towards a buy derivative forecast, which introduces a contradiction and volatility in the very short-term outlook. Medium-term view, 90M, 1H. There's mixed signaling in medium-term indicators. There's significant downward pressure indicated by the 90M derivatives, yet the 1H frame leans towards buy, showcased by a mild positive in derivative forecasts. This points to some stabilization after initial volatility. Long-term view, 1D, 5D, 1WK. The indicators here are predominantly bullish. Strong buy signals in the daily, 5-day, and weekly derivatives suggest a positive long-term trend despite intermediate fluctuations. Final recommendation. Given the mixed signals in the short and medium term juxtaposed against strong bullish sentiment in the long-term analysis, the most reasonable action would be to hold with a lean towards setting up for a long buy position under more favorable conditions. This catch-all based on the aggregation maximizes our adherence to a cautious yet profit-oriented trading strategy. Target the point of stabilization identified in the 1H time frame for an optimal entry point for a long position. Take profit percentage, plus 6%. Stop loss percentage, minus 3%. The recommended risk-reward ratio of 1:2 is maintained here. Opt for a cautious entry post short-term sell-offs to capitalize on the longer-term bullish momentum reflected significantly in the daily, 5-day, and weekly forecasts. Choose a market order to enter as the RSI levels out near the neutral 50 on the 1H time frame, which suggests reduced immediate volatility, potentially providing an optimal risk-managed entry point. To provide a strategic trading recommendation based on the given data, I will analyze the indicators across various time frames, considering both the derivative data and the aggregated signals. The primary goal is to maximize profits while adhering to a risk-reward ratio around 1:2. Analysis Summary. 1. Short-term analysis, 1M, 5M, 15M, 90M. The 1-minute, 5-minute, and 90-minute derivatives and aggregated signals predominantly indicate a sell, with the exception of the 15-minute indicators which show a buy signal. This suggests a bearish pressure in the very short term but potential fluctuation or recovery as seen in the 15-minute window. 2. Medium-term analysis, 1H. Mixed signals, with derivative data showing overall a buy signal. This indicates a potential reversal or a temporary bull run in the near term. 3. Long-term analysis, 1D, 5D, 1WK. The long-term indicators, 1D, 1WK, strongly suggest a buy scenario, reinforced by positive derivative forecasts, despite the 5D showing a sell in aggregated signals. This reflects overall bullish sentiment building up over longer periods, possibly mitigating the short-term sell pressure. Trade strategy. Given that long-term signals present a strong buy scenario but near-term indicators warn of potential declines, a strategic entry point will be chosen based on medium to long-term analysis. Entry strategy. Optimal entry should focus near the lower prices suggested by 1M and 5M readings if they drop further, thus maximizing the benefit from the bullish long-term prognosis. Entry point. Consider entry if the price dips near or below the 90M EMA20, around 83,203.78, as it represents a significant support level in the context of the hourly and daily bullish setup. Exit strategy. Take profit and stop loss. Take profit, set at approximately plus 8% from the entry point. Given long-term bullish indication, a markup from a lower entry point can be expected to reach or exceed this level. Stop loss, set at minus 4% from the entry point, mitigating significant loss yet allowing room for currency volatility. Final recommendation. Recommendation, conditional buy. Condition, enter the trade if prices approach or dip slightly below the indicated 90M EMA20, 83,203.78. Take profit, plus 8%. Stop loss, minus 4%. This recommended approach balances current bearish short-term risks against strong long-term bullish signals, ensuring a healthy risk-to-reward setup that prioritizes capital preservation and profit maximization. Be prepared to adapt quickly to changing market conditions, especially those observed in shorter time frames. Analyzing the provided data and focusing on the immediate and extended trend, I'll provide a structured strategy for entering into a trade along with stop loss and take profit points, bearing in mind the necessity for maintaining a risk-reward ratio of approximately 1:2. Here's the breakdown with a decision. Data summary and analysis. Short-term signals, 1M, 5M, 15M, show mixed directions. Immediate short-term, 1M and 15M, indicates a buy, but the 5M frame signals a sell, possibly indicating small fluctuations or retracement within a broader trend. Mid-term signals, 1H, 90M, are bearish in the 90M indication but bullish in the 1H indication, presenting a conflicting view at the 1-hour scale. This can also be considered as stabilization following large moves. Longer-term signals, 1D, 5D, 1WK, are predominantly bullish. Notably, the long-term indicators like 1D and 1WK, even with substantial buy indications in derivatives, support a strong bullish trend becoming dominant. Trading strategy. Considering the conflicting short and mid-term signals but dominant long-term buy signals, a strategy is best suited for a slant towards longer-term bullish positions, while being cautious about potential short-term volatilities or pullbacks. Final recommendation, buy. Entry point, near current levels or a slight pullback to match the shorter-term fluctuations. Stop loss percentage, 3%, place the stop loss just below a significant immediate support level to mitigate short-term volatility risks. Take profit percentage, 6%, set a gain target that allows for realization of profits without requiring unsustainable growth. Justification. Even though the 1M and 15M indicators are bullish and offer a positive sentiment in ultra-short term, the 90M sell signal emphasizes caution. This stop loss is set tightly to protect the trade against any quick reversal in trend suggested by shorter time frame variations. Taking profits at a 6% gain balances the possibility of good returns against the prospect of holding too long during potential peak and retracement phases, aligning with the strong bullish signals seen in the 1H, 1D, 5D, and 1WK frames. Risk management. This trade holds to a 1:2 risk-reward ratio, maintaining disciplined trading with predefined exit points for both losses and gains. This framework helps in managing emotional trading decisions and adheres to a systematic approach to capitalizing on predicted directional movements while safeguarding against unexpected market swings. Conclusion. The overall recommendation is based on a synthesis of the varied time frame data and the derivative insights provided. The longer-term bullish indicators coupled with protection against short-term volatility form the foundation of this trading decision. Always monitor market news and adjust stop-loss/take profit levels as the market unfolds to refine the trade according to actual market movements. Analyzing the data provided, here's a detailed breakdown and final recommendation based on the technical indicators, chart patterns, and derivatives forecast. Key observations. 1. Short-term time frames, 1M, 5M, 15M. The 1-minute indicators suggest an overbought situation with an RSI of 84.87, indicating potential upcoming selling pressure. The 5-minute time frame reflects mixed signals but leans towards selling pressure. In contrast, the 15-minute time frame trends towards buying signals. 2 medium to long-term time frames, 90M, 1H, 1D, 5D, 1WK. The 90-minute indicators suggest overbought conditions, RSI, 65.78, and a selling derivative forecast. The 1-hour and 1-day charts show strong buy indications supported by both indicators and derivative forecasts, despite 1-day EMAs showing a bearish crossover. The longer time frames, 5 days and 1 week, generally advise buying. Significant variance between EMA 10 and EMA 50 in the weekly data, highlighting potential volatility or trend shifts. Final recommendations. Trade suggestion. Signal, buy. Reasoning, the aggregated buy signals from multiple key time frames, 1H, 1D, 5D, 1WK, and despite some selling signals in highly short-term derivatives indicate a stronger bias towards upward momentum in a broader time frame. The buying based on daily and weekly charts should be considered more reliable given the significant positive derivatives and bullish patterns such as golden cross and double bottom. Entry point. Current price consideration. Assume current price is around 83,800 based on the average of recent EMAs. Optimal entry, slightly below the current price, around 83,500 to take advantage of any short-term pullbacks. Take profit and stop loss. Considering the higher time frames, 1D and 1WK, and higher risk tolerance for a favorable risk-reward. Take profit, percent plus 10%, from entry point, approximate 91,850. Stop loss, percent minus 5%, from entry point, approximate 79,325. Risk-reward ratio, 1:2 is specified. Final note. Opt for a cautious approach by closely monitoring RSI levels and MACD across different time frames after entering the trade. Adjust the stop loss to a trailing stop if the price significantly appreciates beyond the entry point to protect gains and reduce exposure to volatility. Moreover, continually reassess the position as new data comes in, especially from the short-term indicators that might signal an earlier exit than anticipated. Analysis of trading data and strategy. 1. Current market condition. Indicator analysis across time frames, EMA, MACD, RSI. Short term, 1M, 5M, 15M. All signals in these time frames show a bullish trend with EMA values increasing and MACD above its signal in most cases. The RSI on the 1-minute chart is very high at 84.33, suggesting overbought conditions which often precedes a pullback. Medium term, 90M, 1H. Continuation of bullish signals with EMAs rising, and RSI values are leaning towards overbought but are stable. Long term, 1D, 5D, 1WK. While the daily chart shows a slightly mixed sentiment with a mildly bearish MACD, the longer periods, 5D and 1WK, suggest a bullish recovery, although the 5D RSI at 28.88 indicates that the market is oversold, which can invite buying pressure. Pattern and chart formation. All time frames exhibit bullish patterns and key chart formations like double bottoms and golden crosses, which historically are strong indicators of an impending bullish phase. 2. Derivative forecasts. Consistent buy recommendations across all periods confirm strong buying momentum in the market. Final recommendation: buy. Entry, exit, and risk management. Optimal entry point: a buy entry would be optimal around the current market price, considering the strong bullish signals across most indicators and time frames. Take profit and stop loss. Stop loss, SL. Given the volatility in cryptocurrency markets, setting a stop loss around 3 to 4% below the purchase price would be conservative and prudent. It helps to protect against large downturns which can rapidly occur. Align this with just below key support levels if applicable. Take profit, TP. Set the take profit around 6 to 8% above the entry price. This targets a favorable 1:2 risk-to-reward ratio and takes advantage of expected price movement without being overly greedy and risking retracement. Additional notes. Monitor RSI and MACD closely. If the RSI moves further into overbought territory, greater than 85, on shorter time frames post-entry, consider tightening the stop loss to capture profits preemptively in case of a rapid market reversal. Adjustments post-entry. If the market advances quickly, raising the stop loss to break even or to secure a profit can lock in gains and reduce risk dynamically. Market news and sentiment. keep a vigilant watch on current events and market sentiment as they can significantly impact cryptocurrency movements. If negative news appears, be ready to adjust the strategy accordingly. By adhering to these strategic entry, exit, and risk management guidelines, we can optimize our chances for substantial profits while minimizing exposure to abrupt market downturns. Analyzing the comprehensive data provided, it is crucial to consider both the short-term and long-term indicators and the derivative forecast to make an informed decision. Short-term analysis, 1M to 1H. The 1-minute and 5-minute time frames both indicate strong sell signals, which suggests short-term downward pressure. However, the 15-minute and 1-hour time frames shift towards buying signals. Both show positive MACD divergences and bullish patterns like the golden cross and double bottom. Medium-term analysis, 90M. The indications here trend towards selling, with negative derivatives and signals leaning to a downward direction. Long-term analysis, 1D to 1WK. Daily, 5-day, and weekly charts display a strong buy momentum, with significant bullish indicators and derivative forecasts leaning heavily towards buying. This suggests strong upward momentum over the long term despite the short-term volatility. Given these analyses, the market shows a short-term volatility with mixed signals between selling and buying from minute to hourly charts. Long-term indicators strongly favor buying, which could indicate potential for growth after the short-term volatility smooths out. Final trading recommendation. Action: consider a buy position, although cautious entry is recommended given the short-term sell pressures. Entry point: awaiting a small pullback on the short-term charts, like 1M or 5M, could provide a more favorable entry price, maximizing potential gains from the long-term bullish trend. Stop loss: setting a stop loss at around 3 to 5% lower than the entry point should protect against undue losses from short-term fluctuations. Take profit: set a take profit at approximately 6 to 10% higher than the entry price to maintain a risk-to-reward ratio of about 1:2. Timing: entry should be revisited if certain conditions on the 1-hour up to 1-day chart significantly deteriorate, e.g., drastic changes in MACD, RSI cooling off below 50 consistently, or emerging bearish patterns. This strategy is designed to capitalize on the long-term bullish signals while managing the risks posed by evident short-term volatility. Continuous monitoring of all time frames for any change in patterns or indicators is imperative to optimize this trading approach. Based on the comprehensive review of the cryptocurrency trading data provided, here's a detailed analysis and a final recommendation. Analysis. 1. Short-term indicators, 1M, 5M, 15M. EMA and MACD analysis. The exponential moving averages, EMA, across these time frames show a consistent pattern with EMAs of shorter periods, 10 and 20, above those of longer periods, 50, indicating a strong uptrend. The moving average convergence-divergence, MACD, is mostly positive, corroborating the bullish sentiment. RSI levels. While the 1M RSI is slightly overbought at 72.25, it reaches normal levels in the 15M time frame. This suggests a momentary strong buying appetite but doesn't necessarily signal an immediate reversal. 2. Mid-term to long-term indicators, 1H, 1D, 1WK. EMA trends. All EMAs in these time frames maintain the pattern with shorter EMAs above the longer ones, further supporting ongoing bullish momentum. MACD values. MACD values remain positive and higher than their respective signal lines, particularly notable in the 1-week time frame. RSI readings. RSI readings are more varied. The 1H RSI at the edge of overbought might hint at possible consolidation or a slight pullback in the near term. 3. Derivative and aggregated signals. Buy signals predominate. The derivatives reinforce a strong bullish stance in the majority of the time frames. Final recommendation, buy. Entry point. Given the strong bullish indications, entering at the current price level seems appropriate. Exit strategy. Take profits at a take profit level at a plus 4% gain. This level represents a realistic profit target within the observed volatility and bullish trend continuation potential. Risk management. Stop loss. Implement a stop loss at -2%. This maintains a strict risk management discipline while allowing some room for normal price fluctuations without exiting the trade prematurely. Additional risk management and monitoring. Review regularly. Given the volatile nature of the cryptocurrency markets, closely monitor the price action and indicators, particularly the MACD and RSI for any signs of divergence that might suggest weakening momentum. Adjust as necessary. Be prepared to adjust the stop loss and take profit levels based on new data and significant price movements in either direction, ensuring these adjustments still adhere to the original risk/reward strategy. This strategy leverages the strong bullish signals across multiple time frames while strictly controlling risk, aligning with the objective of maximizing profits and ensuring a prudent risk management approach. Analysis. Short-term analysis, 1M to 1H. Most of the lower time frames, 1M, 5M, 15M, 1H, show key bullish indicators, with EMA values confirming a strong upward trend across the board. The MACD is consistently above its signal line in these time frames, enhancing the bullish signals. RSI levels on these frames except for 15M are reaching overbought levels, greater than 70, which traditionally suggests a potential for a turn or a temporary pullback, but in a strong bullish trend, can also indicate continued strength for some time. Long-term analysis, 1D to 1WK. The daily and weekly indicators show divergent data. The one-day chart indicates shorter-term correction in a longer upward trend, negative MACD but above its signal, suggesting brief pullbacks but maintaining a broader bullish trend. However, the 5-day time frame shows a bearish sentiment with a very high MACD signal disparity and a very low RSI, pointing towards an extended oversell condition which could often prelude a bounce back or reversal. The 1-week time frame matches more with the daily suggestion, indicating overall strength with a high bullish potential, positive MACD value despite being lower than its signal and neutral RSI, Integrated view. Predominantly, the indicators and derivatives forecasts suggest bullish momentum. The short-term bull trend is particularly strong, and while the long-term indicators on the 5-day chart show some bearish signals, they might also indicate potential for reversal given the oversold conditions. Recommendation: buy. Trade setup. Entry point: given the current bullish momentum, entering at the current or a slightly retraced price should be considered. Take profit: set the take profit level at plus 5% from the entry. This target respects the bullish momentum seen on most of the short and medium terms. Stop loss: set the stop loss level at minus 2.5% from the entry. Keeping tighter stop loss controls the downside risk, considering the slight bearish divergence seen in the long-term 5D frame. Risk/reward analysis. This setup follows approximately a 1:2 ratio, aligning well with the parameters. Support/resistance levels. Monitor key resistance near the EMA 20 on the 1D time frame and any psychological levels reached historically. Monitor support around the lowest short-term EMA 50 values and historical support zones that could inform adjustments or shifts in strategy. Summary. With predominant bullish signals in the shorter and longer terms, but do account for potential volatility signified by mixed signals on the 5D charts, this buy recommendation suits both short-term traders and those with slightly more extended horizons, provided they keep agile with respect to stop-loss management to shield against unexpected reversals. Analysis of cryptocurrency trading data and recommendation. Time frame analysis. 1 short term, 1M to 90M. Bullish indicators: all EMAs are in a bullish alignment, EMA 10, EMA 20, EMA 50, confirming a strong uptrend. The MACD is above its signal line, and the RSI is high but varies across time frames, illustrating strong buyer momentum but also potential overbought conditions in the 5-minute frame. Forecast derivatives range from selling in the very short term, 1M, 5M, but shift to buying in longer time frames, 15M, 90M. 2 medium term, 1H to 1D. Indicators: bullish patterns with all EMAs aligned bullishly and MACD above its signal across both time frames. The RSI on the hourly is very high at 76.63, signaling possible overbought conditions which might typically advise caution, whereas the daily shows a more balanced momentum at 55.47. Forecast derivatives experience strong bullish signals, especially on the daily derivative, suggesting consistent upward pressure in the medium term. 3 long-term, 5D to 1WK. Indicators: EMAs show mixed signals with shorter EMAs below the longer ones potentially indicating a weakening trend or consolidation, especially in the 5-day frame. However, MACDs are mostly positive compared to their signal lines, and RSI values indicate neither oversold nor overbought conditions, offering a more stable outlook. Forecast derivatives reveal strong buying recommendations, underpinning a positive outlook in the long run, albeit coupled with a volatile environment suggested by the EMA crossovers. Aggregated signal and final recommendation. Consensus from all time frames signals a buy. Expected momentum indicators and derivatives converge on a recommendation that an entry point at the current levels could be profitable. Entry, exit, and risk management strategies. Entry point, current price levels based on the buy consensus across most time frames. Take profit, considering the considerable bullish momentum, especially in the 1D and 1WK derivatives, setting a take profit level at plus 10% to plus 15% from the entry point would capture a significant portion of the expected move while maintaining a safety margin in case of pullbacks. Stop loss, a stop loss level at minus 5% from the entry point. This maintains our desired risk-reward ratio of about 1:2, providing a controlled exposure to downside risk. Final recommendation, buy at the current levels with a take profit at plus 12% and a stop loss at minus 5%. This setup offers a balanced approach to capturing the upside while effectively managing potential downside risk, in line with overcoming the current cryptocurrency trading challenges and potential overbought signals in the short term. Further, traders should monitor the price action closely, especially how the price reacts at key EMA and MACD levels in the short term, to adjust the strategy if necessary. Effective risk management and periodic re-evaluation of the market conditions will be crucial. To craft an optimal trading strategy based on the available data, the key is to synthesize the technical indicators while maintaining the desired risk-reward ratio of 1:2. Here's a detailed analysis followed by a trading recommendation. Analysis. Short term, 1M5M. The derivative forecast signals a sell, which contrasts sharply with the bullish chart patterns and the buoyant RSI and EMA signals, suggesting an overheated short-term market that could be poised for a correction. Mid-term, 1.5M to 1H. The indicators switch to a strong buy, with both MACD and RSI indicating upward momentum. Bullish chart patterns and double bottoms across all time frames suggest strong support levels. These positive signals across diverse time frames lend confidence in the sustainability of the uptrend in the mid-term. Long-term, 1D to 1WK. The long-term picture is predominantly bullish, especially on the weekly time frame. Despite a bearish divergence in the 5-day chart, which shows higher risk or potential for a mid-term pullback, the 1-day and weekly recommends buy. The MACD lines and positive RSI on the daily and weekly charts underscore the bullish sentiment. Consolidated view and strategy. Given the strong buy signals in the mid and long term outweighing the potential short-term pullback, a buying strategy appears favorable but warrants careful entry to mitigate risks related to potential short-term volatility. Entry point. Ideal buy zone. Looking for a potential retracement in the short-term analysis could provide an optimal buying opportunity. A reasonable entry could be around the EMA 50 levels of the 1.5M chart or any minor pullback near this level, which is approximately 83,641.90. Exit strategy. Take profit. TP. Set the take profit around the peak prices approached or breached in the lower frequency time frames, which would be near the EMA 10 on the weekly chart, around 88,021.75, which is a reasonable target for securing profits while considering momentum. Stop loss, SL. Given the volatility and the risk-reward ratio of 1:2, establish a stop loss slightly below the latest support levels visualized by the double bottom patterns or a 3%-5% drop from the entry point, whichever is tighter. Trading recommendation. Action: buy on slight pullbacks, close to EMA 50 of the 15M chart. Take profit, approximately 88,021.75, EMA 10 on the weekly chart. Stop loss, a trailing stop loss of 3%-5% below the entry point ensures limited downside exposure and addresses the risk incrementally. Additional notes. Monitor the market closely for any shifts in sentiment that could be indicated by RSI dropping below 50 or MACD crossing below its signal line Indiana the shorter time frames. Adjust the stop loss to break even once the trade is positive by at least half of the take profit distance to further secure gains. By tuning the strategy according to ongoing momentum and technical feedback, you effectively balance the risk and capitalize on the bullish sentiment reflected in longer time frame analyses. Analyzing the trading data and indicators provided, the decision to engage in a trade should balance the short-term fluctuations with the overarching trends that are visible from longer time frames. Here is the strategy derived from the given data. Analysis. 1. EMA trends. Shorter time frames show EMAs in a bullish pattern with EMA 10, EMA 20, EMA 50 confirming strength in the recent uptrend. In the daily and weekly charts, there is a bearish cross in the more intermediate, 1D, and longer term, 5D, EMAs, which signals a potential shift in trend or ongoing volatility. 2. MACD analysis. Short-term MACD indicators in the 1M, 1H, and 90M charts are above their signal line, suggesting bullish momentum. In the daily time frame, MACD is negative but the spread between MACD and its signal line is decreasing, which could indicate slowing of the bearish momentum. In the weekly time frame, MACD is strongly positive, reinforcing the longer-term bullish outlook. 3. RSI levels. Shorter periods have high RSI, especially in the 1H, 76.37, and 5M, 80.80, which might suggest overbought conditions, hinting at possible pullbacks, although these are often not conclusive in highly volatile markets like cryptocurrencies. The weekly RSI at 41.34 shows there is room for upward movement before becoming overbought. 4. Derivative outlooks. Short-term derivatives suggest conflicting signals with buys predominant in the minutely data and a sell suggestion at the 5M mark. Long-term derivatives clearly signal buying in the daily and weekly tables, supporting the potential for sustained upward moves. Recommendation. Given the bullish patterns from daily and weekly charts and strong buy signals from these periods, derivative analysis, a buying strategy is recommended. However, with high RSI readings in some shorter time frames, an immediate pullback is possible. It is advisable to wait for a slight dip as a better entry point within a bullish context. Trade execution. Entry point, enter during a small retraction, ideally when the price dips near the EMA20 of a shorter time frame such as the 1-hour chart, 83548.54. Take profit, aiming for at least a 2:1 risk-reward ratio, setting a take profit level at about plus 10% above the entry point seems reasonable given the volatility and growth potential suggested by the longer time frame indicators. Stop loss, set the stop loss around minus 5% below the entry point to manage risk strictly. Tracking, monitor the price action and adjust the stop loss to break even when the price achieves half the take profit value. Final verdict. Action, buy. Expected holding period, medium, several days to weeks. Confidence level, medium to high, based on the consistency between long-term indicators and derivatives. This strategy should maximize the profit from prevailing trends while effectively keeping risks under control, in line with the desired risk-reward framework. Given the trading data and the indicators provided for the various time frames, let's dissect and determine an optimal trading strategy based on the aggregated data. Indicator analysis. 1 short term, 1M, 5M, 15M. The EMA, MACD, and RSI indicators mostly hint towards a current overbought condition, particularly evident in the 5-minute time frame. Sell signals dominate in these shorter time frames, despite bullish patterns and charts. 2 midterm, 90M, 1H. Strong buy signals are showcased by both EMA and MACD trends pointing upward. RSI values are well above 70 indicating strong bullish momentum but also suggest caution about potential overbought conditions. 3 long-term, 1D, 5D, 1WK. The daily and weekly charts present strong buy signals based on MACD crossovers and the bullish derivative forecasts. However, the 5-day shows an RSI in the oversold area along with a negative MACD, pointing out a conflicting signal within this particularly broader scope. Strategy formulation. Given the divergence in signals between different time frames, a nuanced approach is needed. Here is the recommended strategy. Final recommendation, hold transition to buy. Given the current mixed signals in the shorter intervals but progressively bullish indicators in the longer time frames, a conservative hold with readiness to shift to buy seems appropriate. Entry point. Transition to buy if the MACD continues to converge positively closer to its signal line across the remaining shorter time frames, 1M, 5M, and 15M, or if RSI values drop towards the midpoint, 50 to 60, suggesting easing of the overbought conditions. Exit point. Take profit, aim for a profit of plus 15% from the entry price. Stop loss, limit losses to minus 7.5%. The chosen risk-reward ratio of 1:2 balances the potential for profit with a controlled exposure to downsides, reflecting a prudent trading stance given the market's current mixed indications. Keep monitoring the dynamically changing forex data, especially the short-term indicators, to pinpoint the exact moment for a switch from hold to buy. Adjust the strategy based on real-time changes in the MACD and RSI values across all considered time frames. Being ready to change the stance swiftly can capitalize on opportunities the market presents while safeguarding against unexpected downturns. To deliver a carefully balanced trading recommendation based on the provided data for cryptocurrency trading, it is essential to thoroughly analyze both the indicator data across various time frames and the derivative forecast information. Indicator analysis. Shorter time frames, 1M, 5M, 15M. The prevailing signals are largely bearish across these frames. The MACD divergence from its signal and lower RSI values, especially in the 1M time frame, indicate recent bearish momentum. Longer time frames, 90M, 1H, 1D, 5D, 1WK. Here we see a more bullish sentiment. MACDs are generally above their signals, and RSI levels are healthier, pointing towards bullishness, specifically on daily and weekly scales. Derivative forecast analysis. Short term, 1M, 5M, 15M. The derivatives suggest sell as the short-term shifts have not been supportive of a significant upward momentum. Medium to long term, 90M, 1H, 1D, 5D, 1WK. Strong buy signals manifest in these time frames, aligning with the indicator analysis that points to more sustained bullish behavior in medium to long-term intervals. Consolidated outlook and final recommendation. Considering both spectrums of the time frames, short-term frames show weakness which might enhance the risk if an entry is considered immediately. Mid to long-term indicators and derivatives are strongly bullish, suggesting potential growth and profitable exit points in the future. Trading strategy. Given the mismatch between short-term and long-term signals and taking into account the requested risk-reward ratio of 1:2. Final decision, hold. Rationale. Although medium and long-term outlooks are bullish, the conflicting short-term signals increase the entry risk. A hold decision balances between not taking on unexpected short-term volatility and preparing for a favorable long-term entry. Action plan upon market shift. Entry point. Look for the alignment of bullish signs in shorter time frames with medium to long-term signals before entering. Specifically, observe for improvement in MACD lines crossing above the signal consistently across most time frames. An increase in RSI onto a more neutral or slightly overbought territory in the 1M, 5M, 15M, which would suggest increasing buying momentum. Exit strategy. Take profit, set at approximately plus 25% from the entry point, considering the strength in long-term bullish signals. Stop loss should be around minus 12.5% from the entry point, maintaining the 1:2 risk-reward balance. Moving forward, keep close monitoring on the short-term indicators for any strengthening which would suggest an optimal time for entry according to the established bullish medium to long-term outlook. Analyzing the provided data, there is a general bullish bias across most time frames and indicators, which supports a potential buy scenario. Here's a detailed breakdown and final recommendation. Key indicator analysis. 1. Exponential moving averages, EMAs throughout the shorter time frames, 1M to 1H, the EMAs are trending upwards, EMA 10, EMA 20, EMA 50, signifying a bullish trend. Although, in the daily, 1D, and weekly, 1WK, charts, EMAs show mixed signals which may suggest a longer-term consolidation or pullback. 2. Moving average convergence divergence, MACD values are positive in shorter intervals, indicating potential upward momentum. The daily chart shows a negative MACD but is improving, as the value is less negative compared to the MACD signal. 3. Relative Strength Index, RSI. Most RSIs are in the slightly overbought territory, especially in 5M and 1H. RSI values close or above 70 suggest caution, although they affirm short-term buying pressure. 4. Derivative signals, short-term derivatives are strong buys, 1M to 90M and 1H, aligning with the bullish patterns identified in the MACD and EMA analysis. Aggregated trade signals. The majority of aggregated signals across time frames suggest a buy, but with a caution advised due to the 1 sell signal in the 15M time frame and slightly overextended RSI readings. Trade strategy and risk management. Recommendation: buy. Entry point: current levels, as short-term momentum is strong. Take profit, plus 10% from the entry level. This percentage is set with consideration of the prevailing trend's strength and potential resistance given by long-term EMAs. Stop loss, minus 5% from the entry level. The set stop loss is reasonably tight, reflecting a strong upward trend in the shorter time frames while protecting against possible pullbacks. Risk-reward ratio. The risk-to-reward setup here is 1:2, adhering to your strategic requirement. This ratio balances the opportunity for profit with risk management, considering the slightly overextended market conditions in some time frames. Summary. With the current bullish patterns, especially in the shorter time frames, combined with strong buy signals from derivative forecasts, the recommendation is to take a long position. Given the RSI indices showing potential overbought conditions, it is critical to maintain disciplined stop losses to protect the investment. The bullish wider market sentiment should ideally carry the price to the set take profit level unless there is a sudden market sentiment shift. Final trading recommendation: buy. Analysis. Across multiple time frames, the aggregated signals predominantly indicate a buy sentiment, which is a strong directional bias towards bullish momentum in the cryptocurrency market. The key indicators and derivative data signaling a buy include 1M, 5M, 1H, 1D, 5D, 1WK time frames. These all show strong derivative buys, and the moving averages, EMA 10, EMA 20, EMA 50, are oriented towards an upward trend except for the 1-day and 5-day where the EMAs diverge. Historical chart patterns, double bottom, golden cross, support an impending uptick. RSI levels, except for the 5-day and weekly time frames, RSI is trending towards or is in the overbought region, above 70, which typically indicates strong buying momentum, though caution of a potential pullback must be considered. MACD indicator, majority is positive, buy signal, showing divergence above the MACD signal line. Only the 1-5M time interval indicates a sell. However, given the predominance of buy signals across other significant time frames, especially longer ones like daily and weekly, this can be viewed as a near-term pullback within a larger bullish trend. Entry points and trading strategy. Considering the strong upward momentum demonstrated in shorter and longer periods, initiate a buy order at the current market price or a slight retracement if possible, using the 1-5M sell signal as an indicator for a potentially better entry price. Take profit and stop loss recommendations. To adhere to a risk-reward ratio of 1:2. Take profit percentage, 6%. Calculated basis on EMA divergences and expected resistance levels. Potential profit can be realized before encountering major resistance from the highest EMA levels in daily and weekly charts. Stop loss percentage, 3%. This allows for enough market fluctuation while protecting from significant downturns potentially indicated by the negative 1-5M derivatives and to mitigate risk from any sudden market reversal. Additional considerations. Keep an eye on potential shifts in market sentiment influenced by external factors, macroeconomic reports, significant global events affecting crypto markets. Adjust the stop loss if the position moves into profit by at least 3%, using a trailing stop for securing gains. Final remarks. This recommendation is based on technical indicators and assumes average market conditions. Always consider current news, further fundamental analysis, and your personal risk tolerance before entering the trade. Analysis of trading data and final recommendation. Market indicators overview. Short-term indicators, 1M, 5M showing strong bullish signals, where the EMA alignment indicates upward momentum and RSI levels high but not extreme, suggesting bullish strength without excessive overheating. Medium-term indicators, 1-5M, 1H, 9-0M mixed signals observed. While 1-5M shows a sell signal, both 1H and 9-0M show strong buying pressure as indicated by bullish patterns and high MACD values significantly above the MACD signal line. Long-term indicators, 1D, 5D, 1WK display robust buying sentiment, particularly in 1D and 1WK charts. Despite a dip in RSI in the 5D, its other indicators indicate sign of potential recovery or inconsistent downward pressure. Derivative data points. Immediate terms, 1M, 5M, offer conflicting signals, with the 1M time frame suggesting a selling action, diverging from its otherwise bullish indicators. Conversely, the 5M framework supports a definitive buy. In contrast, 9-0M and longer durations, 1H and beyond, unanimously support buying activities, confirmed by all derivative forecasts indicating strong positive buying trends. Aggregate signals and current market sentiment. Integrated observations lean towards a buy recommendation, primarily driven by robust long-term perspectives and sound medium-term support despite the short-term conflict. Final recommendation, buy. Entry points and risk management. Entry point, look to enter during a minor retracement, particularly between the current price and the 1H EMA 84,034.45. A good entry could be around 84,500 considering current momentum. Stop loss. A credible stop loss level would be slightly beneath the 1H EMA 83,610.11, to cushion against unforeseen drops without exiting prematurely on normal volatility. A plausible stop loss value will be around 83,300, approximate 1.4% below the proposed entry. Take profit. Take profit should optimally be set where the 1D EMA 20 is, 84,982.65, aligning with broader bullish sentiments and providing a reasonable exit. Thus, the take profit point could be approximately 85,000, about 1.2% above the proposed entry. This setup proposes a risk-reward ratio slightly exceeding 1:2, aligning with the outlined objectives of risk management and profit maximization, while capitalizing on the comprehensive, long-term bullish market perspective. Trade execution plan. Monitor closely the short-term indicators for early signs of reversal. Stay alert to market news and economic indicators which could affect volatility. Adjust stop-loss and take-profit thresholds dynamically as the market evolves following broader trends or unexpected shifts. Given the analysis of the extensive indicator and derivative data across various time frames, it's crucial to synthesize the information into a coherent trading strategy. Each time frame gives us a perspective on market momentum, potential trend reversals, and sustainability of the current price movements. Let's break down the analysis and draw conclusions to formulate a trade recommendation with defined entry, exit, and risk management strategies. Analysis. Shorter time frames, 1M, 5M, 15M. 1M and 5M data show strong bullish indicators with golden cross patterns, rising moving averages, EMAs, and high RSI values. However, the 5M chart shows a mixed signal with derivative indicators suggesting an impending sell, potentially indicating overbought conditions. 15M data indicates a stronger sell signal from derivatives, likely reflecting a more imminent pullback or retracement. Medium time frames, 90M, 1H. Both time frames are decisively bullish with rising EMAs, MACD above the signal, and the formation of a double bottom and golden cross on the charts. The RSI, especially on 1H, is very high, signaling that the market might be becoming overbought but still has potential for upward movement in the short term. Longer time frames, 1D, 5D, 1WK. Long-term indicators are overwhelmingly bullish, although the 5D RSI is notably low, suggesting bearish pressure in the very recent past. However, a turnaround could be in progress, as indicated by other bullish signs. The 1D chart, despite showing a bearish MACD, holds a strong buy derivative forecast, indicating underlying strength. Trade recommendation. Final signal, buy. Entry point, given the overwhelming number of bullish signals across most time frames with particular emphasis on medium to long-term charts, entering the market at the current level or on a slight dip would be ideal. Take profit. Given the high bullish momentum, aim for a 5% profit margin. This is taking into account the robust signals from the 1H, 1D, and 5D time frames, which should carry the price momentum forward. Stop loss. Set a stop loss at approximately 2.5% below the entry point. The half ratio of our take profit reflects our risk-reward aim of 1:2 and provides a cushion against the inherent volatility observed in the shorter time frames. Risk management recommendations. Monitor the RSI and MACD closely on the 1HR and 15M charts after entry. If the RSI continues to climb above 80, or if the MACD diverges negatively, consider taking early profits or tightening the stop loss. Adjust the stop loss to break even once the trade is in profit by the amount of the initial risk, 2.5%. Conclusion. This trading setup is predicated on a solid combination of technical bullish signals across multiple time frames while accounting for possible retracements as indicated by near overbought conditions on shorter time frames. The strategy wisely balances potential gains with safeguard mechanisms against price reversals, aligning well with prudent risk management practices. Analyzing the comprehensive trading data provided, we aim to optimize our trading strategy by focusing on the most significant indicators and patterns to determine the smartest entry and exit points. Key observations. 1. Short-term, 1M, 5M, 15M, signals. Despite the derivative signals indicating overall sell, the EMA and MACD indicators reflect a more bullish outlook especially in 5M and 15M intervals, showing higher EMAs and MACDs above their signals, except 1M which could be experiencing noise. 2. Medium-term, 1H, 90M, signals. Strong buy indications from derivatives and bullish patterns such as double bottoms and golden crosses. RSI is high which could signal overbuying, but is common in strong bullish trends. 3. Long-term, 1D, 1WK, signals. Powerful buy signals supported by derivatives forecast and MACD values. Although the RSI in the 5D time frame is low, 29.50, indicating possible overselling, it could also suggest a potential rebound or recovery, supported by the bullish patterns observed. Strategic recommendation. Final decision, buy. Entry point, current market price focusing on the momentum provided by 1H and 1D signals which are overwhelmingly positive. Exit point, take profit given the strong bullish signals especially in the 1D and 1WK time frames, setting a take profit at a price increase of plus 10% from the entry point would be reasonable. The strong bullish forecasts and patterns support a potential sustained increase. Stop loss. A stop loss at -5% from the entry provides a controlled risk exposure, maintaining a risk-reward ratio slightly better than 1:2. Monitoring. It's imperative to monitor the 1H and 1D charts closely. While the market is currently bullish, any shift in MACD turning negative or RSI dropping significantly below 50 in these time frames should trigger a re-evaluation of the position. Additional considerations. Market dynamics. Cryptocurrency markets are highly volatile. Continuous monitoring of the market sentiment and macroeconomic factors is essential. Risk management. Ensure that no single trade risks more than a small percentage of the total trading capital to safeguard against unforeseen market movements. Adjustments. Be prepared to adjust the stop loss and take profit levels dynamically as the market moves to secure profits and minimize losses. This approach carefully balances between leveraging current bullish indicators and guarding against potential short-term volatility, aligning with the strategic objectives of maximizing profits while managing risks effectively. After reviewing the detailed trading data and indicator analysis, including both the short-term signals and the longer-term forecasts, the overall market sentiment appears predominantly bullish across multiple time frames, especially from the hourly to the weekly marks. The minor discrepancies in the shorter time frames are overshadowed by the stronger, more consistent bullish signals in the longer time frames. Analysis summary. Short-term, 1M, 5M, 15M bearish indicators are noted, especially in the 1-minute to 15-minute frames, suggesting short-term volatility and potential bearish pressure. However, these are less weighty due to their limited impact scope. Long-term, 1H, 1D, 5D, 1WK. All these indicators suggest strong bullish trends with increasing EMAs, higher MACD values above the signal line, and RSI levels supportive of a continuation in the upward trends. Notably, the daily, 5-day, and weekly charts provide very strong buy signals with significant action points marked by consistent bullish patterns and derivatives forecast. Strategy and recommendations. Entry point. Considering the long-term bullish signals, entering at the current settings appears optimal, prioritizing stability over short-term fluctuations. Exit. Take profit. Strategy. Setting a take profit should consider the possible highs as predicted by the extended movement in the 1-day and weekly frames. Take profit. A realistic target could be a 5 to 7% increase from the entry point based on the potential upward forecasts and support from weekly charts. Stop loss strategy. To manage risks effectively. Stop loss. Set at about 2.5 to 3.5% below the entry level to guard against unexpected downturns and respects our 1:2 risk-to-reward ratio. Final recommendation. Buy. Buy at current market price. Set take profit at plus 6% higher than the market entry price. Set stop loss at minus 3% lower than the market entry price. This strategy balances the bullish outlook in the macro perspective with prudent risk management, providing an optimal trade suggestion under current market conditions. Engage this setup with continuous monitoring, especially of the hourly indications, as it might inform the need for adjustment in the stop loss or take profit thresholds based on how the market unfolds post-entry. Market analysis. Upon carefully analyzing the given indicators and derivative data, I assess the trading signals across varying time frames for a cohesive trading strategy. Indicators and patterns review. Shorter time frames, 1M, 5M, 15M. The RSI levels from 1M, 48.47, and slightly higher RSI on the 5M and 15M indicate a moderate bullish trend mid-short term. The derivative forecasts, however, are mixed. There is an inconsistency between the time frames, where 1M signals a buy and both 5M and 15M point towards sell signals. Medium time frames, 1H, 90M. Strong bullish indications with higher RSI values suggesting increasing buying strength. Derivatives and cumulative forecasting tools indicate strong buy signals, supportive of a rising trend. Longer time frames, 1D, 5D, 1WK. While 1D shows bullish indicators, the 5D period is suggestive of an overextended market with an RSI of 29.50, which is highly bearish. However, derivative forecasts are bullish here, which might indicate a potential reversal or a bounce back. 1WK signals are strong bullish, indicating potential longer-term gains. Final recommendation, buy. Rationale. The majority of time spans, especially longer frames, suggest strong buying potential alongside medium time frames solidifying the immediate bullish bias. Smaller time frame discrepancies can be attributed to typical crypto volatility and can be navigated with moderate caution. Trade execution. Entry point, use current market price, ensuring you are entering during a minor dip to optimize potential upside. Look closely at 5M or 15M if there's a slight pullback. Take profit, set at plus 6%. This level is chosen based on the overall bullish nature while cashing in before any potential resistance or major pullbacks as signaled by the volatility in the shorter time frame indicators. Stop loss, set at -3%. This ensures that if the trade goes against the expected direction, losses are kept minimal and within acceptable risk parameters. It responds to the uncertainties in the shorter duration setups and the somewhat divergent signals from the 5D time frame, traditional downtrend signs like the lower RSI. Risk management. Position sizing should be such that the stop loss ensures no more than 1% of the trading portfolio is at risk. This setup keeps the risk-reward ratio at roughly 1:2, aligning with the outlined strategy requirements. Wrapping up. This trade recommendation is based on a predominant market bullishness signaled by most time frames. Due caution should be maintained, given the inherent volatility in cryptocurrency markets, and ensure that real-time adjustments are made based on sudden market shifts. Based on the comprehensive analysis of the indicator and derivative data across various time frames, my final recommendation integrates both short-term and long-term market signals, ensuring a robust trading strategy focused on maximizing returns while managing risks effectively. Final recommendation: buy. Analysis breakdown. 1. Short-term observations, 1M, 5M, 15M. Although 1M and 15M indicators point towards a sell signal due to current high selling momentum, the 5M indicators, though leaning toward sell, show signs of bullish reversal, golden cross, RSI 70. The 1M and 15M sell signals might be triggered by momentary pullbacks in an overall bullish trend. 2. Midterm observations, 90M, 1H. Both 90M and 1H derivatives are strongly indicating a buy signal, supported by elevated RSI levels and firm bullish MACD readings above the signal line. RSI values nearing the overbought territory might typically urge caution, but consistent higher lows in MACD and the pattern directions confirm strong buying pressure. 3. Long-term observations, 1D, 5D, 1WK. Long-term indicators are unequivocally bullish. Daily, 5-day, and 1-week intervals present a very strong buy signal, substantiated by the bullish chart patterns, including golden crosses and double bottoms, along with MACD lines well above the signal lines. The RSI in 5D is noted at a lower range, signaling a potential undervalued situation which bodes well for prospective appreciation. Entry, take profit, and stop loss recommendations. Entry point: consider entry as soon as possible to capitalize on the strong bullish momentum observed in longer time frames. Delaying entry may lead to missing initial gains from an upturn indicated by 90M, 1H, and 1D data. Take profit: set the take profit level at about plus 6% from the entry price. The choice of this level considers the overall bullish sentiment in longer time frames, providing room for significant growth while securing gains in the face of sudden market turns. Stop loss: place the stop loss at minus 3% from the entry point. This setting respects the 1:2 risk-reward ratio and protects the investment from the inherent volatility observed in the shorter time frames. Conclusion: the overarching bullish signals from most time frames suggest a strong upward trend, making a buying action preferable. Combined with strategic take profit and stop loss settings, this trade aims to maximize potential returns while effectively managing risk, adhering to the 1:2 risk-reward guideline. Please monitor the market's reaction to global events and significant updates in the crypto sector, adjusting the strategy accordingly to safeguard investments and maximize profitability. Based on the comprehensive analysis of the given trading data, indicators, and derivatives forecast, the following trade recommendation is formulated. Recommendation: buy. Rationale: 1. Short-term positive momentum: the 1-minute through 1-hour time frames consistently show bullish trends. Notably, the strong buy signals and bullish patterns such as double bottom and golden cross reinforce this sentiment. 2. EMA analysis: across various time frames, the exponential moving averages, EMA 10, EMA 20, EMA 50, generally suggest a bullish crossover scenario, especially in shorter time frames, 5 minutes to 1 hour, which present the EMAs in ascending order. This signifies upward momentum. 3. MACD and RSI signals. The MACD across short-term frames, 1 minute to 1 hour, indicates a strong buying pressure as it is above its signal line. RSI in the 1-hour and 90-minute frames stands above 70, reflecting strong buying momentum, albeit nearing overbought conditions, which advises caution. 4. Derivative forecasts and aggregated signals. The derivatives strongly back a buy decision from the 90M, 1H, 1D, and 1WK forecasts. Aggregated signals mainly recommend a buy, with majority of time frames backing up this decision, despite mixed signals from the 1M, 15M, and 5D time frames. Entry, exit, and risk management. Entry point: current price, based on the buy signal deduced from derivative analysis and aggregated indicators. Take profit, set at approximately plus 5% from the entry point. This is judged based on the potential for a continued bullish trend in the short term while still capturing gains before any significant retracement. Stop loss, set at minus 2.5% from the entry point. This reflects a tight control on losses, considering the volatility often associated with cryptocurrencies and providing a risk-reward ratio close to 1:2. Conclusion: this trading recommendation to buy based on current analysis aims to capitalize on bullish sentiment in the short term, backed by technical indicators and derivative forecasts. The specified take profit and stop loss settings are designed to effectively manage risks while aiming for a reasonable profit target in a volatile market environment. Traders should stay alert to any shifts in market sentiment or indicators and adjust positions as necessary. Analyzing the provided trading data and indicators for varying time frames, the aim is to formulate a trading strategy that maximizes profit potential while effectively managing risk. Indicator Analysis Summary. 1. Short-term time frames, 1M, 5M, 15M. These time frames show a strong mixed signal, predominantly sell in the shortest time frame, 1M, but shifting progressively toward a buy signal in the 5M and 15M time frames. Given the volatility at these shorter periods, reliance on this data can introduce higher risk. 2. Medium-term time frames, 90M, 1H. Both these time frames are strongly bullish with all the indicators pointing towards a buy position. Given that both also show a presence of bullish chart patterns and high RSI levels, it suggests an upcoming overbought situation but remains strong in the bullish trend. 3. Long-term time frames, 1D, 5D, 1WK. Long-term indicators are also showing strong buy signals with major bullish patterns and indicators pointing towards sustainable growth. Important to note, the 5-day RSI is quite low, suggesting a potential undervalued state, which could lead to significant upwards movement once market correction happens. Derivative Analysis. The medium to long-term derivative forecasts are predominantly displaying a strong bullish signal. Aggregated signals. After aggregating from 1M to 1WK, the signals show a progression from a sell to strong buy indications as the time frame increases. Preliminary final signal, buy. Final recommendation, buy. Entry strategy. Entry point, based on the strong buy signals in medium and long-term time frames and considering the overall trend, a good entry point would be any slight dip in price as indicated by occasional bearish derivatives or lower RSI in short-term time frames. Exit strategy. Take profit, plus 15%. Given the strength of the bullish indicators primarily in the medium and long-term analysis, setting a higher take profit aims to capitalize on anticipated upward trends. Stop loss, minus 7.5%. To maintain a risk-reward ratio of about 1:2, setting a tighter stop loss protects against volatility and unforeseen downturns, especially important given the occasional counter-indications in shorter time frames and high RSI readings that warn of potential retracements. This strategy places emphasis on maximizing gains from the apparent bullish momentum while effectively managing the risk of a volatile market, especially omnipresent in cryptocurrency trading environments. Frequent reassessment of this position is advised to respond to any significant change in the aforementioned indicators. Analysis. The complexity of cryptocurrency trading necessitates a multidimensional strategy, particularly when reviewing different time frames, indicators, and derivative signals. Here's a breakdown of key observations and how they inform our optimal trade strategy. 1. Short-term time frames, 1M, 5M, 15M. These frames exhibit mixed derivatives with a predominant bearish outlook in the shortest terms, 1M and 5M signal a sell. However, we notice a reversal pattern in the 15M time frame with a bullish indication. These mixed signals suggest short-term volatility with potential for an upward movement based on recovery seen in 15M. 2. Intermediate-term time frames, 1H, 90M. Both time frames show strong bullish signals supported by rising exponential moving averages, EMAs, high relative strength index, RSI, values, and positive MACD divergence from the signal line. This suggests gaining momentum which could translate into a favorable entry for longer-term profitability. 3. Long-term time frames, 1D, 5D, 1WK. The daily and weekly periods show strong bullish indicators, suggesting a long-term upward trend. The 5-day pattern however exhibits bearish indicators, which could imply a potential dip or correction within a broader upward trend. 4. Technical patterns. All time frames reflect bullish patterns such as double bottoms and golden crosses suggesting impending upward movements. 5. Derivative signals. Immediate short-term shows a sell, but medium to long-term frames exhibit strong buy signals, indicating confidence in sustainability of an upward price movement as you look further out. Recommendation. Given the analysis, a buy recommendation is supported, especially considering medium to long-term bullish signals that outweigh short-term bearish noise. Suggested entry and exit strategy. Entry: buy around the current levels or slight retracement if short-term bearish pressures kick in short term. Take profit. First target: increase of 3% from entry price. Second target: increase of 6% from entry price. This takes into account the potential growth observed in the medium and long-term trends as reflected in the EMAs and MACD values. Stop loss: set at 1.5% below the entry price. This risk-to-reward setup, 1:2 ratio, fits well within the advised strategic framework, as it aims to maximize gains while keeping potential losses firmly under control. This strategy considers the volatility of the cryptocurrency market and leverages the robust bullish signals from extended time frames to mitigate short-term downside risks. This approach ensures a strategic entry with a defined exit strategy to capitalize on forecasted market movements. After analyzing the various multiple time frame data provided, it's evident that a bullish sentiment predominates across most time frames, particularly in the 1 hour, daily, 5 days, and 1 week intervals, all indicating strong buy signals through both traditional indicators and derived forecasts. This provides a robust basis to anticipate further upward price movement in the cryptocurrency market. Let's break this down and formulate an actionable trading recommendation. Short summary of indicators and signal analysis. EMA analysis: the exponential moving averages across different time frames mostly sit above each other, indicating increasing prices in the longer time frames, especially in daily and weekly data. Noticeably, shorter time frames like 1 minute are bearish, but this might be a temporary retracement amidst an overall upward trend. MACD analysis: the MACD for longer time frames, such as daily and weekly, shows strong buy indicators, MACD line over MACD signal line and both trending upwards. RSI levels: higher time frames display moderately high to high RSI values, suggesting strong buying momentum, although care should be taken with the 90-min RSI at 79.29, suggesting potential overbought conditions which might prompt short-term corrections. Pattern and chart analysis: repeated occurrences of bullish patterns, golden cross, double bottom, across nearly all time frames underscore prevailing upwards momentum. Final recommendation: buy. Entry point: given the mildly conflicting signals in very short time frames, an optimal entry point would be after a minor pullback, if observed, given the recently overbought RSI in the 90M chart. This pullback might coincide with a minor retracement on shorter EMAs or nearing the support levels visually observable or derived from EMA20 in the 1-minute chart. Take profit percentage: aim for a target at approximately 15% above the entry point. This targets align with the levels where past resistances could turn into future supports, especially on long-term charts. Stop loss percentage: set a stop loss at around 7.5% below the entry point. This ensures that if the market sentiment changes or unexpected downturns occur, losses are kept controlled and minimized. Risk-to-reward ratio: this setup maintains a risk-reward ratio of approximately 1:2, aligning with prudent trading strategies that balance potential returns against plausible risks. Additional notes: this recommendation aligns on the assumption that external market conditions or macroeconomic factors do not change drastically. Regular monitoring of the RSI and MACD crossover points on the 1-hour charts, and adherence to stop-loss and take-profit levels will be essential in safeguarding investments against sudden market volatilities or shifts in trends. Given its comprehensive nature and balanced risk management, this strategy should effectively capitalize on prevailing market trends while mitigating potential losses, aligning well with a strategic and calculated approach to trading in the highly volatile cryptocurrency market. Analyzing the trading data provided, my objective is to identify optimal entry and exit points focusing on the smart utilization of indicators, aggregate signals, and derivative forecasts to manage risks and maximize profits. Indicator and derivative analysis. 1 short time frames: 1M, 5M, 15M. 1M indicates a bearish discrepancy between MACD and its signal, despite a bullish chart pattern, and an RSI that is fairly low, suggesting the price could be oversold. However, derivative signals are predominantly calling for a buying action. 5M time frame shows a bullish MACD but below the signal line and a moderate RSI. Derivatives all point towards buying. 15M sees a contrasting MACD to its earlier bullish trend while RSI suggests a slightly overheated market. 2 medium time frames: 1H, 90M. Both the 1H and 90M time frames exhibit strong bullish signals with EMA bullish crossovers, MACD above its signal, and high RSI readings suggesting strong buyer momentum, corroborated by derivatives forecasting buy. 3 long time frames: 1D, 5D, 1WK. 1D time frame is conflicted with a negative MACD gap despite a high derivative buying recommendation. 5D has troubling fundamentals with a slightly bearish MACD and low RSI. Derivatives still suggest a buy which could indicate potential for recovery. 1WK shows potential for strong buying due to high MACD above its signal and a relative middle ground RSI, backed by bullish derivatives forecasts. Final decision. Given the analysis of various time frames, where medium and longer time frames generally lean towards stronger bullish indicators and buying recommendations, I recommend entering a long position. This is also corroborated by the derivatives forecast which, across multiple time frames, suggests a strong buy potential. Trading strategy. Entry point: immediate entry based on current market conditions exploiting the bullish signs from the majority time frames. Take profit: based on the bullish strength, a take profit level of around 3 to 5% seems reasonable. Adjust according to specific price actions and resistance levels observed. Stop loss: set a stop loss around 1.5 to 2% below the entry point to manage risks effectively. Risk/reward ratio: aiming for approximately 1:2.5, matching the set take profit and stop loss levels. Conclusion. Initiating a buy order aligns well with the majority of bullish indicators and derivative signals. Close monitoring of the market is necessary, paying special attention to any dramatic shifts in MACD and RSI values across all time frames, which could signal a need for strategy adjustment. However, given the current data, entering the market now should capitalize on the prevailing bullish momentum. Based on the provided comprehensive indicator and derivatives data across several time frames, my analysis leads to the following strategic trading recommendation. Final recommendation: buy. Rationale: 1. Long-term bullish indicators, both the 1-day, 5-day, and 1-week forecasts suggest predominantly bullish trends. The presence of rising EMAs across these longer time frames, specifically where the shorter EMA is above the longer EMA, and high directional derivatives signals provide a strong upside potential. 2. Short-term confirmation: the 5-minute, 1-hour, and 90-minute indicators further reinforce the bullish scenario presented by the longer-term data. Notably, the RSI is below the overbought threshold and the MACD lines confirm a bullish momentum in these intervals. 3. MACD and RSI analysis: in shorter time frames like 5-minute and 15-minute, even though there's a contradictory signal, 1-5M sell, majority trends across others including 1-hour and 90-minute are bullish. The MACD values are above the signal lines signifying a strong momentum, and RSI values except in 5-day are out of oversold territory, supporting an upward price movement potential. Entry point: aim for a current market price entry or a slight retracement if identifiable for better positioning. Exit strategy: take profit and stop loss settings. Take profit, set at plus 5%. Given the bullish signals and market momentum, a 5% profit target is a sensible aim that matches the current volatility and trend strength observed in the strategic time frame analysis, especially noticeable in 1-hour and 1-day time frames. Stop loss, set at minus 2.5%. This maintains the recommended risk-to-reward ratio of approximately 1:2. It's tight enough to protect from volatility yet allows some room for the trade to breathe within usual market movements. Conclusion: the majority of the data across multiple time frames aligns to suggest a favorable buying opportunity. The risk management strategy provided through the specified stop loss ensures control over potential downside, while the take profit aims to capitalize on the observed bullish momentum adequately. The designated hold recommendation previously was conservative. However, considering an aggregated analysis, engaging in a buy position enhances potential return on investment based on provided data insights. Continue monitoring trend indicators and adjust exit points dynamically to align with any significant changes in market conditions. The available trading data provides a thorough insight into potential trading strategies for cryptocurrency. Here's a detailed analysis, summarized recommendation on whether to buy, sell, or hold, and guidance on setting take profit and stop loss levels. Analysis of indicator data across time frames. 1 short term, 1M, 5M, 15M. EMA analysis, short term EMAs, 1M and 5M, show a close grouping of EMA 10, EMA 20, and EMA 50, with the EMA 10 and EMA 20 consistently above the EMA 50 in the shortest time frames, indicating a bullish trend. MACD. The MACD values in the 1M and 5M time frames are less indicative due to their proximity to the signal line but turn more positive in the 15M view. However, the 15-minute MACD derivative shifts to a sell, suggesting caution. RSI values are moderate, leaning towards neither overbought nor oversold territory. 2 medium term, 90M, 1H. Both these time frames show strong bullish indications with MACD above the signal and rising RSI, though nearing overbought in the 90M, RSI equals 79.46. 3 long term, 1D, 5D, 1WK. The day and weekly charts indicate strong bullish signals with positive MACD divergence and rising RSI. Notably, the daily chart has a negative MACD value but is improving as it is above the signal line. The 5-day signals show some bearish trends with a lower RSI, suggesting some potential sell pressure. Interpretation of derivatives. The derivatives mostly indicate a strong buying trend across most time frames, particularly in the longer terms such as 1D and 1WK. The 15M time frame shows conflicting signals, indicating possibility of short-term volatility or consolidation. Aggregated final signal and trade recommendation. Considering the preponderance of buy signals in both the short-term and long-term analysis, despite some cautious notes in the 15M and 5D indicators. Final recommendation, buy. Risk/reward ratio, 1:2. Entry point, current market price. Take profit. Set at approximately plus 3% to plus 5% from the entry point. This would align with the upper resistance points historically and the current positive momentum. Stop loss. Set at minus 1.5% from the entry point. This accounts for any sudden market downturns and respects the 1:2 risk to reward setup. Conclusion. The comprehensive data supports a cautiously optimistic outlook for a bullish trade, particularly due to strong indicators in the longer time frames and the aggregated derivatives direction. The suggested stop loss and take profit levels ensure a disciplined approach to risk management in a market known for its volatility. Analyzing the given data across various time frames and indicators, it is clear we have predominantly bullish signals, which might suggest a potential buy. However, there is a need to closely evaluate the extent and relative signal strength across time frames to ensure a controlled risk, high-reward trading strategy. Here's the detailed analysis. Time frames and indicators analysis. 1 short term, 1M, 5M, 15M, 90M, 1H. EMA and MACD, mostly aligned with rising EMA and positive MACD differences compared to their signals indicating short-term momentum. RSI levels, 58.16, 44.80, 66.86, 79.88, and 73.12 respectively. Notable points, 90M and 1H intervals show an RSI close or above 70, potentially hinting at overbought conditions which could lead to a price pullback. 2 midterm and long-term, 1D, 5D, 1WK. EMA, it shows a mixed direction, although shorter EMA values on a one-day time frame are still high relative to their longer-term positions on the 5D and 1WK time frames. MACD, the divergence in the MACD values, particularly negative on the 1D hinting at a previous underlying bearish trend but showing recovery as signaled by derivative indicators. RSI, at relatively lower levels, 29.26 on 5D, 41.67 on 1WK, 1D sits at a balanced 56.03. Historically, these levels indicate potential upward reversals if supported by short-term momentum. Derivative forecast analysis. Strong buy indicators across all time frames from very short to long signify strong current momentum and underpinning support for an upward movement. Aggregated signals. Consensus on buy across all significant time frames. Final recommendation, buy. Entry, exit strategy, and risk management. Entry point, near the current price level. Stop loss, set at a -3% from the entry price, considering the volatility in cryptocurrency markets. This is to protect from unforeseen reversals and keeping in line with managing risks effectively. Take profit, set at +6% from the entry price. This maintains a 1:2 risk-reward ratio, aiming to maximize potential returns, considering the current bullish signals across multiple indicators and time frames. This strategy leverages short-term bullish momentum while hedging against medium-term uncertainties and inherent crypto market volatility. Constant monitoring of listed signals, especially RSI for any entry into overbought territory, greater than 70, on larger time frames and any bearish reversal patterns, is crucial. Be prepared to adjust stop loss/take profit levels dynamically as the market evolves. Final analysis and trading recommendation. Upon evaluating the aggregated trading data and signals across various time frames, the overall consensus leans convincingly towards bullish signals. However, attention must be paid to the contrasting signal in the 5-day time frame where RSI is greatly oversold at 29.38, indicating potential medium-term bearish pressure. This needs careful consideration despite the aggregate sentiment being positive across shorter time frames. Key observations. 1 shorter time frames, the 1-minute, 5-minute, 15-minute, and 1-hour time frames show strong bullish consensus, with most indicators like MACD and EMA configurations supporting an upward trend. RSI levels in these time frames are not in the overbought region except for the 90-minute which stands at 80.59. 2 longer time frames, the daily time frame displays a recovering MACD, moving from a lower value towards the signal in a possibly bullish crossover soon. However, the weekly signal shows a much higher deviation in MACD and its signal, suggesting volatility on a larger scale that might not be as immediately impactful. Trading parameters. Considering the overwhelmingly bullish sentiment in the shorter time frames and a decent outlook in the daily charts, initiating a buy seems appropriate. The presence of patterns such as double bottoms and golden crosses across several time frames bolsters confidence in initiating long positions. Risk management. RSI levels, especially in the 90M and 1H charts, are nearing overbought territories, dictating cautious optimism. The 5-day time frame indicates considerable selling pressure or retracement potential, which necessitates controlled exposure. Trade execution. Entry point, current price levels based on 1M chart data. Stop loss, place at 2% below the current market price to limit downside exposure, considering the volatility indicated in longer time frames. Take profit, set at 4% above the entry point, hampering with achievable short-term gains highlighted by shorter time frame bullish signals. Final recommendation, buy. A buy recommendation is suggested based on the short to medium-term bullish signals across the board except in the 5-day time frame. The risk-reward setup of 2% loss for potential 4% gain, aligns with general trading prudence while navigating potential volatility. Execution should be monitored closely for any shifts that greatly deviate from current indicators, especially in response to any macroeconomic changes or significant market-wide shifts in sentiment. Always adjust these benchmarks in real time depending on any new data or market conditions that might influence these projections. Based on the analysis of the detailed trading data with multiple time frames and indicator readings, here is the in-depth analysis and recommendation. Indicator overview. 1 EMA, exponential moving average on shorter time frames, 1M to 90M, EMAs are following an upward trend, indicating a potential buying scenario. The daily and weekly EMA values suggest higher caution as they show a weaker position compared to the shorter intervals. 2 MACD, moving average convergence divergence. All time frames except for the daily and 5-day show the MACD line above the signal line, which is a bullish sign. However, the daily and 5-day MACD depict a more bearish view with the MACD line below the signal. 3 RSI, Relative Strength Index. The RSI is most notable on the 90-minute and 1-hour charts, being above 75, which traditionally indicates overbought conditions, suggesting a potential pullback. On longer time frames, 1 day, 5 day, 1 week, RSI values suggest a more neutral to bearish sentiment. For patterns and charts, all time frames show bullish patterns and signs like double bottom and golden cross, which typically indicate bullish reversals or continuation. Derivatives analysis. The majority of the derivatives, shorter time frames, 5M, 15M, 90M, 1H, up to longer term, 1D, 5D, 1WK, indicate strong buying signals except for the 1-minute time frame. Conclusion and trade recommendation. Based on aggregating the signal strengths across different time frames, there is a predominant bullish sentiment, especially on time frames from 5 minutes to 1 week, coupled with strong derivative buy indicators. However, caution is advised due to potential overbought conditions, high RSI, on the 90-minute and 1-hour charts. The daily and weekly EMA and MACD readings suggest a longer-term caution. Final recommendation: cautious buy. Trade setup. Entry point: shortly before the price nears lower values of EMA on a 1-hour time frame to optimize entry within this bullish context. Take profit: consider setting take profit at around 3% above the entry price based on prevailing upward momentum. Stop loss: a stop loss at 1.5% below the entry price, matching the risk-reward ratio of approximately 1:2. This cautious buy recommendation utilizes shorter-term bullish signals while managing risk related to the slight bearish signs observed in longer-term indicators and overbought conditions. This strategy aims to take advantage of current upward swings while protecting against a broader bearish undercurrent. Always monitor the trade closely and adjust stop loss and take profit according to changing market conditions. After reviewing the detailed trading data provided, I'll present a comprehensive trading strategy centered around the cryptocurrency's trends on various time frames, indicators, and derivative signals. Analysis summary. Shorter time frames, 1M, 5M bearish indicators are evident with major sell signals. This suggests that in the immediate term, the price is likely undergoing a correction. Medium time frames, 15M, 90M, 1H here, bullish indicators prevail as suggested by the positive MACD figures, RSI values, and buying derivatives signals. This indicates an uptrend or recovery from earlier DIPs. Longer time frames, 1D, 1WK bullish trends continue, particularly highlighted by positive derivative forecasts and EMA configurations. Indicators suggest strong potential upward movement over the longer period. Divergence in the 5D time frame, this period demonstrates a sell signal, which poses a slight confusion against predominantly bullish signals in other long-term frames. This could be due to a temporary pullback or correction. Trading recommendations. 1 entry point: considering the analysis, the most strategic time for entry would be upon a noticeable pullback in the 90-minute to 1-day time frame, aligning buy signals for a favorable entry. More concretely, look for a minor retracement on the 1-hour chart where the RSI dips near 70 after having hovered around higher values. 2 exit points: take profit and stop loss. Take profit, set at approximately plus 20%. This ensures a healthy profit margin while remaining obtainable within the observed bullish patterns and momentum visible in the longer time frames. Stop loss, advised at around minus 10%. This placement considers the volatility often seen in cryptocurrencies and allows some buffer for the price to move without prematurely exiting the position. This maintains a risk-reward ratio of about 1:2, precisely aligning with the strategic objectives. 3 Final recommendation: the mixed signals in the immediate short term, 1M, 5M, suggest holding off instant trades unless a clear bull reversal pattern is identified. However, with predominant strengths in longer time frames, especially 1D and 1WK, a buy recommendation is favored once an optimal entry point is determined. To refine this strategy further, continuous monitoring of market conditions, updates on global economic variables, and staying tuned with blockchain-specific news that could immediately impact market sentiment are vital. Such a disciplined approach ensures not only capitalizing on lucrative trading opportunities but also substantially mitigating risks in this highly volatile market. Analysis. To determine the optimal strategy, we have to analyze the detailed indicator data and derivative forecasts across different time frames. Your goal is to find trading opportunities that maximize profit while effectively managing risk, keeping in mind the desired risk-reward ratio of 1:2. Key observations. 1. Short-term trends, 1M, 5M, 15M. 1M time frame. Contradictory signals indicate minor buying momentum, but it's weak. 5M time frame, strong selling pressure. Despite bullish chart patterns, technicals show a downward trend. 15M time frame, strong buying momentum indicated by both EMA and MACD. 2 medium to long-term trends, 90M, 1H, 1D, 5D, 1WK. Majority bullish signals across 90M, 1D, 5D, and 1WK. Only 1H shows mixed signals, bearish MACD divergence but overall bullish pattern. Longer time frame EMAs and MACD confirm strong upward movement in the medium and long term. 3 critical indicators. RSI levels. 90M RSI is quite high, 79.31, indicating potential overbought conditions in the near term, leading to minor retracements. MACD divergence, mostly bullish, indicating momentum behind price rises, except for short-term conflicts. Considerations. Short-term volatilities can risk immediate entries. Longer-term robust bullish patterns provide more reliable trading opportunities. Recommendation: buy. Entry point: aim for a momentary dip as indicated by the high RSI in 90M, suggesting a potential temporary pullback. Ideal entry could be slightly lower than current levels if a brief sell-off occurs due to short-term profit taking. Exit strategy: take profit and stop loss points. Take profit, plus 20% from entry point. This leverages the strong upward momentum predicted on higher time frames. Stop loss, minus 10% from entry point. This accounts for unforeseen short-term drops while preventing significant erosion of capital. This strategy not only aims at maintaining a risk-reward ratio of about 1:2 but also is calibrated to optimize the potential bullish trend evidenced distinctly in longer-term analyses. Ensure to continually monitor the RSI and MACD for any major discrepancies throughout the trade's life cycle. Analyzing the provided data, and considering the objective to maximize profit while keeping risk under control, here is a detailed plan. Analysis of indicators and signals. 1. Short-term analysis, 1M, 5M, 15M. 1 minute and 5 minutes, both these time frames exhibit a sell signal which might indicate immediate bearish sentiment. 15 minutes, a strong buy signal is seen with bullish patterns like double bottom and golden cross indicating short-term trend reversal or upward momentum. 2. Medium-term analysis, 1H, 90M. 1 hour, mixed signals are observed. The MACD is above the signal line, which is typically bullish, but the derivatives suggest to predominantly sell. 90 minutes, strong bullish indicators including a higher RSI, signals a solid buying momentum in this time frame. 3. Long-term analysis, 1D, 5D, 1WK. 1 day and 1 week, both these time frames show strong buy signals with high derivative forecasts indicating robust bullish momentum. 5 days, despite the bullish patterns, the RSI is quite low, suggesting possible overselling, but this needs to balance with the ongoing downtrend. Final recommendation, moderate buy. Given the mixed signals in shorter time frames and stronger bullish indicators in longer frames, a moderate buy strategy is recommended. However, timing the entry effectively by considering the stability observed in the 90M time frame would be crucial. Entry, take profit, and stop loss strategy. Entry point, look for stabilization or small pullback in the 15M or 90M time frame as an entry point. This should ideally be when the MACD on the 15M aligns more closely with the bullish signals, e.g., MACD crossing above the signal line. Take profit, set a take profit level at approximately plus 5% from the entry price. Given the bullish sentiments in the longer terms, there is a reasonable expectation for this movement. Stop loss, place a stop loss at minus 2.5% from the entry price. It's relatively tight but necessary to safeguard from high volatility and uncertain shorter-term downtrends seen in 1M and 5M data. Risk-reward. The suggested strategy provides a risk-reward ratio of 1:2, aligning with the given trading objective. Monitoring. It's crucial to monitor the trade post-execution, especially the MACD and RSI shifts on the 15M and 90M time frames. Adjustments, like trailing stops or revised take-profit levels, might be necessary based on market conditions and emerging trading patterns. Conclusion. Opt for a cautious buy considering the overall upward trend in longer time frames but be prepared for volatility in shorter spans. Use technical signals for timing the entry and managing the trade actively. Analyzing the data presented. Entry points. The short-term indicators, 1M, 5M and 15M, and medium-term indicators, 1H, 90M, show strong bullish signals. The longitudinal EMA data across these different time frames is showing a general uptrend, and all moving averages are trending above their longer-term counterparts, except for the 1M where it's very close. Notable, the MACD values across these timescales are largely above their respective MACD signals, which supports the buying momentum. Additionally, RSI levels, although high in the 90M and 1H slots, are not yet into extreme overbought territory, except slightly in the 90M time frame at 80.25, typically considered overbought post-70. Derivative analysis. The derivative forecast signals ranging from 1M to 1WK unanimously recommend buying. This is in concordance with the pattern and chart indicators that demonstrate persistent bullish patterns such as double bottoms and golden crosses across all time frames. Given these inputs, the recommendation would be a buy. However, since the final signal was hold, this suggests there may be underlying volatility or uncertainty that the derivatives might not fully account for. Risk-reward calculation and controls. Aiming for a risk-reward ratio of 1:2, appropriate entry, take profit, and stop-loss levels need to be set. Stop-loss, SL, should be a reasonable buffer below the current price levels to support natural fluctuations without exiting the position too early. Given the more volatile nature of short-term trends and a somewhat significant risk in mid-long-term discrepancies in EMAs of 5D and longer time frames, setting a stop-loss around 3 to 4% below the current market price seems conservative. Take profit, TP, can be more ambitious yet realistic, reflecting twice the stop-loss boundary, hence about 6 to 8% above the current market price. Conclusion. Action, buy. Stop loss, 3 to 4%. Take profit, 6 to 8%. This trading strategy hinges on the recent strong bullish signals and expectations for continued upward movement. However, it remains sensitive to any sudden downturns, potentially stemming from longer-term concerns reflected in some daily and weekly time frames, captured by the conservative stop-loss. This actively manages the risk while seeking to capitalize on currently favorable market conditions. Analyzing the provided data, here are my findings and subsequent recommendations based on the current cryptocurrency market indicators, time frame analysis, and derivatives. Indicator analysis. EMA, exponential moving averages. The EMAs on shorter time frames, 1M, 5M, point towards a possible downtrend or consolidation as they hover closely together and below those on higher time frames, 1D, 5D, 1WK. However, longer time frames show a slight bullish bias with larger gaps between the EMAs, suggesting an upward trend momentum. MACD, moving average convergence divergence. There is a bullish divergence on higher time frames such as 90M, 1H, and 1WK where MACD lines are above the signal lines. This is significant in 1D and 1WK, hinting at potential sustained upward momentum. The 15M MACD also resonates with bullish sentiments. RSI, Relative Strength Index. The RSI is particularly overbought in the longer time frames, 90M, 1H, which might hint at temporary pullbacks. Short-term frames present mixed signals, but the long-term RSI, like 1D and 1WK, is not in the overbought zone, which indicates there is still room for upward price movement. Patterns and chart formations. Recurring patterns across the data suggest bullish sentiments with patterns like the double bottom and golden cross appearing across multiple time frames. Derivative forecasts. Shorter time frames like 1M and 5M suggest sell, but buying sentiment improves as we move to larger time frames, 1-5M up to 1WK, indicating that the market might be preparing for a more substantial upward movement over time. Aggregated final signals. While the immediate signals, 1M and 5M, suggest sell, the medium to longer term signals advocate for a buy. This indicates that now might be a good time for entering the market with longer-term bullish expectations. Trade recommendation. I recommend a buy entry, aligning with the medium to long-term bullish signals from both technical indicators and derivative forecasts. Risk management and trading strategy. Take profit. Consider setting the take profit around a plus 3% to plus 5% from the entry price, in alignment with the bullish patterns and potential resistance levels calculated from the EMAs and historical price action. Stop loss. Set the stop loss at approximately minus 1.5% from the entry price. This ratio ensures that we are keeping the risk-reward at about 1:2, adhering to prudent risk management rules. Conclusion. This position should be monitored closely, especially watching the RSI and MACD on shorter time frames for potential sell signals or overbought conditions which may precede pullbacks. Adjust stop loss and take profit levels as necessary based on new data and market conditions. This strategic entry, combined with disciplined financial management, should allow for capitalization on current bullish trends while protecting against downside risk. Based on the extensive trading data provided and analyzing all key indicators and derivative forecasting, a comprehensive decision can be formulated for an optimized entry and exit strategy. Here's the breakdown. Analysis of indicators across time frames. 1. Short-term indicators, 1M, 5M, 1-5M. EMA trends. Emerging crossover signals in the 1M and 5M time frames indicate a potential upward movement in the immediate short term. However, there is inconsistency in the 1M signals as the EMA values are very close together, suggesting possible instability or short-term consolidation. MACD. Positive momentum is evident at the 5M time frame with MACD trends beginning to favor bullish signals indicated by a crossover above the signal line. RSI. Values below 50 in 1M and 5M suggest some level of undervaluation, potentially indicating a buying opportunity, but caution is required due to possible volatility. 2. Mid to long-term indicators, 1H, 1D, 5D, 1WK. EMA trends. The disparity between short-term EMA, 10, and longer EMAs, 20, 50, in the 1H time frame indicates momentum, although it starts signaling sell in derivative forecasts. MACD. Strong bullish signals persisting across daily and weekly charts suggest underlying strength in the asset's price over the longer term. RSI. mixed readings with higher periods showing values that suggest overbought conditions, 73.30 for 1H, 79.40 for 90M, which could signal upcoming price corrections or stabilization. Aggregated signals and trading strategy. Majority buy signals. Aggregated signals from 5M through to 1WK indicate buy except for a 1H which indicates sell. This could implicate a potential for short-term pullbacks amidst a general bullish trend. Trading recommendation. Final trade signal, buy. Entry point, immediate, focusing on prevalent buy signals from 5M, 15M, daily, and weekly forecasts. Take profit, set at 3% from the entry point, aligning with short-term volatility and potential quick gains from prevailing bullish sentiment. Stop loss, 1.5% from the entry point, offering a strategic exit that minimizes potential downtrend risks while maintaining a 1:2 risk-to-reward ratio. Rationale. The dominant buy signals across the majority of time frames suggest an overarching bullish trend, justifying a buy stance. Given the volatile nature of cryptocurrency markets, shorter-term trades with calculated and tight stop losses and take-profit thresholds are advised. This strategy aligns with the observed trends and indicator forecasts, balancing potential rewards with appropriate risk management. Conclusion. The overall interpretation of trading indicators and forecast derivatives strongly suggests a bullish scenario in the near to midterm. Hence, entering into a buy position with specified exit and stop-loss margins is recommended to capitalize on the predicted market movement whilst effectively managing inherent trading risks. Analyzing the provided trading and derivative data across multiple time frames for a cryptocurrency, it seems evident that the market is showing a generally bullish trend, with notable discrepancies in the daily and 5-day time frames. Summary of key indicators. Shorter time frames, 1M, 5M, 15M, 1H, 90M show strong buy signals with a consistent pattern of bullish chart patterns, double bottom, golden cross, high MACD values relative to their signal lines, and relatively high RSI values, except for 5M. These indicators suggest a strong upward momentum. Daily, 1D also shows bullish momentum with a substantial positive derivative forecast but notes MACD below the signal line, which traditionally would suggest caution. RSI is moderately strong, which still supports bullish sentiment. 5-day, 5D the MACD is significantly lower relative to the signal line, and the RSI is very low at 29.30, indicating potential overselling. Despite the derivatives forecasting a buy, this time frame suggests underlying volatility or potential for a corrective bounce. Weekly, 1WK strong buy signals from derivatives forecasts. The high disparity between MACD and its signal line here should be handled with caution as it indicates strong recent movements, which could either consolidate or retract slightly. Final recommendation, buy. Given the predominance of bullish signals across the majority of time frames and particularly strong forecasts from derivatives, entering a buy position is advisable. Though there is a bearish signal from the 5-day data and slight caution in daily data, the aggregated view leans towards bullish potential. The recommendation to buy is further supported by generally bullish patterns, double bottoms and golden crosses, consistently across all charts. Entry, stop loss, and take profit strategy. Entry point, immediate entry given the consistent buy signals in shorter time frames. Stop loss, set a stop loss at 3% below the entry price. This percentage helps manage the risk, considering the volatility indicated by 5-day and daily discrepancies. Take profit: set a take profit at 6% above the entry price. This gives a 1:2 risk to reward ratio, optimizing potential returns while safeguarding against undue risk. Additional tips: monitor closely. Given the discrepancies and the high volatility inherent in cryptocurrency markets, it is essential to actively monitor the trade. Adjust stop loss and take profit levels in response to significant price movements or changes in market sentiment. Be prepared for volatility, especially due to the anomalies in the 5D signals alongside generally bullish trends. Be ready for sudden dips or spikes. Utilizing tools like trailing stops might be beneficial once in profit to safeguard gains. This trade setup provides a balanced approach to capitalize on current market trends while managing risk responsibly. Always be prepared to adjust strategies based on real-time market developments. Analyzing the provided trading data covering various time frames and including a breadth of technical indicators and derivatives, the predominant sentiment across multiple indicators is bullish, highlighting a potential opportunity for entry. Final recommendation: buy. Rationale: short-term analysis, 1M, 5M, 15M, 1H, 90M. Despite a sell signal on a 1-minute time frame, the 5-minute to 1-hour time frames show strong buying signals and increasing positive momentum as evidenced by MACD values above the signal line and rising RSI values. Mid to long-term analysis, 1D, 5D, 1WK. The daily, 5-day, and weekly time frames exhibit sustained buying signals with EMAs in longer time frames trending upwards. This indicates a strong underlying bullish trend, particularly emphasizing a robust buy signal on the daily time frame with an RSI in neutral territory, leaving room for potential price appreciation. Overall technical patterns: all analyzed time frames show bullish chart patterns, including double bottoms and golden crosses, reinforcing the strength of the buy recommendation. Entry, take profit, and stop loss recommendations. Entry point: considering the aggregated signals and bullish patterns, executing a buy order at or near current market prices is advisable, aiming to capture the bullish momentum. Take profit strategy: Target 1, set the initial take profit level at a 5% increase in price from the entry point. This first level caters to short-term gains as per indicators from 15M to 1H charts. Target 2, the second take profit level should be set around a 10% increase from the entry point, guided by daily and weekly chart momentum, which shows longer sustained bullish trends. Stop loss strategy: a stop loss order should be implemented at a level 2.5% below the entry price. This tight control balances the risk, adhering to the desired risk-reward ratio of 1:2, and is justified by the overall bullish sentiment observed across most time frames. This placement also protects from volatility and potential short time frame discrepancies observed in the 1-minute data. Risk management. Position sizing. Adjust the size of the trade to ensure the risk is appropriate for your overall trading capital. Typically, risking 1 to 2% of your capital on this trade is recommended. Regular monitoring and adjustment. Given that cryptocurrencies are highly volatile, it's essential to monitor this trade frequently and be ready to make adjustments, especially if any significant divergence from expected trends occurs. Quick reactions to RSI divergences, MACD crossovers, and unexpected patterns are key. This strategy leverages the prevailing bullish sentiment while respecting inherent market risks, offering a balanced approach to capture gains and protect against losses. Analysis of trading data and indicators. Short-term analysis, 1M, 5M, 15M. 1M, despite the slightly overbought RSI and very short-term sell derivatives forecast, the bullish patterns and moving averages suggest potential for some upside. This time frame shows mixed signals. 5M, strong bullish indicators with a higher RSI hint at buying pressure, supported by positive derivatives. 15M, very high RSI indicates overbought conditions, however, all derivatives and bullish patterns support sustained upward movement. Medium-term analysis, 90M, 1H. 90M and 1H, both indicate very strong buying signals with high RSIs. MACD values are positive and consistently above their signal lines, and EMAs are trending upward. These time frames suggest a bullish momentum. Long-term analysis, 1D, 5D, 1WK. 1D, indicates a bullish turnaround with negative recent MACDs that are improving as seen by the divergence between MACD and its signal. RSI at middle range shows more room for upward price movement. 5D, although showing a negative MACD value, the general trend among all indicators points towards recovery, supported further by a very bullish derivative forecast. 1WK, strong buy derivative signals contradict the slightly neutral RSI, but overall suggest a strong bullish trend. Aggregated signal and final recommendation. Given the predominantly bullish signals across the majority of time frames, especially in the medium and long term, coupled with strong derivative forecasts, the recommendation is to buy. Entry point, close to current market price, given the upward trend across most indicators. Ideally, enter after a minor dip if observed in the short-term charts, e.g., 1M or 5M, to optimize the entry. Take profit and stop loss settings. Take profit, set at plus 7%. This would capitalize on the expected upward movement without overstaying in volatile conditions, especially pertinent in cryptocurrencies. Stop loss, set at minus 3.5%. This keeps the risk in check while allowing some room for the usual volatility in cryptocurrency prices. Risk-reward ratio. The setup here offers a risk-to-reward ratio of approximately 1:2, aligning with strategic trading principles that manage risk while maximizing potential returns. Final note. While the final aggregated preliminary signal was hold, the analysis of underlying data suggests the market conditions favor a buy strategy. Continuous monitoring of the trade with adjustments to stop-loss/take profit thresholds based on actual market movements and emerging patterns is advisable. Analysis of cryptocurrency trading data. Key indicators and derivative analysis. Short-term derivatives, 1M, 5M, 15M. The 1-minute and 15-minute frames show strong buying signals, while the 5-minute is more mixed with a lean towards selling based on derivative signals despite bullish indicators like the golden cross and double bottom patterns. Medium to long-term derivatives, 1H, 90M, 1D, 5D, 1WK. Consistent with buy signals across almost all these durations. Particularly, the daily and weekly signals are significantly strong and bullish, indicating a strong market sentiment for sustained upward movement. MACD and RSI observations. Short to medium time frames, the MACD suggests strong momentum in favor of buying, where the value is significantly above the MACD signal, especially notable in the 15-minute, 90-minute, and 1-hour charts. Long-term charts, 1D, 5D, 1WK. There is a noticeable divergence in the daily time frame where MACD is below its signal, potentially indicating overstretched buying. However, other long-term charts suggest a bullish trend. Moving averages analysis. EMA analysis across all time frames. EMAs on shorter time frames, especially 1M, 5M, 15M, suggest a trend where shorter EMAs are above longer-term EMAs, indicating upward momentum. In contrast, daily and weekly EMAs provide a coherent picture supporting a bullish scenario in the medium to long term. Volume and price patterns. Bullish patterns such as double bottom and golden cross are observed across almost all time frames, reinforcing buying considerations. Derivative aggregated signals and preliminary final signal. The derivatives largely indicate a strong buy signal across multiple time frames, except for a minor sell consideration at 5 minutes, likely due to short-term volatility or pullbacks. Despite the aggregated derivative and indicator signals leaning towards strong purchasing indications, the preliminary final signal was to hold. Final recommendation. Trade action, buy. Take profit and stop-loss calculations. Given the strong buy signals, particularly in longer time frames, and some volatility in short-term frames, defining risk management parameters at a 1:2 risk-reward ratio is prudent. Stop-loss, set at approximately 5% below the buying price. This allows room to maneuver should there be sudden short-term market downturns without deviating significantly from the loss threshold. Take profit, set at approximately 10% above the purchasing price. This profit margin captures reasonable gain based on the strong upward trends indicated and allows timely exit before potential corrections. Trading strategy. 1 entry point, immediate entry based on current market prices, provided the market doesn't show sudden negative changes. 2 monitoring, closely monitor 1M and 5M derivatives for any shift towards stronger sell signals, which might necessitate re-evaluation of stop-loss strategies. 3 adjustment strategy, if the price approaches stop-loss thresholds without triggering, consider whether market fundamentals have shifted and reassess both stop-loss and take-profit settings. This structured approach allows taking advantage of significant upward market trends while maintaining strict control over potential losses, aligning with the overall strategy of maximizing profits with controlled risk exposure. Analyzing the provided data results in the following insights and recommendations for the cryptocurrency trade. EMA Insights. Short-term views, 1M, 5M, 15M. The EMAs indicate a rising trend as the shorter-term EMAs are positioned above the long-term EMAs, although the derivative forecast suggests a short-term pullback on 5M and 15M time frames. Medium to long-term views, 1H, 1D, 1WK bullish, as 1H and 1D EMAs are strategically positioned for a buying opportunity, and the derivative indicators support this with strong buy signals. Divergence in 5D, noteworthy that despite bullish patterns, the RSI is indicating possible overselling in the 5-day EMA, suggesting market uncertainty or correction potential. However, this time scale is a slight deviation from the general bullish outlook of other time frames. MACD and RSI insights. Short-term time frames are mixed with bullish signs in very short intervals, 1M, but sell projections in 5M and 15M derivatives forecasting, suggesting potential short-term volatility or corrective DIPs. Long-term, 1D, 1WK. Both these time frames show strong bullish indicators. MACD and RSI signals are proving to be favorable for a buying strategy. Derivative forecasts and general market indication. Nearby time frames, 1M, 5M, and 15M, show mixed signals, rendering them unreliable for a solid trade strategy at the moment. The more comprehensive time frames, 1H, 1D, 1WK, are largely suggesting a buying indication, making them the decisive factor for this analysis. Final recommendation: buy. Entry strategy. Entry point: consider entering shortly after a minor dip or pullback within the immediate 1M-15M periods if observed, leveraging the bullish long-term trend. Exit strategy. Take profit level: recommend setting take profit at plus 4% from entry, considering the prevailing bullish outlook and statistical backing from longer EMA periods and the strong buy signals in derivative forecasts. Stop loss level: setting the stop loss at minus 2% from entry can be prudent, ensuring risk management maintains a 1:2 risk to reward ratio. This considers the potential short-term volatility indicated by 5M and 15M time frames. Conclusion: despite short-term discrepancies, the overarching long-term data points to a robust bullish trend. Entering the market with a careful eye on immediate short-term movements and securing the position with disciplined take profit and stop-loss orders would be a strategic approach in the current market environment. Always be prepared to adjust strategies based on real-time market movements or unforeseen economic events impacting market dynamics. After close examination of the provided trading data, including indicators across multiple time frames and derivative forecast data, let's summarize and analyze the key points for an actionable trading recommendation. Indicators analysis. 1 short term, 1M, 5M, 15M. EMA, the prices have been consistently above longer period EMAs showing a bullish trend, but with recent slight pullbacks as evidenced by EMAs across the 1M and 5M time frames. MACD, across the 1M and 5M time frames, MACD lines are above the signal lines, yet the derivative data signals sell for 1M and 15M, which could be indicative of an immediate term overextension in price. RSI values are relatively high, over 50, showing buying pressure. However, notably high RSI on the 15M period can imply overbought conditions. 2 medium term, 1H, 90M. Strong buy signals from both MACD and derivative forecasts align, suggesting a robust upward momentum that overcomes any short-term pullbacks. 3 long-term, 1D, 5D, 1WK. Although daily MACD values are negative, the bullish pattern persists, and the derivative forecasts strongly suggest buy. This likely indicates a recent corrective phase but an overall bullish trend maintained. Final recommendation. Aggregated signals generally incline towards a buy, with particularly robust signals from the longer time frames of 1H and upwards. The short-term sell suggestions might reflect minor retracements rather than trend reversals. Trade entry, given the strength in medium and long-term indicators, coupled with the buying pressure reflected in RSI values and MACD readings, initiating a buy position seems prudent. Ideally, wait for a minor pullback on the short-term scale, possibly within the realm of 1M or 15M indicators suggesting sell, to execute a buying order. Risk management. Stop loss. Set a stop loss at around 5% below the current price to shield against unforeseen pullbacks and maintain a controlled risk exposure. Take profit. Set a take profit level at approximately 10% above the entry point. This offers a 1:2 risk to reward ratio, optimizing potential earnings while keeping risks in check. Conclusion. The convergence of positive signals, especially from longer-term views with temporal short-term sell indicators likely indicating modest price dips, make this an opportune moment to enter a buy position. The suggested risk-reward setup at 1:2 through specified stop-loss and take-profit commands should effectively capitalize on this analyzed potential while safeguarding investment balance. In conclusion, your action should be to buy, honoring the outlined stop-loss and take-profit guidelines to align with sound trading mechanics and risk management practices. Analyzing the aggregated indicators and the signals from derivatives data, here is a structured analysis to arrive at a trading decision. Current market sentiments. 1. Short-term indicators, 1M, 5M, 15M, 1H, 90M. 1-minute and 90-minute frames suggest strong buying signals, with all derivatives indicating a buy signal and a predominantly bullish pattern observed in the technical indicators like MACD and RSI. 5-minute frame shows a divergence where MACD suggests a strong buy but RSI is slightly overbought. This time frame's derivatives data suggest a sell, which could be indicative of a very short-term pullback. 15-minute and 1-hour frames are mixed with a majority of buy signals in derivatives, suggestive of a bullish bias but with cautions on possible retractions due to high RSI levels indicating potential overbought conditions. 2 long-term indicators, 1D, 5D, 1WK. 1-day and 1-week frames show strong buy signals across both EMA and MACD values, though the RSI values are at moderate to slightly bullish levels. The derivatives are uniformly suggesting a buy here, indicating a strong confidence in medium to long-term upward momentum. 5-day data displays the most contradiction, with buy signals in the derivatives not aligning with the MACD, which suggests negative momentum, and a very low RSI indicating the asset might be oversold. Considering the longer period, this might suggest a caution or a longer-term consolidation. Trade strategy. Entry point. Given the overall bullish signals, especially in the shorter time frames and select longer frames, entering on a slight pullback would be optimal. Exit point. Set profit targets based on resistance levels found in the 1-hour to 1-day charts. Recommendations. Action. Buy on near-term weakness signaled by short-term, e.g., 5M or 15M, retractions. Take profit. plus 12% to plus 15% from entry. This capitalizes on potential short to medium-term upticks while respecting asset volatility. Stop loss, 6% from the entry point. It maintains a risk-reward ratio of about 1:2, recognizing the volatile nature of the cryptocurrency markets. Conclusion: the decision to buy is based on strong bullish signals from both long and short-term data, with particular emphasis on entering at a short-term retracement to balance risk management. The profit target and stop loss have been set considering the prevalent market conditions and volatility indices to ensure a strategically beneficial and cautious trade execution. Based on the analysis of the comprehensive trading data provided for different time frames, here's a detailed breakdown and final recommendation. Short-term analysis, 1M, 5M, 15M. Although bullish patterns and signals are observed in 1-minute and 5-minute time frames, the derivative indicators from 5-minute and 15-minute time frames show overall sell signals, suggesting potential short-term volatility or pullback. Mid-term analysis, 90M, 1H. Both 90-minute and 1-hour time frames show strong buy signals on nearly all indicators. The MACD values are well above the signal line, which, combined with prolonged RSI values over 77, indicate rising bullish momentum. These suggest solid entry points in the short mid-term. Long-term analysis, 1D, 5D, 1WK. In the daily, 5-day, and weekly analyses, bullish patterns persist with significant upward movement potential indicated by derivative projections. All three have high buy signals with increasing MACD above the signal line in the daily analysis and significant buy recommendations from derivatives. Long-term momentum is strongly bullish. Final recommendation, buy. Given the strongly bullish long-term signals contrasted by short-term volatility, enter a position aimed at capturing the predicted upward movement while mindful of short-term pullbacks. Entry point. It is advisable to enter after a minor short-term pullback, as suggested by the 15-minute sell signals. Monitor the 5-minute and 15-minute charts for a minor dip and consolidate your entry there. Take profit and stop loss. Take profit. Set take profit at around plus 10% from the entry point. Given the upward trends in longer time frames, this profit margin is reasonable. Stop loss. Set stop loss at minus 5% from the entry point. This ratio provides a 1:2 risk to reward scenario, keeping in line with minimizing exposure while aiming for profitable exits. Implementation. Execute a buy order during short-term dips as noted in 5-minute and 15-minute charts, then employ a trailing stop loss to safeguard gains beyond the initial risk-to-reward setup should the price continue to rise substantially, to potentially capture greater profit while protecting against reversal. Monitor the trade closely, particularly how the price action responds to the EMA levels on the 1-hour and daily charts, since breaking these could signify further bullish momentum or potential pullback. Adjust the stop loss accordingly. Analyzing the given cryptocurrency trading data and indicators across various time frames, your primary objective is to find a judicious entry point that aligns with a low-risk, high-reward scenario, maintaining a risk-reward ratio of 1:2. Below I've synthesized the information to make the best trading decision. Analysis breakdown. Short-term indicators. 1M, 5M, 1-5M intervals. Here we observe mixed signals with the 1-minute interval suggesting a buy, while both 5-minute and 15-minute intervals show a sell. The RSI levels are mixed with a slight skew towards oversold conditions, especially in the 5M interval, signaling potential undervaluation or a setup for corrective bullish movement. Medium-term indicators. 1H and 90M intervals show relatively high RSI, indicating overbought conditions, with the prevailing bullish sentiment, as evident by chart patterns like the Golden Cross and the bullish persistence in derivatives forecasts. Long-term indicators. 1D, 5D, 1WK intervals. These intervals suggest stronger bullish signals consistent in daily and weekly data. Notably, on a weekly interval, despite an RSI presenting mildly into oversold, the MACD values are considerably bullish, marking potential for upward momentum. Consolidated strategy and recommendations. Entry strategy. Considering the bullish signals predominantly in the long-term scales, 1D, 5D, 1WK, it encourages a buy strategy. Notably, 90M and daily derivatives forecast present compelling buy conditions. A strategic entry would be advisable during a minor pullback in shorter intervals, possibly aligning with the noted oversold conditions in the 5M and 1-5M timelines. Risk management. Given the volatility marked by conflicting signals in shorter intervals, your stop loss should be strategically placed to accommodate mild fluctuations but protect from significant downturns. Stop loss. Set stop loss around 3% below the entry point. This allows room for minor fluctuations without precipitating unnecessary exits on short-term DIPs. Take profit. Set take profit levels at approximately 6%, aligning with the 1:2 risk-reward ratio. This target should be within reach, considering the bullish outlook in long-term intervals. Final recommendation. Action, buy. Reasoning, strong long-term bullish forecasts, good risk-reward setup, opportunities for entry during short-term pullbacks. Stop loss, 3% below entry point. Take profit, 6% above entry point. Remember, while the data suggests a bullish outlook, always monitor market conditions as cryptocurrencies can be highly volatile and influenced by external factors not captured in technical analysis. Monitor positions regularly and adjust stop loss/take profit thresholds as necessary to dynamically manage risk and capitalize on evolving market trends. Analysis Summary. Time Frame Analysis. Shorter time frames, 1M, 5M, 15M signals indicate bearish momentum with the exception of the 1M derivatives suggesting a buy. RSI values below 50 and negative MACD values point towards a selling pressure. Medium time frames, 90M, 1H. The signals are mixed with the 90M time frame showing bullish trends through RSI and MACD. However, the 1-hour time frame has a stronger bearish signal, which might indicate a short-term resistance or turnaround. Long-term time frames, 1D, 5D, 1WK. These show a clear bullish trend with each having RSI values in a safer range indicating upward momentum. The derivatives and MACD support these trends despite a significant bearish pressure depicted in the 5D time frame with MACD below the signal line. Aggregated Preliminary Signal Assessment. The shorter time frame suggests caution for immediate buys, pointing towards short-term sell or hold. The medium time frame has mixed signals making immediate decisions risky without further data. The long-term perspective shows potential buy opportunities, supported by MACD, pattern recognitions, and positive derivative values. Recommended trading decision. Action: buy. Entry: take profit and stop loss guidelines. Entry: based on the composite view but anchored largely by long-term bullish signals, a strategic entry position should be slightly above the current prices to confirm continuation of the uptrend. Waiting for the shorter time frames to align with the long-term trend, show at least neutral if not bullish signs, can provide a safer entry point. Take profit. Given the bullish long-term trend and EMA positions for daily and weekly time frames, setting a take profit level of plus 10% from the entry price seems reasonable. This accounts not only for reading the MACD positive divergences but also extrapolating the bullish patterns and resistance levels previously achieved. Stop loss. A stop loss should cautiously be at -5% from the entry price. This percentage is set considering the ongoing volatility and the negative short-term indications which could prompt downside risks more than anticipated. Rationale for risk-reward and final thoughts. The proposed risk-reward ratio is about 1:2, aligning with the trading strategy aim. Considering the discrepancies in short-term and medium-term signals, this ratio allows room for adverse movement yet capitalizes sufficiently on the bullish long-term momentum. Confirming entry with stabilization or slight bullish recovery in the short time frames could increase reliability of the momentum continuing and matching the long-term trends. Frequent review of short and medium-term indications is recommended after entry to ensure alignment or early signs of divergence from expected trends for potential strategy adjustment, including possibly advancing the stop-loss point to break even when appropriate. Analyzing the given data, we find a mixed signal environment in the short term with the immediate signals like 1M, 5M, and 15M leaning towards sell, while longer terms, 1H, 1D, 5D, 1WK, show a tendency towards buy. This scenario suggests the presence of volatility with potential long-term upward trends masked by short-term pullbacks or corrections. Key observation. 1. The 1M, 5M, and 15M time frames suggest selling, potentially due to recent price corrections or temporary market sentiment changes. 2. However, both the indicators, EMA, MACD, RSI, and derivatives on longer time frames, 1H, 1D, 5D, 1WK, signal significant bullish trends. This could be indicative of a stronger fundamental or macroeconomic influence driving the price up in the long term. Decision points. Given that the short-term signals are bearish, and long-term signals are decidedly bullish, the best strategy is to adopt a position that benefits from the long-term trend while mitigating short-term risks. Recommended action: hold, with conditions to buy. Hold for now, monitoring the near-term market movement closely. Transition to buy upon positive confirmation in short to mid-term time frames, such as a flip from sell to neutral or buy on the 15M or 1H charts. This switch could be triggered when more immediate RSI levels, like on the 1M or 15M charts, arise from potential oversold conditions, noted by low RSI values, and align more with the 1H and daily bullish signs. Entry strategy. Plan for entry. Monitor for a steady climb in RSI in the 1M or 5M time frames above 40 combined with a narrowing MACD gap towards its signal line, which would suggest gaining momentum. Confirm buy signal. Look for consistency of bullish signs across several short and medium-term indicators and derivatives. Risk management. Stop loss. Set the stop loss at approximate 3% below the buying price. This tight stop loss accounts for the volatility indicated by the conflicting short-term signals. Take profit. Set the take profit at about 6% above the entry, buy, price. This 1:2 risk-reward ratio is conservative but prudent given the mixed market signals. Conclusion. Currently, the advisement is to hold, with preparations to act on a buy signal if short-term indicators shift favorably, aligning with longer-term bullish trends. This approach not only aims to capitalize on what appears to be a bullish long-term trajectory but also ensures a controlled risk exposure given near-term uncertainties. Monitor closely and be ready to initiate the buying sequence once positive convergences are observed in the short-term indicators. Analyzing the comprehensive data provided, we can determine an optimal trading strategy focusing on maximizing profit while effectively managing risk. The indicators and derivative forecasts span multiple time frames, offering insights into short-term volatility and long-term trends. Time frame analysis. Short-term, 1M, 5M, 15M. The short-term indicators show a predominance of sell signals, reflective of immediate downward pressure or volatility. Despite bullish patterns, double bottom, golden cross, the majority of derivative signals point toward a negative short-term price movement. Medium term, 1H, 90M. The 90-minute time frame shows a strong bullish signal with a significant divergence between MACD and its signal line and high RSI, suggesting potential overbought conditions but still room for price growth. However, the hourly signals are predominantly bearish, suggesting caution. Long-term, 1D, 5D, 1WK. These intervals show a consistent bullish pattern with bullish signals overwhelmingly present in derivative forecasts and technical indicators, suggesting solid long-term growth potential. Recommendations. Action: buy. Entry point. Recommended entry: based on the overall bullish patterns on longer time frames and considering the current market sentiment analyzed from EMAs, MACD, and RSI, an entry shortly after any minor short-term pullbacks could be timed effectively when the market shows a slight recovery indication in the short term, i.e., 1H time frame turning more favorable. Exit, profit-taking, strategy. Take profit point. Given the bullish nature in 1D, 5D, and 1WK time frames, setting a take profit at around a 15% increase from the entry point optimizes profits while also considering typical crypto market volatility. Risk management, stop loss, strategy. Stop loss point: set a stop loss at about a 7.5% decrease from the entry point. This maintains the 1:2 risk-reward ratio and protects the investment against unexpected downturns due to market volatility or external geopolitical events influencing markets. Summary. The decision to buy is primarily anchored on solid positive long-term indicators coupled with the acceptable short-term risk as reflected by mixed signs. It's essential to monitor closely the short-term data regularly and adjust the entry point to ensure it falls within a slight market recovery phase, capitalizing on the bullish long-term outlook while managing the exposure to short-term declines. Trade recommendation overview. After analyzing the provided data, the recommendation to execute a cryptocurrency trade takes into account various time frames, focusing heavily on the daily and weekly trends, given the current discrepancies in shorter versus longer time frame indicators and the pivotal role of macro trends in influencing profitable entry and exit points in the cryptocurrency market. Key point analysis. 1. Short-term conflicts, 1 minute to 1 hour. Here, the indicators are mixed with sell signals in the 1 minute, 15 minute, and somewhat bearish trend on the 1 hour derivatives despite the buy signals coming from the EMA and MACD trends in the 90-minute indicators. This conflicting data suggests fluctuating market sentiment in the very short term. 2. Strong longer-term signals, 1 day to 1 week indicators at these intervals display a consistent bullish pattern. Both the MACD and RSI values, especially noticeable in the weekly data, suggest a very solid upward trend which confirms the health of the current market in respect to its possible upside. 3. EMA analysis across time frames. It's noteworthy that the EMA values across daily and weekly trends solidify and suggest a stable to upward trend, offering comfort in the longevity of a bullish stance. Final trade recommendation. Given the balance seen in the historical patterns and indicators at the moment, and converging these with the derivatives forecast, a buy recommendation is advised. Execution strategy. Entry point, current market price, CMP. Stop loss, set at a 2% decrease from the CMP to mitigate risks associated with potential short-term market volatility. Take profit, target a 4% increase from the CMP, aligning with the 1:2 risk-reward ratio. Rationale. The longer-term bullish signals, 1 day to 1 week, indicate a primary upward trend. Setting a stop loss at -2% and a take profit at +4% harnesses potential growth while responsibly containing risks, based on the observed and expected market fluctuations. Summary. Entering a trade with these settings allows capitalization on the anticipated market growth based on strong weekly signals while safeguarding against the volatility reflected in the shorter time frame assessments. This structured approach ensures an alignment with both profiteering and risk management imperatives essential in cryptocurrency trading. To provide a well-informed recommendation for trading, I will analyze the provided data, focusing on the exponential moving averages, EMAs, moving average convergence divergence, MACD, values, relative strength index, RSI, and the derivative forecasts across different time frames. The primary goal is to establish smart entry and exit points while maintaining a 1:2 risk-reward ratio. Analysis: 1 short term, 1M, 5M, 15M. 1M, bearish trend indicated by RSI being low and MACD below the signal line. Indicates a potential forthcoming uptick but remains uncertain in the immediate term. 5M, emerging bullish signals with MACD narrowing versus the signal line but still negative. RSI is low, suggesting potential undervaluation. 15M, signals are majorly bearish with a higher RSI, indicating slight overvaluation at this scale. 2 medium term, 1H, 90M. 90M, strong bullish indicators with MACD well above the signal and high RSI, signaling strength but nearing overbought. 1H, contradictorily bearish despite the higher RSI and positive MACD, suggesting a mismatch in momentum and true price strength. 3 long term, 1D, 5D, 1WK. 1D, 5D, 1WK, consistently bullish across all these higher frames, substantiating a stronger buy signal for long-term positioning, despite some inter-period volatility. Conclusion: given the mixed signals in the short term but stronger bullish signals in long-term perspectives, the recommendation would be towards a long-term positioning strategy. Recommendation: final signal, buy. Entry point, near current market prices, ideally after a minor retrace as suggested by short-term bearish signals which could offer a better entry price. Take profit, set around a 6% gain. Long-term indicators show substantial growth tendency which allows for this higher target. Stop loss, suggest setting at about 3% below the entry to ensure risk containment keeping in tune with the 1:2 risk-reward ratio. Reasoning: strong bullish tendencies in the longer time frames indicate potential continued price appreciation. Short-term signals suggest possible short-term pullbacks, which can be used to fine-tune entry points. This trade should be monitored primarily against the backdrop of macroeconomic factors affecting the cryptocurrency markets, such as regulatory news or significant global economic events, which can significantly alter the technical forecast scenarios presented. Analyzing the provided trading data across multiple time frames and indicators for cryptocurrency, it's essential to balance between maximizing profit and managing risks effectively. Here's the breakdown. Indicator analysis across time frames. Shorter time frames, 1M, 5M, 15M. The 1-minute and 5-minute intervals indicate a buy directive primarily due to bullish patterns and positive MACD divergence, moving closer to signal line. However, the 15-minute chart tells us to sell, evidenced by bearish derivative forecasts. This mixed signal suggests volatility in the very short term. Medium time frames, 90M, 1H. Both 90-minute and 1-hour intervals sway towards bullish sentiment. The MACD in both time frames is positive, juxtaposed with relatively high RSI, which though could be nearing overbought conditions, especially with a 90M RSI at 77.55, still supports a short-term bullish view. Longer time frames, 1D, 5D, 1WK. Daily and weekly signals are predominantly bullish, backed by positive derivatives data and bullish patterns. However, the 5-day time frame has an RSI at 29.15, indicating that the price might be in an oversold territory, opposing other bullish indicators at this period. Final recommended signal. Considering the overall assessment from various time frames, the market seems to be in a generally bullish phase, albeit mixed signals for very short-term trading, below 15M. The longer-term signals, 1D, 5D, and 1WK, strongly support a bullish outlook which may prove more stable. Final recommendation, buy. Entry point, given the predominance of bullish signals especially on daily and weekly intervals, entering at the current market price could be optimal. Stop loss and take profit settings. Stop loss: set a stop loss at approximately 3% below the entry price. This acknowledges the potential for shorter-term pullbacks while safeguarding against larger downturns. Take profit: set take profit at 6% above the entry price, aligning with the 1:2 risk-to-reward ratio. Given the bullish setups particularly on higher time frames, a 6% profit target is reasonable. This trade recommendation aims to capitalize on prevailing bullish trends while implementing strict risk management strategies to protect against the inherent volatility of cryptocurrency markets. Always ensure to monitor the market dynamics closely and adjust the exit strategies as per real-time market conditions. Based on the comprehensive data provided, analyzing each time frame's technical indicators and derivatives can unveil an optimal trading strategy. Here's a detailed breakdown and consequential trading recommendation. Time frame analysis. 1-minute and 5-minute durations. Both indicate a sell signal in the aggregated signals and possess relatively neutral to negative derivatives. Their short-term nature suggests a volatile environment prone to frequent changes. These quicker frames suggest a transient bearish trend, potentially due to some immediate market reaction. 15-minute time frame displays a strong buy signal with all derivatives pointing upwards. Technical indicators like MACD above its signal line and an RSI near the mid-level suggest growing bullish momentum. 1-hour and 90-minute charts. A strong buy signal in the 90-minute time frame with all buy derivatives contrasted to a sell signal in the 1-hour time frame. The conflicting signals in these closely related time frames require cautious interpretation, focusing more on the longer 90-minute positive perspective. Longer durations: 1 day, 5 day, 1 week. Strong buy signals across all three with considerable agreement in the derivatives suggesting robust bullish sentiment. EMA readings confirm upward trends in the longer term. Final recommendation. Given the backdrop of predominantly strong buy signals in the longer time frames, 5-day and 1 week, and suitable bullish indicators in the mid, 15M and 90M, time frames, combined with the transient bearish inclination in ultra-short intervals, a buy action is recommended. This provides a balanced exposure by capitalizing on underlying long-term strength while being mindful of short-term volatility. Entry, exit points. Entry point, as current short-term charts, 1M, 5M, show a slight bearish trend, wait for stability or a mild dip as an entry point which may provide a better purchase price. A good entry point would align with when RSI values on short-term charts, 1M or 5M, dip near or below 40, potentially indicating oversold conditions. Take profit and stop loss settings. Take profit, set at 10%. This target respects the analysis that a significant bullish trend could persist, but takes a conservative approach given unpredictable short-term fluctuations. Stop loss, set at 5%. It maintains a practical buffer from short-term dips while also protecting the capital efficiently. Risk-reward ratio. This recommendation specifies a strategy aiming for a risk-reward ratio of about 1:2, 5% risk versus 10% reward, aligning with the analyzed data which suggests a solid bullish potential in the broader time frames tempered by periodic adjustments required due to short-term volatilities. Final trade decision, buy. Manage the trade proactively, especially watching how short-term fluctuations correlate with the broader bullish indicators, and be ready to adjust stop loss/take profit levels as the market evolves. Analysis of the trading data. Given the diversity of time frames and the corresponding indicators and derivatives, an assessment is carried out holistically to provide a balanced trading decision. 1 short-term analysis, 1M, 5M, 15M. 1 minute, the indicators suggest selling pressure with a high RSI of 76.46 suggesting overbought conditions, confirmed by the derivative forecast recommending a sell. 5 minute, despite the indicators presenting a slight bullish sentiment, the RSI closer to the middle, 48.44, doesn't support a strong buy. However, the derivative forecast leans slightly towards buy. 15 minute, strong buy signals from both indicators and derivatives, high MACD and positive derivatives. 2 medium-term analysis, 1H, 90M. 1 hour, the signal leans towards sell based on derivatives despite bullish patterns. High RSI at 74.92 indicating potential overbought. 90 minutes, strong buy signal from derivatives and bullish charts with indicators agreeing. 3 long-term analysis, 1D, 5D, 1WK. 1 day, strong buy with positive derivatives and RSI indicating a neutral stance, which suggests room for price growth. 5 days, shows a sell in the immediate sentiment from the derivatives forecasting conflicting indicators. RSI is low at 29.29 indicating oversold, which could suggest a potential rebound as a buying opportunity in the longer term. 1 week, very bullish from derivatives perspective, but the MACD and RSI suggest room for tempered expectations. Final recommendation, hold. Given the conflicting signals across different time frames and without a clear majority leaning decisively towards either buy or sell, a hold position is most justified as immediate time frames suggest market uncertainty, while longer time frames project possible upside. Entry, exit points, should a trade be optimal in future. Entry point. Look for stability in the 1-minute and 5-minute charts if they shift towards a clearer buy signal. A subsequent rise in medium-term RSI into less overbought territory may provide a safer entry. Exit points, take profit and stop loss. Take profit, aim for a 2.5% increase from the entry point. Stop loss, set at approximately 1.25% below the entry price to maintain a risk-to-reward ratio of approximately 1:2. Notes for future trading. Observe shifts particularly in the short-term indicators and derivatives. If a buy is considered, ensure it is supported across several time frames to offset potential risks. Continuous monitoring of derivatives is crucial as they give more real-time insight into potential price directions. This decision balances the given data without over-leveraging on too volatile or uncertain market movements. Based on the comprehensive analysis of the cryptocurrency trading data and indicators provided. EMA and RSI analysis. The exponential moving averages, EMAs, on shorter time frames, 1M, 5M, though mostly bullish, don't present strong enough evidence for an immediate buy, given their proximity to each other, suggesting a potential consolidation rather than a trending move. In longer time frames, 1D, 5D, 1WK, EMAs show a more pronounced bullish trend, particularly at the weekly level where the EMAs significantly deviate, indicating strength in the longer-term uptrend. The Relative Strength Index, RSI, shows overbought conditions, above 70, in the 90-minute and 1-hour frames, which could imply potential short-term pullbacks or consolidation. MACD analysis. Short-term frames, 1M, 5M, show conflicting MACD signals. For instance, on the 1-minute chart, the MACD is above the signal line, indicating a buy, while on the 5-minute, it has weakened. The longer frames, 1D, 5D, 1WK, have a positive disparity between the MACD and its signal line, again supporting the dominance of a bullish long-term momentum. Forecast derivatives. Short-term derivatives, 1M, 5M, suggest selling or holding despite some bullish undercurrents. Given potential volatility and risk, these are not favorable for a high-conviction trade. The 15-minute frame, despite being bullish, doesn't align with adjacent shorter time frames, adding to trade uncertainty. Bullish signals in extended time frames, 90M, 1HR, 1D, 5D, 1WK, provide a more convincing case for a sustained upward trend. Final recommendation. Considering the collective data. Entry point: enter a buy trade if the price on shorter intervals dips slightly due to the overbought conditions and approaches the lower EMAs on a short time frame, like the EMA20 on the 1M or 5M charts, which would serve as a good support. Exit strategy: take profit, aim for a profit target of approximately 2 to 4%. Given the current bullish trend across most time frames, taking profit near the upper end of recent fluctuations is advisable. Stop loss: set a stop loss at around -2% from the entry point. Given the volatility and to maintain a risk-reward ratio close to 1:2, this threshold should adequately protect the downside without stopping out prematurely due to normal fluctuations. Trade monitoring: it's crucial to monitor the behavior of the price near critical EMA levels and RSI indicators through 90M to 1D intervals. If any reversal patterns emerge, take action to exit the trade to preserve capital if the market dynamics change. In conclusion, whilst there is a good opportunity to capitalize on bullish momentum suggested in longer time frames, caution is warranted at entry due to potential short-term volatility. Adjust the strategy based on real-time market developments and manage risks attentively. Based on the comprehensive set of data provided, the primary task is to synthesize trading signals from various time frames and indicators to form a conclusive action for optimal entry and exit points, while keeping the focus on risk management. Analyzing each relevant detail will help to make a sound decision. Key observations: 1. Short-term indicators, 1M, 5M, 1H. This shows a predominantly bearish sentiment as observed from both the derivative forecasts and EMA crossovers. The MACD in the 1M and 5M frames suggests a downturn as the signal lines are close or above the MACD lines, alongside an unfavorable RSI in the 1M frame, which signals an overbought condition. 2. Midterm indicators, 1.5M, 9.0M. Both the 1.5M and 9.0M frames indicate bullish conditions with positive MACD differentials and favorable RSI in 9.0M, suggesting upward momentum. 3. Long-term indicators, 1D, 1WK. Exhibits strong bullish signals with significant positive derivatives, though contrasting signals are coming from 5D indicators. It's important to note that the 5D EMA is much higher compared to the 50D EMA, which might indicate overvaluation in the very short 5D time frame, contrasting the general bullish trend on longer periods. Analysis and strategy. Time frames alignment: longer time frames, 1D and 1WK, tend to have more weight due to their broader data scope, showing a bullish trend, which aligns with the midterm insights. However, caution is evident in the short term. Risk management: with the target risk-reward ratio of about 1:2, it's crucial to set stringent stop-loss and take-profit levels. Given the anticipation of potential uplift based on long and mid-term indicators but recognizing short-term risks, a conservative approach should be combined with tight monitoring. Entry point: considering the bullish outlook in mid and long-term but short-term volatility, a strategic entry would be advised once more concrete bullish signs are observed in the 1M or 5M time frames, possibly after a small dip. Exit strategy: take profit and stop loss. Take profit: given the volatility, setting a take profit at around plus 15 to 20% from the entry point could capitalize on the forecasted upward movement without overexposing the trade. Stop loss: a stop loss around -7% to -10% from the entry point limits potential downside, adhering to our risk management principles. Final recommendation: hold, with conditional preparation to buy. Action: currently hold but prepare to switch to buy upon observing positive reversals in the short-term indicators, 1M, 5M. Reasoning: the present disparity between the short-term sell signals and the longer-term buy signals suggests awaiting clarity or a dip for optimal entry. This strategy accommodates the identified risk-reward thresholds and aligns with the predominant bullish sentiment depicted in mid to long-term analyses. Regular reassessment of the position and rapid responsiveness to indicator shifts are crucial for adapting the trade strategy to any significant market movements. Analyzing the provided data across various time frames and considering your focus on minimizing risk while maximizing potential gains, here's a detailed assessment and recommendation. Breakdown of key indicators. Short term, 1M, 5M. The indicators present bearish signals, sell. The 5-minute MACD is significantly below its signal line and RSI is downturned below 40, suggesting immediate momentum could be weakening. Medium term, 15M, 1H, 90M. Except for the 1-hour time frame showing a sell signal, the 15-minute and 90-minute indicators favor a bullish outlook with positive MACDs and RSIs above natural benchmarks, 50 on RSI, MACD line above the signal line. Long term, 1D, 5D, 1WK. The daily, 5-day, and weekly indicators are strongly bullish. All are showing MACD line above the signal line, and RSIs suggest some likely upside potential, though the weekly RSI is in a moderate zone which eases concerns of immediate overbought conditions. Derivatives analysis. Derivative buy/sell signals. Encouragingly dominating buy signals from medium to long term, 15M on upward, which, when weighed against short-term sell signals, propose that DIPs in the short term might provide favorable entry points for longer-term gains. Integrated action. Given that the indications for medium to long term are mostly bullish, and accounting for the shorter time frames bearish view as entry point opportunities rather than long-term trends, my recommendation would be inclined towards a buy, but with careful watchfulness on immediate market moves to optimize entry. Entry, stop loss, and take profit strategy. Entry point, given the volatility suggested by different time frame mismatches, an ideal entry would be around the current pricing or slightly below, hoping to exploit the short-term negative sentiment for a more favorable buy price. Stop loss, given the overall bullish longer-term sentiment but respecting the need to manage risk, a conservative stop loss of around 3% from the entry price would protect from substantial capital deterioration. Take profit, with a 1:2 risk-reward mentality, setting a take profit at around 6% above the entry point provides a realistic yet optimistic target given the bullish indicators from longer time frames. Conclusion. Final recommendation based on the analysis would be: action, buy. Stop loss, 3% below entry price. Take profit, 6% above entry price. This scenario balances the bullish sentiment in longer time frames with adequate risk control mechanisms and exploits the short-term bearish adjustments for potential better entry points. Always consider continuous monitoring and re-evaluation of positions based on real-time changes in market behavior. Analyzing the provided data, our objective is to optimize entry and exit points for trading, considering the indicators across multiple time frames ranging from 1 minute to 1 week, enriched with derivative forecasts and aggregated signals. Key insights from the data. 1. Short-term indicators, 1M, 5M, 15M. Bullish patterns and a predominance of buying signals are evident. The 5-minute time frame shows a sell derivative forecast which contradicts its bullish indicators, suggesting potential volatility or a retracement in the very short term. 2. Medium to long-term indicators, 90M, 1H, 1D, 5D, 1WK. Strong buying signals in longer time frames, 90M, 1D, 1WK, although with a notable exception at the 5D where the signal is sell. Despite the selling signal in the 5D, this time frame is surrounded by aggregated signals from neighboring 1D and 1WK intervals that indicate bullish momentum. 3. Derivative forecasts. The forecasts echo strong buying advice on longer frames. Particularly impactful forecasts seem to arise from the 1D and 1WK derivative conclusions. Final recommendation. Given the predominance of bullish signals in both short-term and long-term forecasts, alongside crucial derivative tells pointing to growth, a buy decision is recommended. However, we need to mitigate risks appropriately, particularly concerning the volatility hinted by the 5-minute time frame and divergence in the 5-day data. Trade setup. Entry point, current or near current price, provided the market does not show sudden bearish reversals shortly after entry. Take profit point, given the bullish momentum, particularly in longer timelines, setting a take profit at around +3% to +5% from entry would be reasonable. Stop loss point, to ensure a proper risk management strategy with about a 1:2 risk-reward ratio, set a stop loss at -1.5% to -2.5% from the entry price. Additional strategy notes. Re-evaluation, constant monitoring of the 5-minute and daily time frames is crucial. Should any signals diverge significantly into bearish territory, consider a strategy revision. Volume and market conditions, ensure trading volume supports the entry, as low volume might fail to sustain the indicated bullish momentum. External factors, keep abreast of market news and world events that could sway cryptocurrency markets drastically, such as regulatory changes or significant macroeconomic shifts. This trade is based on technical analysis and the given data. However, traders should combine this with personal risk tolerance and current market conditions before executing the trade. Examining the provided trading data and indicators across different time frames, we can arrive at an informed trading decision based on the aggregation of signals, price patterns, and derivatives forecast information. Analysis summary. Shorter time frames, 1M, 5M, 15M. 1M, the indicators suggest a selling pressure, RSI above neutral but not oversold, MACD negative divergence. 5M and 15M, EMA values are progressively increasing and the forecast is bullish across derivatives. Medium time frames, 1H, 90M. 90M, strong bullish indicators, high RSI indicating a potential overbought situation but continuing trend strength, strong positive MACD divergence. 1H, considerable buying pressure, RSI elevated, positive MACD divergence. Longer time frames, 1D, 5D, 1WK. 1D, 5D, and 1WK, overall bullish with a particular strong signal from weekly data suggesting deeper market confidence for long-term gains, despite the recent overperformance on the daily scale. General market sentiment. Across most examined time frames, the market shows bullish undercurrents with the exception of short bursts of sell pressure indicated in shorter intervals, 1M, 1H. Particularly on longer scales, daily to weekly, indicators and derivatives point strongly towards a continuing uptrend. Final recommendation: buy. Entry point: given the strong longer-term bullish signals and mixed shorter-term signals, entering at the current price would be optimal before further expected upsides. Exit: take profit. Point: aim for a profit of around 8%. Given the strength seen especially in weekly data, this target feels reachable within a temporal stance aligning with the medium to long-term bullish outlook. Stop loss point: set a stop loss at around -4%. This takes advantage of the 1:2 risk-reward setting while defending against unforeseen pullbacks, especially highlighted by the 1M and 1H discrepancies. Note: it is important to monitor the RSI and MACD trends closely. If RSI consistently pushes above 80 or MACD starts to reverse its divergence on longer time frames, consider adjusting stop loss tighter to protect against potential sharp retracements. External factors such as market news, economic indicators, and geopolitical events should be monitored as they can significantly impact market dynamics and invalidate technical-only assumptions. Continuously update and potentially adjust take profit and stop loss levels based on the unfolding market conditions and reaction to reached profit levels. This trading plan capitalizes on the current bullish sentiment pervading through the longer time frames while managing risk efficiently with a responsive stop loss setting. Analyzing the trading data you've provided, here are my conclusions and recommendations for an optimal trading strategy concerning the given cryptocurrency. Indicator overview. Short term, 1M, 5M, 15M strong bullish signals across all key indicators, EMAs, MACD, RSI, pointing upwards, suggesting a potential short-term uptrend. Mid-term, 90M, 1H mixed indications, with the 90M time frame being very bullish, notably an extremely high RSI which signals an overbought condition. Conversely, the 1H data suggests a selling pressure coming into play. Long-term, 1D, 5D, 1WK generally bullish trends dominate the longer time frames, with strong buying signals except for a contradiction on the 5-day data which is somewhat bearish on RSI suggesting an oversold position. However, EMA and MACD are bullish. Derivative forecasts, predominantly suggesting buy across the board except for the 1H which interestingly holds a sell signal. Final recommendation. Given that most indicators and derivatives forecast a buy except for a strong sell signal on the 1-hour chart, the strategy should be cautiously bullish. This discrepancy may suggest market volatility in the coming hours, where initial bullish momentum may meet with selling pressure at higher levels. Entry. Optimal entry point, given the bullish signals on most short and long-term bases and subdued mid-term conditions, entering now seems justified but must be monitored closely for sudden shifts hinted by the 1-hour chart. Exit. Take profit, set the take profit level at +5%. This accounts for the considerable upside potential suggested by longer time frames but respects the possibility of turnover at higher levels encountered previously. Stop loss, set the stop loss level at -2.5%. This maintains a tight control on risk, allowing us to exit the scenario should the market move adversely beyond usual fluctuations, particularly emphasizing the sell signal from 1-hour data. Risk-reward. This recommendation follows the 1:2 risk-to-reward ratio, as specified. This conservative but opportunistic approach aims to capitalize on the prevalent bullish sentiment while guarding against possible short-term pullbacks. Actions. Action to take: buy at the current level. Monitor closely the next few hours, especially the reaction at the 1-hour mark, to reassess and adjust stop loss/take profit if necessary based on how the newly entered position behaves against the speculated selling pressure from the 1-hour time frame. Please ensure timely monitoring and adjustment of the positions to react to market messages effectively. fully utilizing available trading tools and alerts for the best outcomes. Analysis summary. Given the mixed signals from various time frames, our action should factor in both immediate trends from shorter time frames and foundational trends from longer time frames. Here's a breakdown of the critical data points from the provided trading data. Short-term indicators, 1M, 5M, 15M. 1M, bearish with immediate derivative indicators suggesting a downward trend. 5M and 15M, bullish overall, with upward trend signals supported by MACD and RSI levels. Mid-term indicators, 90M, 1H. 90M, strongly bullish signals, very high RSI suggests potential overbought conditions but the direction remains upward. 1H, contrary to the 90M data, this time frame signals a bearish outlook. Long-term indicators, 1D, 5D, 1WK. Clearly bullish, especially with significant buy signals in derivative analysis. The week-long data is strongly positive which might offset the negative signals from shorter spans like 1H. Trading strategy recommendation. Preliminary, hold, given the conflicting signals from the immediate short-term data, 1M, 1H, compared to more sustained bullish signals in 5M, 15M and longer terms, the safest immediate action is holding. However, setting up for a strategic entry on a positive trend could be beneficial. Action, shift to a buy stance. Justification, majority of indicators from multiple time frames suggest upward momentum. The long-term bullish signals, 1D, 5D, 1WK, seem robust enough to consider an entry despite the bearish 1M and 1H signals. Trade parameters. Entry point, given current bullish indicators and the trends, it is advisable to wait for a minor pullback on the shorter-term charts, e.g., the 1H or 90M, to optimize entry. This could provide a more favorable risk-reward setup. Take profit. Set at a level of approximately 3% above the entry point. Given the strong bullish signals in most time frames, This goal respects the potential for continued upward trends while locking in profits against reversals. Stop loss. Set at about 1.5% below the entry point. This limit safeguards against the volatility and unexpected downturns particularly noted in the 1H time frame. Risk management. Maintain a risk-reward ratio of approximately 1:2. Continually reassess the position based on updated market data, especially monitoring shorter-term indicators which may signal trend reversals early. Monitoring. Key to watch: RSI levels across all time frames for signals of overbought/oversold conditions which might indicate potential trend reversals. Updates to strategy: adjust stop loss or take profit levels should the broader market conditions change significantly. This detailed approach should help in capitalizing on the current market conditions while maintaining a tight control on risk. Based on the comprehensive analysis of the trading data provided, it appears that while there is a mixed short-term sentiment, the medium to long-term indicators and derivatives forecast a bullish market trend. Here's a detailed breakdown and final recommendation. Short-term analysis: 1M, 5M, 15M. The 1-minute indicators signal a short-term sell, which mostly reflects immediate, fleeting market reactions. The respective EMAs and MACD divergence suggest a slight bearish trend. Both the 5-minute and 15-minute frames indicate buying signals, reflected by the bullish EMA crossovers, favorable MACD above its signal, and moderate RSI levels, implying upward momentum. Medium-term analysis: 1H, 90M. The 90-minute time frame presents a strong buy signal with a high RSI suggesting overbought conditions. However, continued positive momentum is indicated by the MACD, which is significantly above its signal. The 1-hour indicators are somewhat conflicting with a bearish derivative forecast, although overall EMAs are increasing, pointing towards positive underlying momentum. Long-term analysis: 1D, 5D, 1WK. The daily, 5-day, and weekly signals prominently suggest a bullish trend. Despite the daily RSI indicating mid-range activity, the EMA trends and derivatives indicate strong buying pressure moving forward. The 5-day RSI is low, suggesting potential for price correction upwards or undervalued status. Weekly indicators further reinforce a bullish outlook with significant buy signs indicated by derivatives. Final recommendation: buy. Entry points: the current market displays potential for increased value, especially from a medium to long-term perspective. Entry should be considered at current market prices or slightly lower during short-term pullbacks. Exit: take profit and stop loss. Strategy: take profit, aim for a 5 to 7% increase from the entry price. This is in consideration of the bullish macro indicators which suggest the potential for continued upward movement exceeding typical volatility. Stop loss: set a stop loss at approximately 2.5 to 3.5% below the entry price. This limit respects the 1:2 risk-reward ratio, effectively managing potential downside while allowing room for some short-term market fluctuation. Risk management: maintain the recommended risk-reward ratio of about 1:2. Monitor short-term indicators closely for any signs of sustained reversals that could invalidate the longer-term bullish signals. Continuously reassess the market conditions based on incoming derivative and indicator data to make necessary adjustments to the take profit and stop loss thresholds. Given the primary bullish signals across multiple time frames and particularly strong buy derivatives in the long term, entering a buy position would be strategically sound, aiming to capitalize on potential upward trends while effectively managing risks.